scarcity. And so kind of connecting the dots on utility ends up being persuasive for policymakers. And I think that talking about lightning payments as well is a huge source of utility that uh, is necessary if we're going to have an alternative to the centralized banking system that can be so easily politicized.
Absolutely. I've said for a while, actually, I said that in an article a few years ago, and they got laughed at. Like, and eventually, the Federal Reserve is going to use the Lightning Network to send stuff across to. Everyone bends the knee to the internet, and that's, you're right about the utility stuff there. And then I remember back in the day, there was articles coming out they showed a big picture of a coal miner, and it was like, "Watch out, environment! Here comes the internet." And all these computers are going to burn this power, and it's going to be terrible. And it real negative thinking, and just when we produce more energy, produce more electricity, it brings people out of economic despair. It creates opportunity, and it's proven time and time again. But it may not be politically good at certain times, and people take advantage of it for their own political means. But we've seen this before, and the politicians retire, or they die. Time goes by, the technology is 1,000x better than anything else, and it just continues to march forward here. So, it's a real, a bright future ahead here, and I think we're going to go into a really interesting sweet pocket for a few years here, where you just have this interesting combination between Wall Street, AI, AGI, Bitcoin, Lightning, payments world, all realizing that, hey, this payment layer is way better than anything we've got out there, and we can instantly settle for global trade and anything else. And Hal Finney even talked about, he has posts talking about, banks will settle with Bitcoin behind the scenes,
Yep.
stuff like that. So, it's all kind of coming together in a really unique pocket. I think the next few years are just going to be absolutely, like, one, the price will do what it's going to do, and I think it's probably up and to the right, but it's just going to be very interesting from a technology standpoint of how things are playing out. And it's exciting to be part of.
Now, one area of tremendous controversy, I saw some posts about it on X at the conference, is the issue of privacy tools, which touches on your compliance background, but also
Sure.
on the operating infrastructure perspective, which is that currently it seems like the best Bitcoin privacy tool is CoinJoin, and its Achilles heel is needing a coordinator, even though it's non-custodial. That you need to have somebody operating a pool. How do you think about these tools, and both from a business perspective, but also from a policy perspective of kind of the way forward?
And also a moral perspective,
Yeah.
just there, and so, we've dealt with all because, we have a compliance company that has looked at this stuff, it has competed with chain analysis, and you've got one hand, you have law enforcement needing to do their actual job, and and the agents we met, they're like, we love Bitcoin. It's just, we're just trying to track down somebody who murdered a bunch of people here and with fentanyl, and we're going to find them. Bitcoin, if you use it properly, you can still remain private. It's kind of a push pull between anonymity and privacy. If you want to be, private, the Lightning Network is quite private because you can run private transactions between yourselves, and you can choose to settle on main chain, or you can set, or when it goes to hop, we only know the hop it came from, the hop it's going to. We don't know beyond that, and so it's actually is a really a great network for general payments and stuff like that. But certainly, if it was banks doing bank transfers between themselves, I'd love to see who the bank addresses are. If Bank of America wants to send Morgan Stanley, we want to know, because that's we don't want another 2008. We want some clarity that's out there if we can on certain aspects. So some of this also gets down to having good policymakers, a democratic voice, making sure that the United States and Western countries are the ones leading the charge on these things here. Because when I look at Bitcoin, it's the extension of the internet. It is the trust protocol, and we cannot have Chinese companies with communist ideologies running the next phase of the internet. Even though it will survive and it will continue to go forward. So you've got there's going to be push pull, and push pull can be good. I mean, democracy itself is messy, and you have push pull, and every now and then you get that sweet pocket where things kind of go down the center and work themselves out for a while. But it can be a lot of friction along the way until it does. So, I'm not sure that's a long answer, but there's some of my philosophies around it, where you want to have. But here's the thing: in terms of the analytics, it's an open network, and you can say, well, you can't do that, you can't do this. Well, actually, anybody can. There are no restrictions. That's the whole point of it. You may not agree with it, you may not like it. The network itself can push back on it in terms of technology, and people can adopt it, and that's going to be what it's going to do. That's the natural push pull that's going to happen there. But to go out there and say, well, we're just going to go out there and deny people to do this or regulate it. You can't regulate anything. You know, it's an open network, and open, that's the nature of open architecture. But ultimately, the best stuff will get through. And looking at technology, when I look at technologies over the years, you know, 80% of it, 90% of it can be used for good, and 10% will be used for bad things. And bad people will do bad things no matter what. Even if we didn't stop building the internet or other great tech just because we're worried that bad people will take advantage of it. You know, they would take advantage of a bow and arrow, you know, if that's all there was. And so it's just the nature of history. And so I'm bullish on where it's going to go. I think these issues will work themselves out. They'll continue to be front and center, and they make for good debates. And I think people need to have those debates so they can actually wrestle with what is the morality of it, what is our own morality, and what is privacy versus anonymity. And one of the things we always say is like, you know, what is morality? Morality is how we choose to act when we know that no one is watching. We can get away with it. And so, you know, so this is brings up the questions of, you know, where do you want to go in payments? People need privacy. Bank-to-bank international transfers between institutions that affect our nation. I think we want clarity on that because we saw what happened when they can do things in private. You have a massive financial collapse and endless money printing. So,
I feel like you know, it's all about joining the network rather than trying to fight it. So I've been pushing that the government should actually run a CoinJoin coordinator and take on a liability that I think is really hard for anyone else to take on, and provide a really important privacy service. But it's hugely controversial, as you might imagine.
Yeah, for sure. And they may actually, I think some of them were. I think there were some investigations that were running their own CoinJoins back in the day, and it actually, I don't know if I should say this. Nobody's going to know who it was, but basically it started making money on a lot of it, and they had to shut it down and account for the cash because they can't be making the criminal proceeds at the time. But you know, it's you know, the whole you know, throwing developers in jail because they've written code is, you know, wildly offside. And you've had this, you know, a very strange level of governments coming post-COVID, during COVID, very, you know, out there thinking that we've had political parties that are basically parties of victimhood, and they make everybody a victim and call everybody a victim, but somehow they have the solution if you keep voting them in. And so they're extremely negative, very controlling, wanted to clamp down on every piece of tech that's out there, as we've seen. And we've had an administration change. We have to continue to push against that because we can't have that. So, you know, so it's a constant fight.
I hope they free the samurai gentlemen and hire them to, you know,
that'd be great. Yeah, that would be great. And so they should. I think that thing's got to be reviewed immediately. It's way, in my view, way offside. I don't know the details of other stuff. They're just on the premise of writing software that's on GitHub and then being arrested for how it's used. Is very totalitarian and way against the freedom of speech. So any other particular details I can't comment. I don't know enough about it, but just on that one premise alone. And yeah, this is kind of the nature of change. The beast dies. You know, it wasn't gonna roll over. It but eventually, you know, we saw this stuff for the internet days, and I remember that the government was going to shut it down, and we had senators that were going to tax it. We don't like it. It's used for criminals. If you used a Visa, you took a Visa over the internet and plugged into your terminal, Visa would take your terminal away. Or, you know, there's stories like that. I had a .com in our name, and they're threatening to take we're just an analytics company, and doing like search stuff, like so you could find stuff on the internet. That was it. And they, you know, threatened to take your bank account away because they didn't know what it was. But we're going to build our own internet, and it's going to be all connected between the banks, and it's going to be private. It's going to be awesome. And it'll have blackjack and drinks and all of it. And of course, it failed. And they're like, you know, that TCP/IP thing is, maybe we get on that, right? So, you know, what's old is new again. And
well, the newest now is kind of the concern about criminals using AI, and whether it's for phishing attacks or even more sophisticated kind of cybersecurity attacks. We've seen some controversy about the latest models and how powerful they can be. You know, you're operating on the open internet. How do you think about cybersecurity and what keeps you up at night, but also what lets you sleep soundly?
Two-factor authentication and multi-sig makes me sleep soundly. And having a trusted team of the backgrounds that worked for a long time and all those controls in place there The only thing we worry about too much is certainly on the Lightning network, we have hot wallets are connected to channels, but there's a lot of access controls to get to our systems, and it's not a straight shot. So where software is going to go, we know that Mythos 5.0, they're talking about being able to break into things and be able to see stuff. I think there'll be a period of time here where there may be some issues, but ultimately it's going to become stronger. And we're using it to look at stuff and analyze things and see where we can be stronger as well. So just have to be on top of it and make sure you're closed off. I remember the Heartbleed bug. For those of you who don't know what that was, there was this major bug in a way to access Linux machines. I think it was 2008 or I can't remember the year. And it was port 22, and it was this thing that had been in software around for 20 plus years, and I firewall my port off. I firewall port 22 off, so forget it. I'm just going to have a thing to get in here. I'm going to control the IPs you get it. And I got laughed at. And sure enough, Heartbleed shows up. You could drive a truck through it, and everyone's freaking out in the middle of the night, scrambling to patch the machines, and we could do our network quietly in the morning without panic. So in other words, they're going to find bugs. There's going to be things that'll be out there. There'll be some stuff happening. So we're going to have to be reactive and move quickly on it. But in terms of our network and Lightning, I think it's pretty battle hardened. And the way we've architected it, we sleep well. And we'll just, this is the benefit of having stuff open networks, right?
Yeah. Well, Sean, before we part ways, where can people find you and any kind of last thoughts?
Well, first off, thanks for having me on. It's been a pleasure. So you can find us LQWD, lqwdtech.com. That's our website. And you can find me on X at Sean Anstey. And links to my GitHub and different papers are on there. I've got a paper about the Maple Act, which is for Canadians and stablecoins and Bitcoin. And there's one there called the Nakamoto effect, which is about Metcalfe's law combined with Bitcoin as a trust protocol, and why, because it's a trust protocol and with Metcalfe's, it hyper accelerates beyond just Metcalfe's law. And there's a thing there on the machine economy as well. These are all free papers. You can do whatever you want with them. And we've got open source software for AI and agents as well. So reach out. You can look up our company just if you want to talk or learn more. Happy to share whatever knowledge I have from my journey. I don't know everything, but I have an opinion from what I've gone through, and happy to keep moving forward.
Awesome. Well, thanks for joining us today. Thanks for your time, and look forward to having you back on.
Yeah.
So, yeah, I hope you have a good one, Sean.
Yeah, thanks, Pierre.
Cheers. Bye. To our listeners, thanks for joining us today. Don't forget to subscribe, leave a review, and share it with your friends, family, and coworkers. Have a great week.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for Corporations, is so high quality.
Bitcoin for Corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
All right. Well, good morning, everybody. I want to welcome you to the Bitcoin for Corporations live stream. My name is Jake Fenton. I work here on the client services side at Bitcoin for Corporations. And we've got a really exciting show today. I've got Tim Darrah from Mangrove Technologies and Marty Kendall from mNAV.com. What I'd like to do is real quick, we'll go around the horn. Tim, starting with you, just a quick intro, a little bit about you, your background. There's some, we did a little bit of digging into your history for both of you guys, did a little bit of just to get some more insights. And both of you have some very interesting things that you have done away from Bitcoin, but I feel like, those are going to translate really well to what the platforms that you guys are building now. And so, Tim, I want to start with you. Tell us a little bit about yourself and Mangrove.
Yeah. Thanks, Jake, for having us here. Glad to be here. Timothy Darrah. I'm an Army veteran, former NASA fellow. Spent my career building AI technologies, mostly in the defense and aerospace side of things. So definitely, not what you would expect in financial services or in Bitcoin, but I first discovered Bitcoin several years ago, and recently finally had decided to make a career change with Mangrove and looking to really build a better ecosystem for folks to get into the space and enter the space and grow their wealth and build their wealth and learn how to use Bitcoin, acquire Bitcoin, stack Bitcoin, and not sell it when they need to when they need some cash to make a payment, or when I want to go on a vacation or something like that, and using AI safely in that entire process. So, safe use of AI, responsible use of AI is a big part of what I'm all about. And I'm also a professor at Vanderbilt University, and I'm on the faculty committee that is developing our generative AI master's program. So, love AI, talk about AI, talk about Bitcoin. That's what I'm here for. Yeah.
Awesome. Thanks, Tim. Yeah, Marty, we'll throw it to you.
Yeah, it's going to be fun. I'm looking forward to learning all about you, Tim, and all your trading systems and what you do. Yeah, Marty Kendall. I'm Brisbane, Australia. Hello from the future, Marty McFly. But yeah, mNAV. I suppose we're trying to be the Bitcoin terminal for the Treasury era. We want to supply the data layer and analytics layer. Started out as a couple of myself and Jürgen heckling on Twitter and trying to cut through the noise. And Jürgen said, "I like what you do," and I said, "I like what you do," and we teamed up. And then we bought Owen, who's a AI backend data structure nerd, in, and we started building. And then we came across Capital B, and we built a dashboard for them. So as we started out trying to build dashboards and analytics for ourselves, but Capital B, and then George from BFC called, and our life changed. So we get to be the dashboard provider for all the BFC companies, and that's been a hell of a journey. And with AI, it just unleashes the massive potential of data analytics in the Bitcoin space. So we're loving that.
Yeah, I think probably the obvious common theme here so far is Bitcoin and AI, and obviously, if you get on the internet, everyone's talking about AI ad nauseum. But both of you are like really building the infrastructure and the connection between AI, Bitcoin, and how you guys are building the tools that institutions are using. And so, Tim, want to start with you and dig in a little bit on that, on what Mangrove is building. You guys have, I got to go through and see the platform, and I won't give any spoilers here, but I thought it was really, really cool. Really effective strategies and insights for not just institutions, but retail as well. And so, yeah, I want to hear a little bit about what Mangrove is building, and with your AI background and currently building those tools.
Yeah, totally. Thanks, Jake. So we're using AI in an interesting way, differently than what we're seeing most people today use it, at least that are like coming up with their new AI solutions. I'll start with what we're seeing and then talk about what we're doing, how that's different, and get into now. I think was at, last time I talked about this, we had, just over 1 million strategies. Now we're, well north of 2 million strategies in our database. What we're seeing is folks are either using AI on the research side. Hey, use our AI and we scrub the filings, we scrub the quarterly calls, and we give you great insights. Buy our technology, use our stuff, and there's nothing wrong with that in terms of safety, misuse, risk, other than if that's what you're wanting to use AI for, you're honestly probably just as good using ChatGPT or Gemini or Claude. We use Claude out of the box. A lot of these AI tools that are doing this stuff, they're just a couple of skills and prompts that are sitting on top of the base, Opus 4.8 model, and you really don't need to pay a premium for a lot of those AI products. Just use Claude out of the box. Go find some skills and prompts on GitHub that are free and use them. So we're not doing that. And the second thing is these AI trading bots. When what I mean by that is people are having AI take control of your wallet and going out on the market and executing trades for you based on some kind of research that you have to do. It sort of goes back to this research of find me good buying opportunities and then go buy. And then the bot with your wallet goes out and buys. And that is, very much in the line of sight of misuse and, high risk and not safe. And I won't name names, but I know of a couple of people who who own some trading companies that do that personally. And I was kind of surprised when I found out that they just, give them the keys to the kingdom and say, go trade for me. And what we do instead is we use AI in the strategy design and development and back testing and validation process, all the way up to the point where we're looking at, okay, does this strategy meet our platform's minimum thresholds? So we look at Sharp, Sortino, max drawdown, internal rate of return, and a couple other metrics. We look at those metrics and determine whether or not a strategy can be deployed live on our platform. And that's just one of the sort of guardrails that we have in place. You can't deploy a crap strategy on our platform, at least. You can take the strategy, you can export it, and you can trade it if you want, but I wouldn't advise that. Also, I'm not a financial advisor, so all of this is just made up words. And once a strategy has been validated and vetted to be worthy of being deployed live, then it goes into our deterministic execution engine, and AI is no longer part of the equation. And the reason for that is our trading strategies are built on top of our open source signal library. So we have an open source signal library and an open source SDK, and we have an open source trading agent that you can download and kick in with your Claude code that uses all this, but that our framework again follows what I'm talking about. The agent isn't making its own judgment calls. Our open source signal library, over 200 different technical indicators and chart patterns make up a strategy in some combination, along with various risk settings and configuration settings. And when you're evaluating those rules, really they boil down to a set of true or false rules. Like when you think about if you're deciding whether or not you want to buy something, in your head you are doing checks like, should I do this? Should I do that? If this, if that. These are if-then checks that result in true and false. And you don't need an LLM to evaluate a true or false rule. So that's why we have that clear separation with strategy development and strategy execution. And so with that system, we've built a strategy generation engine, which is now what we're at a conference here now. We've lined up. I had put out some service contracts and some flyers on the table, and I come back. Next thing I know, they're gone, and I've got emails from various institutions, wanting this service, and we're generating over 50,000 strategies a day as part of an additional process of really looking at. It's not about one strategy that's good or not. We have to look at how a strategy performs in certain market regimes. Market dynamics change, and a strategy that was good 3 months ago might not be good now.
Sure.
And a strategy that was not good last year might be killer right now. And that's because you have to look at both the strategy and the market regime that it's in. And so we allow institutions to come in that are looking to generate yield on their held assets, use our strategy engine, find what works and when it works, and that way they can turn things on and turn things off and put their held assets at work, generating yield for them instead of sitting idle while we're continue to. I think the currency debasement. I just heard a statistic yesterday at this conference is like 6% a year. So and when we found a lot of clients like in the $100 million range that are really finding this interesting. So yeah. Anyways, that's me. That's Mangrove. That's what we're doing. I'm happy to dig in further, but yeah, I'll turn it back over to you.
Yeah,
Wow.
I think the space that we're in right now is treasuries and institutions. We've been buying Bitcoin, holding on the balance sheet, and now the question is, how do we make this productive? It's not enough to just hold Bitcoin and sit there, but there's tons of opportunities to generate yield. And Marty, I know, kind of shifting gears over to mNAV, that you are deep into the analytics. You're tracking more stuff than I even understand. You were showing me some things on the mNAV platform. And really, it's all about treasuries being productive with their Bitcoin. Want to hear a little bit about what you guys are building for those treasuries that want to get some yield off Bitcoin.
Yeah, I suppose I'll just give you an overview of the high-level stuff that we do. If I just get rid of that.
Oh, that's cool.
You can see the screen. That's cool. So I suppose Jürgen, who's the CEO of mNAV, put together had a brainwave to say let's look at the Bitcoin holdings across the world, just to give people just watching Bitcoin grow across the world. It's dark. Where are we? I'm somewhere down here in Australia, in Brisbane. Unfortunately, not many Bitcoin companies yet. I'm talking to one, and locate have moved to New Zealand, but then we can head over to the US and see, guess where strategy is, and you can see their massive spire of Bitcoin, and we can see the top Bitcoin holders, and then I suppose then you can jump in to see the strategy dashboard, which is where we started out building for Capital B, and then for BFC to provide a dashboard for all the BFC companies, and then expanded to all the companies, and then Jürgen's particularly fond of the how did Bitcoin grow over time. You can see 2020 it's just starting to come up, and then all of a sudden, as the Bitcoin treasury market picks up, strategies starting to buy until they just keep growing, and the list gets longer and longer and longer, and we're completely fascinated by that growth as it rolls out across the world. Eventually, you'll get to it exploding as the Bitcoin explosion, Bitcoin treasury explosion that we saw a year ago rolled out, and it's growing. And I think, although it's a bit of a bear market over the last 6 to 9 months, I'm sure it will come back as companies can use their capital markets tools to leverage and produce Bitcoin yield, which is growth in Bitcoin per share, which is the most fascinating metric, the most important metric that it underlies everything. So if you're growing more Bitcoin per share by whatever means, then yeah, it's really valuable to potentially have a Bitcoin treasury company as part of your metrics. And then we're also trying to be the terminal back end for the whole market, so to cover all markets. And I suppose as investors, we were going, how do we compare all these different companies? It's absolutely crazy. So we built I suppose, the Bloomberg for the Bitcoin treasury ecosystem. And then the next step is to take all this data that we've analyzed to death with a million different metrics, and we're fascinated by some metrics, and then other people are coming up with others, and then we're enabling that data feed to flow to people's Claude through the MCP API, and potentially Tim's clients can then pick that up and funnel that into their systems. So that's that, and then we've got I suppose we can talk later about the power law and give a bit of hopium and how the long-term power law trajectory. It's just a model. All models are wrong. Some are useful, is my approach. I'm not a religious zealot about the power like some people might be, but I think a lot of fascinating things that indicate Bitcoin has a long-term momentum. Back to you, Jake. I'll stop ranting.
No, that's great.
Both of us could just like go nerd fest forever if you let us go, I'm sure.
Yeah, well, I kind of want to dig into that. So both of you have built these platforms for the institutions, built on deep data metrics, analytics, and insights. And you guys, I mean, you guys are the professionals. You're the ones that are really building the infrastructure for the institutions. So I'd be curious to hear from both of you. What are some of the common themes? You know, Marty, you mentioned like different institutions are coming up with different metrics that they're tracking, different ways to measure success, the important KPIs. What are the things that you guys are seeing from institutions, from high net worth individuals? What are the things that they're looking at to really figure out whether this Bitcoin strategy is even working, and if it makes sense?
I think just continued Bitcoin yield is the most critical thing over time, that company is taking their ability to grow in the capital markets. They're not just a Bitcoin ETF with a really high cost basis that will eat into the capital. So they've got to find a way to keep on growing. And I suppose it was ATM when everything was going up. Everybody was selling their shares into the market, and with Bitcoin going down, leveraged Bitcoin companies, obviously that doesn't work. And then sailors came out with the preferreds, and that is generally going well. But in a massive bear market, it's not very good either. And but I think in the long-term strategy, it's really exciting that it will continue, because as Tim said, the debasement is real, and people are going to move their capital away and finding other things. But at the same time, right now, it's a lot of it's rushed to AI because it's the next big thing. And I'd be interested in, Tim, when do you think the money's coming out of AI and back to Bitcoin, and how long can the parabolic growth continue in Bitcoin investment?
Yeah. Well, so on this last question that you just asked about when there's the money rolling out of AI and back into Bitcoin, one thing to just understand is we've got 3 huge IPOs coming on deck, and so people are wondering why are we in this bear market, and with Bitcoin. There's all this news, there's all this hype. There's a lot of good momentum, and there has been, good momentum on the hill, maybe not so much lately with clarity. But you have a lot of people looking to put capital into these huge IPOs. So that's one thing. And the other thing, when you look at previous cycles, AI is now the hot topic over crypto, over Bitcoin, whereas in previous cycles, it was always Bitcoin, and there wasn't anything else competing for those dollars. So that, I mean, you have those two things at sort of at odds right now. And the other piece, when you kind of like look at some of the on-chain holdings, you have a lot of folks that have, their sort of dollar cost average has been in the like high and mid 70s. And they rode it all the way up and into the 120s, and then folks were starting to exit, and then so you just have this normal churn of Bitcoin exchanging hands. And so these cycles are obviously normal. I want to say like about 2 months ago, I was at a breakfast with Tyler Evans in Nashville, and someone asked, when is a good time to buy Bitcoin? And obviously and rightfully, Tyler said every time's a good time to buy Bitcoin, and that it was like the price speculation came up, and I had just made a comment, and I was probably wasn't the popular guy when I said, I generally agree that it's always a good time to buy, but I think we've got more downside ahead of us. And it turns out that was right. But then back to this question of is when am I getting into Bitcoin? Should I get into Bitcoin or not? People also talk a lot about volatility, and like there's just saying Bitcoin's too volatile. How can it be a store of value? And we look at, comparing Bitcoin to gold, for example, is you can do one comparison. Bitcoin's right now a thrashing baby compared to gold. It's going to have growing pains. It's going to be volatile. But when you look at the volatility over the last, since Bitcoin's inception, or at least going back to 2017. That's kind of like the year I like to go back to. The volatility has continued to shrink over time. And that's one point. And secondly, the volatility is mostly upside volatility, right? Which is like, well, that's what we want. We want the upside volatility. No one talks about, whether that's volatile up or down when they're just saying Bitcoin is too volatile. And so I think people miss that mark, and when they want to talk about Bitcoin, is it stable? Is it not stable? They should just look at the fact that it's pretty reliable when you look at its market cycles, and that okay, if we go up, all right, we know that we're probably going to come back down from this high by 50%. Like just if you know that it's in the charts, it's in the history. It should not surprise anyone. And so you just have to know that and get in when it makes sense for you to get in, and kind of echoing Tyler's words to that individual. I think it's always a good time to buy. Maybe sometimes you buy more, sometimes you buy less.
Do you think there's a point where the AI trade comes down? I suppose that people talk about bubbles, but over the long term, AI is going to eat the world in some fashion, and everything's going to change very quickly. You and I are both on the using it all the time, and there's a whole lot of other little nerds getting very excited about using AI for everything. But from a trading perspective, can it keep on going? When does it slow?
You mean like using AI to trade and what that does to the market?
Oh, no. Sorry, more the flip side of you'd have fascinating insights of when does investing in OpenAI or Anthropic or those sort of AI related trades, when does the Bitcoin goes up parabolic for a little while, but parabolic growth can't continue by definition. Exponential growth has to slow down, otherwise it eats the whole ecosystem. So at some point, we have to, similar to Bitcoin, get a pullback, and then obviously AI is likely to continue for the long term. But yeah, that's an interesting question, trading between AI and Bitcoin.
Yeah, that came up yesterday in conversation, and I didn't have a good answer then, and I don't think I have a good answer now still. It's a good one because when we think of investing in these AI companies, and at the end of the day, value comes from economic development and what people assign to something. And so if AI is, quote unquote, displacing all of these jobs, and you have all these people that they're not working anymore now, so they're not making money, so they're not contributing to the economy, and they're not able to sustain themselves. That puts downward pressure on these valuations. But like, is that a reality? I don't know. I don't. Some people say yes, some people say no. I'm not a wizard or an oracle, and don't pretend to be one. I wish I knew if I did. I would probably be in Patagonia with a Starlink myself. I don't know if that came up when we were live or not, but yeah. So I don't know. I'm trying to think about that a lot.
Tim,
You just holding on for the ride as well. Sorry, Jay.
You're okay. Tim, you said two things that are super interesting to me. One, I want to go back. You were talking about the volatility of Bitcoin. It's platforms like mNAV and Mangrove that are, from my understanding, obviously, want to hear more from you. These platforms are meant to equip people with the tools. One, not to just understand the volatility of Bitcoin and these cycles and as a derivative, the volatility of these treasury companies, but um, you know, how is it, or what is it that you feel Mangrove is building to kind of equip the users and these institutions to understand the volatility that comes with Bitcoin, but also kind of trade against that and manage their risk? I'd be curious to hear a little bit more about how you guys think about that and what's kind of baked into the platform you guys have built.
Yeah, and on the side of what's on the platform right now, this particular piece isn't live yet. We've been slow rolling this out to a few institutions through warm connections, just because there's some things that we want to work out in the process. But really, it goes back to having this corpus of strategies and a data set, and then with this data set, now you can start to build models on top of. And so, for example, one model that we built, and we've published a paper on it, and that paper will come out next month, is we built a model that you can send a strategy through it, and it will tell you, the chances of that strategy being good or not without running a back test or without looking at any market data. And reason why I start off with that to say is there's a lot that we're trying to do right now that isn't on the platform. We're working to get there. It's all available over our API though. So that's really kind of where most of our services are available today. Right now is on API, just like Stripe. They came out API first for developers that were looking to improve the way that they were processing transactions. We're building out APIs for developers that are looking for better ways to improve the ways in which they trade. And on the specific point to your question, we look at things like volatility, like risk, and so a person might have a particular profile that they're trying to fit into a larger portfolio, and that profile needs to fit certain risk parameters, certain volatility parameters, certain return parameters, and obviously the assets Bitcoin. And so our platform makes it very easy to find strategies that fit those particular sleeves. And that's what we're getting a lot of interest in today on.
Yeah, I think, as hindsight's always 2020, and we kind of laugh when we say, like, you shouldn't be surprised. Like, this is what Bitcoin does. We go through bear cycles and bull cycles. And you both are building platforms in the bear market. Bear markets are building. Marty, I'd like to hear a little bit about, some of the metrics and things that you're looking at in terms of how do you think these treasury companies are managing risk, really managing their balance sheet? And then you add in things like digital credit and all these other products that these companies are rolling out. I'm curious to hear a little bit about, what mNAV is tracking and what you guys are looking at.
Yeah, I suppose the amplification loan to value ratio is effectively what's the way they manage that. And Tim mentioned Sortino ratio before, which is sort of volatile growth CAGR divided by volatility. And yeah, you can see over time Bitcoin's volatility is compressing. It feels bad now, but it would have felt even worse if you put your net worth in Bitcoin 10 years ago, because the whipsaw would have been huge. Yeah, but I think the good companies are managing that volatility. You hear Strive talking about, we're designing our strategy for a certain level of drawdown, and if we get to that, we're still going to be fine. And that's the key, is managing that well. Yeah, we've talked to a lot of companies across the world over the last year, and some of them have a strategy, a lot of them don't. And I suppose we're trying to help those companies design a strategy rather than just, we're going to buy all the Bitcoin as soon as we can, and then where does your next Bitcoin buy come from? And if you don't have consistent Bitcoin buying that's accretive, you don't have growth, you don't have a yield, you just go back to an mNAV of 1 with expensive overhead, so probably less than 1. So the key that we encourage everybody to do, whether that's through the ATM or preferreds or whatever comes next, is to drive a long-term strategy, have a plan that continues to achieve Bitcoin yield over the long term, which is just, you saw what SmarterWeb did a year ago. They were going amazingly, and their share price exploded because they were demonstrating growth, Bitcoin per the Bitcoin yield, Bitcoin per share, but they were going exponential, and exponential parabolic growth eventually eats itself and can't continue. So that's where the whole power law paradigm comes in, that we're at mNAV, we're big subscribers to, that we like, and we're building fun tools around that I think I showed you in our last call, Jake, to give you a bit of hopium. You went, oh, cool. So if you want to,
Yeah, I would love to. I would love to take a look at that. Hopium is always great in a bear market, and so if you want to share a little bit, I think that'd be cool.
yeah. I always watch Geo podcasts, and I think he's just so down the rabbit hole, and that he talks at a high level. So stop me. This stuff gets pretty nerdy pretty quickly, but in terms of the power law, but a couple of years ago, you look at the Bitcoin chart and go, I don't understand that. I dabbled in quant trading back in 2006 and had a whole lot of fun. And then my son started reading about Bitcoin, and you look at this chart, yeah, it's really lumpy. But then Geo started talking about the power law, and it's like
My favorite chart.
and it's like, this shit is really cool. And then once you put it on a log scale, it's like, wow, it's just going up and to the right. This is incredible. And then you throw the what Plan C calls quantiles around it, which is just, I think of as the fast lane at the top and the slow lane at the bottom. Anything in the fast lane is eventually going to slow down, and anything in the slow lane is probably going to revert back to normal. And what we've done here that's different, I've spent way too much time looking at different ways to model the power law and optimize the hell out of it. What we ended up doing is looking at the block height rather than just time, but block height versus price, because the first few years were really lumpy. We all think Satoshi was a genius, but maybe his computer wasn't going too fast in the first few years, and there was block 1 on 3rd of January, and then there wasn't another block mined until 9th of January 2009, and then it was all lumpy, and eventually it stabilized. So that really messes with most Bitcoin power law charts. And if you say, well, what if we just plot the block height versus price? It all straightens out and it becomes beautiful. So yeah, we've looks pretty bad now, but if you zoom out, it starts to look a bit better. And then recently we turned that into put a forecast band on it. I said, well, if we knew what Bitcoin was doing back in 2020, or let's zoom into here. And this is the chart that I wanted to see, and we went, oh, okay, I've got Claude now, I can build it. If Bitcoin was at the Q, we're at the second quantile, which just means price in terms of the power law long-term trajectory has only been below this level 2% of the time, which from a risk-adjusted metric, it's amazing. So if you say, well, back then, where did Bitcoin go? Was it the 200 or 300 times it was at this level before? Where did it go in the future? And we can project price bands, and it's interesting. History has rhymed to some degree, and then you can scrub that forward and see where that will go. And then right now, if you zoom in and look forward, we can get we can see going forward the return 90% a year. We could be at 123 in a year from now if it followed that same trajectory of recovering from the slow lane to the median, going back up. So probably a big dump to dump on all at once. But any questions? And I think this chart is fun for me to say, if history repeated, if it went from the quantile it's at before, we project that forward to future quantiles and map that to the different lines projecting forward, where they go.
That's awesome. What time series model if you can say, are you using to generate those projections?
As I said, it's just block height versus price converted back to time, with quantile lines through it.
Nice.
Yeah, it's fun.
Marty, I'm curious, what
Yeah, man.
what charts, metrics, KPIs, the treasury companies that you guys are servicing, I'm curious to know, like, what is it that that they're looking at? Obviously they're looking at BTC yield and
Yeah.
what are some of the other things that they're looking at? Are they
Yeah, I think it's BTC yield, achieving Bitcoin yield over the long term is the number one KPI. Are you growing your Bitcoin holdings per share? How they do that, whether it's the ATM preferreds or converts or the different other metrics. Yeah, and then the amplification, how much leverage can we handle? Because if you have no leverage, you're again just an ETF with expensive overhead costs. So yeah, they're the key focus things, is what gives you that Bitcoin yield, and are you actually achieving it? Right now, it's really hard to achieve, but a lot of companies are setting themselves up and building in the bear well to do that. And yeah, we're talking to Capital B a lot, and they're always thinking of how can we build forward, how can we be prepared. Alexandra is a true believer. He has a massive conviction, and Valentine's just a quant nerd that we learn a lot from every time we chat. He's like, "Can you build this? Can you build this? What about that?" And we got these new things, and make all that happen. So we love learning from those guys to build the new back end tools to display that clearly to investors, and converting that to normal retail is an interesting challenge, and AI helps you do that more clearly. And then similar to Tim, we're saying, well, more people on the institutional level are going to want this data to feed it into their Claude MCPs and drive their quant models. And yeah, it's a fascinating world.
Yeah, we got about 10, 12 minutes left. A couple things I want to hit. I want to rewind a little bit. Tim, you said something earlier. You said value comes from economic development. I want to know from your perspective, what are the developments that you're seeing in Bitcoin, in the treasury space? You mentioned the work that's being done up on the Hill. From your perspective, you've got a unique vantage point. You're building the platform that these institutions, high net worth individuals, that they're going to be utilizing, and they are utilizing to generate more yield off their Bitcoin and to make it productive. What is it that you see? Where's that economic development happening? Outside of I guess like the AI, interaction with Bitcoin.
Yeah, you mean so I could like what are these treasury companies doing to and how are they impacting the economy?
Yeah, and just from your perspective, like what are the other, pieces of the economy that are really driving what's happening and what we're seeing in the price action, but also what we're seeing, with these treasury companies?
Yeah, I mean, I'd say there's a lot of circuitous mixing with Bitcoin mining and AI, obviously, when we start talking about data centers. And when you look at where does Bitcoin mining become profitable and not become profitable, and that's obviously okay, what's the block reward and what's the current price of Bitcoin and what does it cost me to operate this data center? And as Bitcoin price goes down, what happens is you'll see miners start, winding down some of their mining because then it becomes unprofitable to mine Bitcoin. And as less Bitcoin is mined, then the block difficulty changes, and so then it becomes easier to generate Bitcoin off of less mining activity, and you see some of these folks turning to AI data centers now. And you also have some pretty huge data center constructions happening. There's a huge one in Louisiana. It's I mean I can't even it's like several football fields is the size of this build. There's and then you have Tesla's data center outside of Memphis. They're continuing to build there. And so when I think of what is the actual economic development activity right now, well, it's like these data center builds are employing people that are doing real physical work on the real earth. Um, and I think we'll continue to see things like that in the future, and we'll continue to see an interplay between, okay, I'm turning my Bitcoin mining back on because now the price of Bitcoin is back six figures, and I can make a healthy profit. And when Bitcoin's price is what it is right now, oh well, hey, let me flip the switch and start servicing other folks that need these data centers for AI uses. And there's nuances there because the Bitcoin miners operate on ASICs, and you can't run these large language models or other AI types of things on these ASICs. That's where you need GPUs, and so there's some nuance to what I'm saying here. But that's largely the interplay that I'm seeing and kind of the economic activity that I'm seeing come out of that.
Yeah, definitely seeing a lot of Bitcoin miners pivot to AI and selling their Bitcoin collateral, and yeah, maybe they'll switch back eventually when Bitcoin pops a bit more.
Very, very good. Well, I'm curious, where do you think we are 6 months, a year is the big question. I think we've probably answered it here, but curious to just hear you guys say it. Is the 4-year cycle still intact? Is this time different? Is this time not different? Love to hear your thoughts.
I want to hear what Tim thinks is the
Yeah,
quant.
no,
You've got a million quant strategies to predict it.
a couple million, but no, I'm not an oracle. I want to hear what you have to say.
Based on the power law, I don't think it can go down too much further. But we're at the second percentile. We haven't broken the first percentile, and based on that model, it shouldn't go down too much further. And the currency debasement is moving money away from fiat into harder assets like gold and Bitcoin. And like you said, Bitcoin's the baby thrashing around, and yeah, it's going to go up more than it goes down in the longer term. And that power law gives you a good idea of where things are going. So yeah, I'm seeing massive returns over, based on previous history. You're looking at 100% per annum going out a year based on previous history projected forward. So where else can you get 100%? The timing for that is, I keep asking AI myself, and it says, you should know. You can't know that. So unfortunately, no matter how much you pay for a model, it gives you realistic. You can't predict the time. You can't predict the future. All models are wrong. Some are useful, but I think, yeah, the Bitcoin being, it can't get past 21 million, where everything else is just inflated artificially, whether it be money or food or whatever. It just printed garbage, and Bitcoin is the thing that can't inflate. So yeah, excited to be a part of it. And like I said, building in the bear, Jake. We'll keep cracking on and working with you guys to keep building more metrics and more support for the community.
Yeah, I'm interested. Do you have do you offer any of your technologies over API? I would love to have a chat and get some.
Yeah, no, we should talk. That's our next. We realized that fighting for attention on X is a losing battle and not a great investment. But we're looking at how we funnel that into MCPs and APIs and with all our metrics. So yeah, I think getting good quality data is a really big deal in this industry. That you've got the Bloomberg terminal, the Yahoo, but that covers mainstream companies. But to have the Bitcoin per share and the Bitcoin holdings and all the other details preferreds, that's something we've really worked hard to get a database of 130 companies that's up to date and quality and audited, and you can use AI to do that, a lot of work. But yeah, that's our sort of our supplying to people like you in the quant space to use the treasury data is the next frontier.
Very interesting to get a hold of that.
Yeah, we good to meet you, Tim. We'll talk after.
Yeah, likewise.
Awesome. Well,
I want to know how you take 1 million strategies and decide which one you're going to trade today. That'd blow my mind. I got like 5, and that's stressful enough.
Well, I'll show you. I didn't think about doing a live demo on here. I guess I could have done that, but it's simple filtering. You have them in there. You say these are the profiles that I'm looking for, and before you know it, a couple million strategies turns down to 17, and then now you're like, okay, well, let me actually click into these 17 and see what makes sense, and then you maybe decide, all right, these are the 3 that I'm going to use. And but yeah,
that's fascinating. I think that's the power of AI. You've got so many options. Let's bring it down to the things I want to look at, and then I'll choose the handful. Yeah, so it's really interesting.
Exactly.
Well, gentlemen, we are just about at time. I want to let our viewers and listeners know, if you guys want to learn more about these platforms, you can see right over Marty's left shoulder, mnav.com. Go check it out. Lots of great tools. You can see the globe. You can spin it around, watch all the treasury companies, and dig in further. And then mangrove.ai. You can request access there. And look at the platform, see what Tim and the team are building. And gentlemen, really excited to just chat with you today, but really glad you guys are part of the BFC network. And I believe both mNAV and Mangrove will be at the BFC Symposium coming up in New York on Friday, June 26th. And so for anyone out there watching or listening, we'd love to invite you guys to join us for the symposium in New York. That is on June 26th on Friday at the Glass House. We're going to have not just Mangrove and mNAV there, but a lot of other BFC members, Strategy, Metaplanet, Strive, lots of good information, and you can really keep your ear to the ground on what's happening in the treasury space and much like and get some wisdom, just like we got to hear from Tim and Marty. So, gentlemen, a couple minutes left. Tim, I'll throw it to you. Any last thoughts?
Any last thoughts? Learn. Just folks that are, don't know necessarily. They're trying to figure out how to get in or what to do. Just learn. Just follow folks like Jake here at Bitcoin for Corporations. Listen. Just learn more. That's my 2 cents. I'm a lifelong learner, and you need to continue to learn if you want to stay ahead.
Yeah, good thought. Curiosity. It's all about curiosity, being fascinated by data and what you can do, and AI just gives you a whole new. It's not a crutch. It just extends your ability to learn and learn rapidly and take the ideas and play and continue to develop. So it's really exciting times in every space that human knowledge can grow and we can build things together really quickly and partner with APIs and MCPs and so it's really exciting times. I'm having a blast and thanks for the opportunity again, Jake, to be a part of this forum and partner with you guys.
All right. Well, gentlemen, appreciate your time. Looking forward to seeing both your teams in New York, and hope you guys have a great rest of the day.
Absolutely. It's a pleasure, Jake. Thanks so much. Marty, look forward to connecting.
Guys.
All right. See ya.
Good to meet you, Tim. See you, mate. Bye.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for Corporations, is so high quality.
Bitcoin for Corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
All right, one last fun question. Should we freeze Satoshi's coins or not?
Ooh.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, and today we're joined by Tyler Evans from Nakamoto. Naka, welcome, Tyler.
Great to be here with you, Pierre.
So we're actually here in Las Vegas for the Strategy World Conference, combining the best business intelligence software with the best monetary protocol, Bitcoin.
That's right. Great combo.
Yeah, absolutely, especially in this day of AI. So we got a ton of material to cover today. Your background, Nakamoto, UTXO management, BTC Inc., and of course, kind of what the overall Bitcoin and macro picture is. So try to get through all that material.
Let's get into it.
Yeah, let's start with where Tyler comes from and came to Bitcoin and kind of how your evolution has been in the industry. You've accomplished a lot.
So, I'm a Bitcoiner class of 2013. And I like to joke that if Bitcoin doesn't work out, I'm probably unemployable at this point.
Yeah.
I've spent my entire career working on Bitcoin. I was born and raised in small town Idaho, little ways north of here, but got the Bitcoin bug really in college when I was doing my undergrad degree. I was studying chemical engineering at the time. Thought I was going to go work in oil and gas. But it turns out one of my buddies at the time, David Bailey, now my business partner of the last 13, 14 years, had other plans. So we were studying. We were friends in college, and we were actually running a nonprofit together, working on microfinance in the U.S. And that's kind of really what opened my eyes to how broken our financial system is and how underserved even much of America, in the wealthiest country in the world, is in terms of financial services. And so that, plus my kind of interest in emerging technology, is really what laid the fertile groundwork for me to get interested into Bitcoin. And so out of college, we started BTC Media together, and have been running that, really focused on the Bitcoin space since day one. So it's been a wild ride. You've been there for all of those same eons in Bitcoin and how much it's changed over the past decade. But really grateful to be here today and still to be passionate about Bitcoin.
Yeah, well, I'm grateful for everything that you and David Bailey have done as well in terms of just getting the Bitcoin education out there, because Bitcoin Magazine, I mean, it's a one-of-a-kind operation and publication. And then, of course, the Bitcoin Conference. I remember going to the first one in San Francisco.
Yep.
And
long time ago, I think 2017.
Yeah. Bringing together Bitcoiners in person, I think, has been really important, because obviously, if you're just online, that's great. But at the end of the day, it's all about humans, right? We're seeing that increasingly with AI, that it's all about
Totally.
humans. So it's good to meet in person. Now, when you started BTC Media, what was the vision? Was it a print magazine, a website, or was there kind of the overarching, what got you all up in the morning and excited to keep building?
It was really, what got us up was just our love and passion for Bitcoin.
Yeah.
And we were, fresh new grads, no work, no real world experience. And so we were just kind of racking our brains for, what could we do in Bitcoin? We're neither of us were, developers by trade. And so we thought the obvious thing, what we were already spending our nights and weekends doing was telling people about Bitcoin and answering their questions about what is mining and what makes Bitcoin valuable and why is it secure. And so we thought, hey, we should just take this, and we actually started with a print magazine called Why Bitcoin. That's no longer in print. This was actually pre-Bitcoin magazine days, but it was like an educational guide. And we also were very proud of the fact that we made a print physical magazine for a digital ephemeral currency.
Is there a secondary market
make it real?
for those must be valuable now.
We still have some in our warehouse.
Wow.
Yeah, I've seen some trade hands on eBay, but those are the OG editions of Why Bitcoin. This was similar time to with Vitalik and Mihai were launching Bitcoin Magazine. And so we were actually able to buy that from Vitalik in January 2015 is when we took over the reins at Bitcoin Magazine, which had a much more storied kind of technical history and much better brand recognition. So we kind of consolidated all our efforts around Bitcoin Magazine, not just in the print magazine, which I'm really proud we keep publishing, but really leaning into digital and social media and podcasts and research and all the ways we can educate cohort of people who are interested in Bitcoin but kind of didn't know where to get started at the time.
So I didn't know that y'all acquired Bitcoin Magazine from Vitalik and Mihai. And well, of course, you know Vitalik. He must have been busy launching Ethereum magazine.
But not just the magazine.
Yeah,
He was spending
yeah.
a lot of time building Ethereum. So
Yeah.
it was a good time for him to hand off Bitcoin Magazine.
Right, that makes sense. And I remember like reading material that Vitalik wrote in Bitcoin Magazine back in the day. And so it's fascinating, almost archaeology at this point. It feels like it's hundreds of years ago, but it's only a short 10 years ago.
And if you go and read those old episodes, I mean, you can see the threads of, you know, what became Ethereum, what became stable coins, what became privacy coins, like all these ideas were floating around in the early Bitcoin ethos, but no one knew kind of how the industry was going to evolve. And so there's some fascinating pieces of history in there in the archives.
Yeah, absolutely. And so after launching that, what's the timeline in terms of you launching UTXO management, and kind of what were some of the other activities that y'all were like engaged in?
So yeah, we really focused on building out the media company for the first 5 or 6 years. And you know, media and publishing was one thing. I think we really kind of hit our stride when we launched the Bitcoin conference series that you mentioned, and found how valuable that in-person connection was, and to really create a shelling point for the industry, which was starting to actually become an industry with companies and professionals and business getting done. And so as we kind of grew that conference series, and we had a bunch of investors coming and asking for advice on even how to access Bitcoin or how to buy Bitcoin in their 401k or their trust, or how to get exposure to this industry. We launched UTXO management in 2019. So coming up on almost 7 years ago, really as a way to kind of take that investor institutional interest, mostly from our family and friends at the time, but from a growing investor base as Bitcoin kind of became more and more mainstream, and to help them get access to you know, exposure in the asset class, and critically try to keep them away from the minefields and the Mt. Goxes and the FTXs, to help them navigate kind of this changing landscape in Bitcoin.
Yeah, there's been a lot of pitfalls. Rewinding on the conference, what do you attribute the success of the conference to, where now there's thousands of Bitcoiners from around the world that come to these? As a speaker, I've always thought that they're just perfectly executed. Like, y'all make it look easy, right?
Thank you.
It's a polished production, and things unfold without a hitch. You know, is that the team? Is that like the leadership? How do you think that the conference has been so successful?
Well, I gotta give a ton of credit to our team, which has grown significantly. Like when we first got into events, we had no idea what we were doing. I think our very first one was at a college campus in St. Louis, Missouri, and for about 100 people. And there was a lot of growing pains. I worked the door at the first conference, but as we you know, I think the most critical thing for a conference is really kind of like the energy and the community you cultivate. And really, as long as you bring together the right people who are there for the right reasons and passionate about it, it's like people have a lot of grace for all the details and the concessions lines and the registration process. And so really being able to capture like that ethos of the community, where people find connection, where they can meet these speakers, podcasters, business leaders that they've, you know, heard online, in person. And that just has compounded year over year over year over year. And so, you know, I think David and our team really do a good job of trying to up the ante every year and shoot bigger in terms of what speakers, who can we get from the you know, the leadership of the United States, or from the SEC, or from different sovereign wealth funds, trying to up the ante and keep it fresh every single time. And that's just been an amazing business and such a cool experience to be a part of.
Yeah, and bringing in artwork and culture too has been something I've noticed at a lot of the conferences. And then the open source, I think y'all have done a good job of getting the open source community to also like feel like they fit into this conference. And of course, Donald Trump speaking there before the election, I think that was a seismic shift from the perspective of, okay, where are the fault lines and where are the political lines being drawn? I remember there was lots of rumors about Kamala potentially speaking that didn't pan out. And looking back on it, of course, Trump won the election, and in no small part, I think, due to the energy of Bitcoiners being excited about having a pro-Bitcoin president, and actually, I think that he's delivered on the promises. Now, of course, there's still more work to be done. There will always be more work to be done. But it is a complete sea change in the regulatory environment for Bitcoin that David Bailey and the Bitcoin conference just played such a key role in. So that has been very impressive to see.
Thank you. And that's really a point we try to make to policymakers, like with the Bitcoin Policy Institute in DC that we're involved with. But there's a very strong single issue voter base in the Bitcoin community that really only cares about one thing first and foremost. And so where there's rabid pro-Bitcoin voter block, there's not the same outside of maybe Elizabeth Warren on the anti-Bitcoin side. And so if you're a politician and you're kind of neutral on the issue, there's a huge opportunity for you to get educated and understand, what appeals to the Bitcoin community and to find a position that aligns with them. And there's only almost upside today for you to do that as a candidate running for office.
Yeah. Okay, so now I want to pivot back to UTXO management, and we had this latest announcement that UTXO management and BTC Media are joining under the Nakamoto umbrella, which apparently some people were surprised about, but it's something that had been discussed from day zero. I remember that kind of being an obvious alignment. And so what's the vision for kind of building a Bitcoin native company in the public markets?
So yeah, with Nakamoto, we finally finished this large M&A transaction to really consolidate the businesses we've founded and grown over the past decade into Nakamoto, now a publicly listed company on the NASDAQ. And really our vision is to kind of continue the work we've been doing for the last decade, but with the support of the public capital markets, and also to chart kind of a new course or a new vision for what a Bitcoin treasury company, a Bitcoin balance sheet company could look like in Bitcoin markets. And we have a ton of respect to Strategy and Michael Saylor and Metaplanet, all the companies that have created their own vision of what they could look like. What we're really trying to do is blend both the balance sheet kind of investment component with true Bitcoin native operating businesses. And we see there being so many synergies and opportunities that are created not just by buying Bitcoin and raising capital to buy Bitcoin, but also to be able to deploy that capital into businesses that are aligned within the Bitcoin ecosystem, that all have their own growth trajectory and financial potential. And so, UTXO and BTC Inc. are the obvious candidates, being a part of what we've been involved in the past decade. But I think our vision even goes beyond that, and there's other sectors, other types of financial services, other types of opportunities we see to serve the Bitcoin community that we could do even more effectively at larger scale through a publicly listed company like Nakamoto.
So the idea is that we all think Bitcoin's value is going to increase. There are businesses that are operating businesses that, like with the conference, as Bitcoin's value increases, the conference grows. I mean, that's empirically what we've observed. And And so the vision is that on top of the Bitcoin balance sheet, you've got these operating businesses that are really correlated with Bitcoin.
That we think give us, effectively even more leverage on
Yeah.
the growth of Bitcoin and hyper Bitcoinization.
Yeah.
And I think, it's great if you're running a construction company and you want to put all your net income into Bitcoin and grow it that way. But it's a whole another paradigm if you're running businesses that scale proportionally with the growth of Bitcoin. And so like a custodian or a prime broker or a media company or a hedge fund, things that, if Bitcoin 10x's from here in price, not only does the value of your balance sheet go up, but the market for your operating businesses also grows 10x, or the fee income you can generate from your custody business, et cetera, grows proportionally with the price of Bitcoin. And so we think that's what will give us kind of the most leverage on the growth of this industry, and creates a ton of synergies within those different operating companies.
Now, obviously, it seems like we're in a bear market now. I think we're down like 50% from the all-time high.
Pretty brutal.
I think it's like 140 days since the all-time high, which feels like an eternity in Bitcoin.
It really does.
Sentiment is in the gutter. People, are saying Bitcoin's dead again. I don't really see it that way, but everyone's entitled to their opinion. Obviously, this has impacted strategy. Their mNAV compressed from, I think it was at 3.5 to almost 1 at this point. And then we had a series of Bitcoin treasury companies launch last year. Obviously, conditions have been challenging for all of them, including Nakamoto. Kind of what are some of your takeaways from this evolution, and positioning yourselves to survive the bear market, and of course to thrive in the coming bull market?
Yeah, I mean, it's not to sugarcoat it, it's been a very painful kind of 6 months for the entire industry, and we've seen that compression in mNAVs and investor sentiment really on a global basis for companies that were growing what felt like limitlessly at the time, trading below their book value or below their mNAV. While it's painful, I don't think it's something that should have been unexpected. And I really think kind of what this new class of Bitcoin treasuries is going through is exactly the same thing that Saylor and Strategy went through in the previous bear market, post FTX. And they traded below book value for a long time. They had convertible debt kind of hanging over their head. I'm sure those were some painful years, but ultimately, Strategy emerged much stronger out of that bear market. I think they learned a lot of valuable lessons in terms of their cap structure, the convertible bonds that they were issuing, how to keep growing accretively even in a bear market, which Saylor's really delivering on with the pref issuance today. And so that kind of forging in the fire is really what set the stage for their growth over the past 2 years. It's the newest class of Bitcoin companies going through the exact same thing right now. I do think we'll see some dispersion in the industry, and we've already seen a number of companies that put Bitcoin on their balance sheet start to reverse their position or sell down some of their Bitcoin holdings or de-lever themselves. Maybe some loss of confidence from investors that's bleeding over into the actual operators. But I think the companies that emerge out of this, the well-positioned ones, will be even better off. And I think we'll lose some along the way, and we'll have some M&A and some consolidation, and those are also healthy for the industry as well.
Yeah, now, I think people are looking at the past 6 months, and they're not really thinking about where the industry is today. And when we look at the capital markets, there's a lot of things going on outside of Bitcoin right now. But where do you attribute kind of this fall in confidence and sentiment from? Is it the 4-year cycle, or is it something other factors that are really driving this?
Yeah, it's hard for me to put my finger on one thing. It really feels like a confluence of a lot of related but independent factors, kind of on a macro scale, that are affecting Bitcoin right now. One, obviously the 4-year cycle. As much as we wanted to hope that it was done as of last year, with Bitcoin being down year to date last year. It feels like we're repeating it once again. So that caused a lot of probably justifiable selling from long-term Bitcoin holders, some profit taking from people that have kind of had a 3 or 4 year time window on their Bitcoin investment, who have been harvesting those gains, coupled with kind of tight monetary conditions in the U.S., particularly in the wake of the recent 2 government shutdowns and spiking bond yields in Japan, and kind of some unwind of the carry trade. Also, this rotation we've seen into real gold and silver, into precious metals, and all of the macro or geopolitical tension, including tariffs, which has been a big factor, I think, in driving the headlines around Bitcoin. And so it's this storm of all these factors kind of weighing on Bitcoin right now, as well as this narrative around quantum risk to Bitcoin, I think turning off some investors, with no real catalyst for growth in the short term. And so something that we'll have to work through as an industry. But I'd be curious, how do you see it?
Yeah, I think that we're going through not just a generational CapEx cycle with AI, but really like a civilizational one. That I think at no point in human history have we, or are we going to invest so much that we're going to put into not just AI data centers, right? All of the semiconductor supply chains, whether it's memory, compute, all of that, and the energy supply chains, whether it's transformers or all the way to nuclear power plants.
The turbine blades.
Yeah. You can't think of something that's more capital intensive than this whole AI sector. And so that means trillions of dollars. And if we think about Bitcoin as absorbing excess liquidity, my thesis is that right now, because of this historic CapEx cycle, there's just no excess liquidity. It's absorbing all of that capital on top of, you mentioned, high interest rates relative to where we were at 0%. Now we're at 4.5%. That sucks the oxygen out of the room. And then there's all this uncertainty about, for how long does it suck the oxygen out of the room?
Right.
Is it a bubble or is it not? I'm in the camp of like, it might be a bubble in the future, but right now it's not. And we're seeing, I'm back in Texas, hundreds of billions of dollars being poured into projects that...
Incredible scale.
Yeah. So, it creates a headwind for Bitcoin. But as you know, it's like you got to have time in the market. So we don't know when Bitcoin's going to hockey stick. So you got, like, I remember this metric of, if you miss this many days of Bitcoin returns, like you're at a loss. And if you have those days, then you're like 10x, right? So
and it's like 14 days a year or something.
Yeah. So that's where I caution people of, like, if you're going to chase short-term trends, you better know what you're doing, because otherwise you're going to be caught off sides. But on kind of the micro level, I think the other challenge that we've seen is the scalability of financing for Bitcoin treasury companies. So we've seen Sailor launch, Stretch, that's had tremendous growth, but they're still trying to find ways to increase distribution, increase, kind of the sales of their preferreds. I think that they'd like to achieve a higher level of amplification. And so, from a Nakamoto perspective, obviously there's been changes in how y'all finance your balance sheet. And so how do you see that evolving from a capital structure perspective for Nakamoto and for the wider sector?
Well, you've got this market environment today where effectively, and we saw this happening even towards the end of last year, but the marginal equity investor for any Bitcoin treasury is pretty much tapped out. Yeah. We've got no one being able to run an ATM program today, and you've got kind of some case studies, including probably Nakamoto, of how raising these massive pipe equity rounds attracts not necessarily the most aligned long-term investors, but a lot of kind of short-term focused flippers, essentially. And so I think the industry's learned a lot of lessons from them, from there. We've seen some interesting raises done by companies like Metaplanet and Smarter Web Company over the past couple months, even in this tough environment, where they're selling optionality, they're selling warrants, they're selling some sort of unit deal to be able to keep raising equity. And I think those are interesting, even though they kind of pull forward future equity sales. The big one where strategy and really Strive and Metaplanet are leading the way is on these preferred offerings, which seem like they're it's maybe too early to call it, but are starting to have great product market fit with the variable interest rates specifically, that are kind of finding that market clearing rate to keep some stability in the pref prices. So that's something we're watching really closely at Nakamoto, and think about how that's the benefit of being a publicly listed company. So you have so many more capital markets options available in terms of these financing structures, and we do want to grow our balance sheet here. So it's just a matter of kind of adapting that raise and that offering to what the market will bear right now, and what creates the most long-term value for existing shareholders.
And so then when you're thinking on the asset side, how do you evaluate opportunities of investing in operating businesses versus investing in Bitcoin, or saving in Bitcoin, as we'd like to put it? Mm-hmm. Kind of that trade-off. Where would you set the hurdle rate, for example? Like what are the growth rates that you would expect from operating businesses?
Well, I think for any Bitcoin company, like the hurdle rate is obviously Bitcoin, but
is that 30% CAGR? Is that 20%, 50%?
Yeah, maybe 25 to 30% CAGR. That math is skewed a little bit, though, if you can access the pref markets or the convertible bond markets, where it brings down your cost of capital. Right. And so if you're issuing a pref at 11% and your operating business can earn 15% with great growth potential, then that, I think becomes investment that you can justify, even though maybe it doesn't match the CAGR of Bitcoin, but in your total financing stack, especially if it lets you accumulate more Bitcoin by kind of arbing your own cost of capital versus your return on equity there. That opens up a whole nother set of investment opportunities to look at.
Yeah. And so, how do you think about UTXO management's growth going forward? I mean, I think on the conference and Bitcoin magazine side, we have public visibility because these are public events, public mm-hmm. publications. But on the UTXO management side, how do you think about providing visibility to public markets about the growth potential there?
We started about a year ago at UTXO actually publishing our returns and our AUM data on a monthly basis. So we would like to give the market more transparency there. What I'm really excited about with UTXO, not just kind of our flagship hedge fund, which is called 210K Capital, which has had an amazing couple of years despite the headwinds in Bitcoin.
For those who don't know, 210K, give them the DL.
The name comes from it stands for 210,000, which is the number of Bitcoin blocks in each 4-year halving cycle. So it's a reference to the 4-year clock that Bitcoin runs on, 210K.
Yeah, perfect. I don't know how Satoshi made the math work to where then it was 21 million Bitcoin. Maybe there's a property there I'm not familiar with.
Probably.
The right shift binary operator in C++. I'll have to go nerd out on that. So do you envision launching other funds and kind of growing kind of a pod shop?
We are really excited to launch some new products this year at UTXO. So our flagship hedge fund is kind of the main product today, and one that gives accredited or qualified investors diversified exposure to the Bitcoin ecosystem. But we see all these needs, and really what I think the opportunity is for us now as a part of Nakamoto, as part of a publicly traded company, we can have visibility into all the different aspects of the balance sheet that a publicly listed Bitcoin company needs in terms of lending, in terms of cash management, in terms of Bitcoin yield, in terms of custody setups. And so as a part of this M&A transaction, we really see the opportunity to launch a handful of new products this year that serve Nakamoto's kind of interests first and foremost, where we can deploy our own balance sheet capital into those products, but that serve a need in the entire market that will be scalable, that hopefully many other Bitcoin companies or Bitcoin investors can benefit from.
Pivoting to the conference side, we've heard people say things like, we used to have internet conferences, now we don't have internet conferences, and so eventually we won't have Bitcoin conferences anymore because everyone will be using Bitcoin and it'll be like a non-thing. But there actually are still internet conferences. They're just not called that. You've got like Salesforce has their conference, AWS has their conference, and these are huge events.
CES,
CES,
yeah. Massive conference.
Yeah. So do you see kind of a geographic proliferation of events, or kind of coming out with different kinds of events beyond just the big flagship conferences?
So we really scaled geographically to date. So last year we did 4 Bitcoin conferences all around the world: Hong Kong, Abu Dhabi, Amsterdam, and Las Vegas. And we'll be back in all 4 countries this year. So geographically is a whole nother opportunity, and I got to tell you, we have inbound interest from so many more countries of having their own Bitcoin conference all around the world. And so there's a whole market to scale through there. I think our main constraint is just the scalability, and especially the logistics of running multi-thousand person events in new countries and new venues. We got to scale up our team to address that. I do think there's also an opportunity, one that's served more by the industry today, but there's so much specialization now in Bitcoin. The landscape and the business ecosystem has grown so much where there is enough content, enough to talk about to have a dedicated conference around mining, around Lightning, around AI, around RIAs and investors, around the developer community, around technical summits. And so there's so much opportunity from where I can see today that would all have a distinct draw, but it's just a matter of how many events we can execute on and how we can do that without kind of diluting the Schelling point that's created by having a flagship event that serves all of those communities, that brings people from all over the world once a year to get together.
What's motivating these countries to come to you and say, hey, we want to have you come do a conference here? Is it they want Bitcoin tourists, or they want to educate their local population? What's kind of their thought process?
Some is kind of bottom up, where there's a strong Bitcoin community,
Right.
or there's a company in some market that really wants to kind of plant their flag and co-host a conference with us. Some is also top down, especially as we've launched our Middle East conference, or our MENA conference in the GCC region. And there it's much more kind of culture and tourism driven, where some of these countries see Bitcoin as a strategic asset or a part of their digital transformation journey, and they already have initiatives to attract startups, to attract capital, and having a Bitcoin conference serves all of those purposes. Bring tourism, attract startups, attract developers, help them grow a technical community or a financial community locally.
It's just fascinating to see kind of the dispersion on Bitcoin's brand value, where there's people who think, oh, Bitcoin, they associate it with criminality and negative things. And then other people associate it with like the future and wealth and success. And so it's almost, do you think that's geographic as well?
Maybe a little bit, yeah. I think a lot of it, and it's really interesting to host a conference. We do our Europe conference in the fall, and then the Middle East is right after it in December, and see kind of the cultural dichotomy between, at a very macro level, between the cultures that are really focused on the future and investing and growth and digital transformation, and those that are very hesitant to embrace new technology or very regulatory focused, that like things done the way they've always been done. And to get a front row seat to that, traveling around the world with the Bitcoin conference.
Yeah. So, okay, so now pivoting kind of big picture to the macro environment. I think that, we touched on it earlier, but these headwinds, do you see a reversal coming in the near term, or do you think that we're just going to be chopping sideways for the foreseeable future?
I think we probably have some chopping to go to kind of work through this overhang on the industry, work through some of this unwinds consolidation, even though we don't have the bankruptcies and the lawsuits that we did in the last bear market. So that gives me hope that the restructuring efforts will be much faster and cleaner this time around. There are a lot of kind of macro catalysts on the horizon, really looking ahead when you start to look at monetary policy, especially with a new Fed chair coming in May, and obviously the midterms in the U.S. and some of the pressure we see building kind of in the U.S. financial system with these elevated rates that we've had for a prolonged period of time. And so I think some easing of liquidity will be a great catalyst, and I think that's kind of a mandate throughout the U.S. administration. Keep interest rates low, keep car payments low, revive the housing market, bring down mortgage rates, and that Bitcoin stands to benefit from that growth in liquidity as well.
And we've also noticed a lot of almost, we could describe them as small changes, but I think they're going to have a big impact, like using Bitcoin as collateral at CME for futures. We're seeing the growth of options markets around IBIT and, of course, around the Bitcoin treasury companies. Do you foresee, though, them going even further with the strategic Bitcoin reserve? I think that's been kind of, it feels like it's been on the back burner relative to stable coins and clarity. Do you think Bitcoin's going to get its day to shine after they get through the market structure?
I wish I had a crystal ball. I wish I knew. From what I'm hearing, the administration is very focused on those pieces right now. Some of the regulatory structure. We've seen a ton of very meaningful progress from the SEC, from the CFTC, kind of removing all those barriers for financial services, for banks to interact with Bitcoin. And so once we get through all of that, can we get attention back on Bitcoin as a strategic asset for the United States? We'll see, but I certainly hope so.
It feels like today, actually, it would be not a good time because we already see Elizabeth Warren saying it would be a bailout for Bitcoin if they bought the dip, which I'm like, well, it would be a bailout for the government because then they would profit off the Bitcoin. But the other piece to it is that on the banking side, there's kind of this archaic capital requirements process. Some of it seems like it's outsourced to Basel, Switzerland, which seems un-American. So
it really does.
Yeah, right. I think that's also a good positive catalyst coming up. That there's going to be some negotiations that are going to have to happen to bring Bitcoin not into like a favorable position, but just aligned with what's the price, right? Like if you can originate a loan at a 90% LTV for real estate, maybe you can do a 20% LTV for Bitcoin, and it's that would unlock a lot of credit into Bitcoin. We've heard Saylor talk about kind of the opportunity there.
Totally.
And so do you foresee the Bitcoin treasury companies becoming banks, or is that kind of overblown as a narrative?
I think it's early, but I don't think that's an unrealistic line of thinking, especially in a world which Bitcoin is millions of dollars a coin, that each of these Bitcoin treasury companies in their own market is going to serve an important, you could almost say, cornerstone piece of the financial ecosystem that can be built around Bitcoin as a quasi-central bank or banking institution that is that nation state's reserve of Bitcoin, of digital gold. Especially in an era of fully global commerce with AI agents transacting and machine-to-machine payments happening all around the world.
Two thoughts. One, it certainly does seem like a central bank when they're adjusting interest rates or dividend rates on the preferreds. Two, on the point about AI and agents, obviously people bring up stablecoins in this context, and it seems like because of the regulatory friendliness in the US, there's a bit of an identity crisis in the what we'll call the crypto industry, to distinguish it from the Bitcoin industry, of Circle's launching its own blockchain, Tether's launching its own blockchain. It seems like the native tokens, it raises the question of, are they going to be able to accrue value if the big success stories decide to not use them and to build their own platform, not leak value? And on top of that, if the regulators are friendly, it kind of removes the necessity to have a neutral, decentralized rail.
Permissionless. Yeah.
But do you think that ends up working against Bitcoin? I've heard people say, oh, well, we don't need Bitcoin anymore. We got stablecoins.
I do think that narrative is very prevalent today, and I don't want to take away from kind of the product market fit that stablecoins have.
Sure.
They've really found a need to serve, but I think especially in a global context, you look at just the censorship resistant and the democratized principles of the leading stablecoins out there. And just as we saw the US weaponize SWIFT and the financial system against Russia and for sanctions and for tariffs, how long until we see the US weaponize its leading stablecoins to cut off activities that it doesn't like in parts of the world or that it thinks are not serving its national interests? And when it's a phone call or a flip of a switch to debank countries or to freeze stablecoin balances, like we've just recreated the fiat system, but on crypto rails. And so maybe we need to see that play out a few more times for people to really understand the value proposition of Bitcoin. But that's the thing, that Bitcoin is really the only coin that can claim today, that credible neutrality and that censorship resistance for truly global commerce.
And then the scarcity too, right? Which is that a US dollar stablecoin is getting debased, just like every other dollar out there.
And the trust, the counterparty risk. You don't have to read through an audit or an attestation report for a US listed company to understand what your dollar's backed by. Your node can verify your Bitcoin at any time on your own hardware, anywhere in the world.
Seems especially important for the agents, right? I think they're going to evolve to not trust humans, and so they'll gravitate towards Bitcoin.
Trust the code, yeah.
Yeah, exactly. And also, on the quantum question that we brought up earlier, I have this theory that it's not going to be a human that solves the quantum issue. It's going to be ChatGPT version 10 or something that will just one shot. I'll get grief for that from the mathematicians out there who are saying it's impossible or something. But
probably
that seems like the direction things are going in, and then it'll look overblown in hindsight.
I agree. I don't know if I agree that it'll necessarily be an AI agent that solves it. Although that's a great theory. But Yeah, from I keep hearing about quantum, and I know it's on the forefront of a lot of kind of traditional investors' minds, but being close to the industry, it's not something I'm concerned about at all. I think there's already meaningful work started on post-quantum approaches, and I think we still have a while until it really becomes an issue. And it's not just an issue for Bitcoin. That's the thing. It's an issue for all internet-connected systems, the entire web of trust that all of global commerce runs on. And I think Bitcoin is actually positioned to probably move faster and more effectively when a change becomes necessary.
All right, one last fun question. Should we freeze Satoshi's coins or not?
It's
a controversial one.
Yeah, it depends what solution your AI agent can come up for the quantum solution.
There might be some cryptographic magic they can do to thread the needle, but yeah, well, we'll see. Anything else we haven't touched on in our conversation here you wanted to bring up?
I'd be curious to just hear your outlook on Bitcoin treasury companies and what you think the most critical things to succeed in this tough market environment.
Yeah, great question. So I think that it's all about time preference, time horizon, right? So when I think about Bitcoin and Bitcoin treasury companies, it's one giant time arbitrage of can you hold for many years through a lot of pain, and that is the test. Because if it was easy, everybody would do it, and there would be any returns, right? And then people say, oh, you know, these Bitcoiners got lucky. As you know, starting in 2013, no such thing as luck. There's been massive 80% drawdowns, and so that is the key, is just having thick skin to just be able to take those arrows and stick to the conviction of the thesis, which, you know, on the Bitcoin side, to me, the fundamentals are about open source and software engineering. And then on the Bitcoin treasury company side, the fundamentals are about financial engineering. And so that's where, you know, I think that it's really important if investors want to be involved in Bitcoin treasury companies, that they get a really clear-eyed view of what the model is and that they run the numbers on that, right? That they've got a valuation spreadsheet or even a vibe-coded, you know, app or something that is tied to those SEC disclosures, those financials. Because ultimately, that's like don't trust, verify. I think gets thrown around a lot, but I don't see a lot of people verifying the SEC statements to like understand what these companies are doing and be able to project out into the future what the opportunity is. And so to me, the financial engineering, as we mentioned earlier, is, you know, you've got financing in dollar terms at a low rate. It's not going to, you know, get you liquidated in a bear market.
Yep.
And then that'll help you survive and be able to have amplified returns in the bull market. But yeah, people have to, I think there's, the process of due diligence is very different between buying Bitcoin and buying a Bitcoin treasury company.
Very different.
And so there maybe just needs to be more education. That's why I'm excited about what Bitcoin for Corporations is working on. And because Bitcoin treasury companies, they're going to be around for the next hundreds, thousands of years. And so, you know, if people want to be involved, like they got to prepare themselves and have a rigorous framework around it.
Totally agree, especially on the time horizon. And I think that's what has been painful in the industry right now. People who thought this was just the secret to grow unlimited Bitcoin,
infinite money glitch,
and number go up.
Yeah.
But we've seen this with Saylor, and I think yeah, it's really a long-term financial engineering play, and you have to construct your balance sheet and your amplification and your leverage and your debt stack in a way that give you that long-term optionality, because there's a lot of ways to err on that path. But for the folks that have that long-term vision and that conviction, that don't sell their Bitcoin and pivot, the opportunity is immense.
And then on the mNAV question, I think that this is an area where there was actually a lot of uncertainty about what should the mNAV be of a Bitcoin treasury company, and so I don't think that answer has been that question has been answered yet. And I debated Jim Chanos on this, where my position is basically greater than 1. And his view was, probably at a discount. And so I think that it's that's an area where when the mNAV is high, people find ways to backfill why it should be,
Of course.
right?
Yep.
And then when it's low, they find reasons for why it should always be low. But we'll probably see it oscillate, right, and mean revert around some kind of number.
And I think we're going to need additional layers to that mNAV framework, especially when you consider companies that have operating businesses or that have operating income. There's no way in mNAV today to really account for the corporate overhead drag of running a publicly traded company. Are you cash flow negative every year just from audit and listing costs? How do you account really for the amplification of the type of leverage the Bitcoin company has on, and how do you take all those data points and back into a valuation framework for a specific company?
And then keep your emotions in check through it all, because it's a roller coaster. Well, Tyler, I really appreciate you joining us today, and looking forward to having you back on the show soon.
This has been great, Pierre.
Yeah.
Thank you.
Thank you. If you found this conversation fascinating, please join us. We're on YouTube. Follow us there, and also follow us on X, at Bitcoin for Corps. And we look forward to having you join us on the next show. Don't forget to leave a review, subscribe, share it with your friends, family, coworkers, and thank you again.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin Corporation, is so high quality.
Bitcoin for Corporations brings together, my types of folks. They love Bitcoin, and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
The fact that there is not a sort of initial asset class that people can cut their teeth on, I think is making Bitcoin an attractive option.
Welcome to the Bitcoin for Corporations show. I'm your host, Darrah, and today we're joined by Hunter Albright, the Chief Revenue Officer at Salt Lending. Welcome, Hunter.
Thank you. It's great to be here.
There's lots going on in the markets. Obviously, Bitcoin price down 50%. But it seems like there's pretty good sentiment here at Strategy World where we are recording.
I would agree. There is a real sense of calm despite where the price is and the recent price action. And I think it's reinforcing the fundamentals in terms of what people believe as Bitcoin as an asset class and the potential and the value that that has.
So I'm curious to hear kind of what your personal journey into Bitcoin has been and your role at Salt Lending.
Yeah, so I got into Bitcoin in 2017. I actually was asked to teach the very first Bitcoin course at the University of Colorado in Boulder. My background is traditional finance for the most part. I got my doctorate in systems engineering, actually doing AI back in the day, and that took me into doing risk modeling and marketing optimization modeling for credit card portfolios early on. And I spent my career, spent about 2 decades really focused on doing that, both in the US and in Europe. I ran Barclays credit card and loan portfolios. I was chief marketing officer at Halifax Bank of Scotland, and really focused on the payment and lending sort of infrastructure and networks globally in terms of managing those portfolios.
And what caught your attention about Bitcoin with that background? You know, a lot of people, they see Bitcoin, they dismiss it as a Ponzi or something.
Yeah, I mean, for me, I went into Bitcoin through the engineering, actually, wanting to sort of understand the technical side. And I think I went down the rabbit hole because of the breadth of it, sort of the global network, and then all of the different topics that you got to think about in terms of the macroeconomic conversations, game theory, you got to talk about cryptography. And that fascinated me in terms of, okay, well, does this really work?
Yeah.
You know, what are the weaknesses and what problems does it solve? And having spent so long in traditional finance, especially on sort of an international basis, I was very sensitive and aware of sort of the unbanked problem and understanding how difficult it was to move money between companies and the cost of the foreign exchange. And so as I started to go further into Bitcoin, was really interested about it as a technology as much as it evolved into sort of a currency. I would say my view of it now is really intrigued by it as an asset class and what that means for us globally.
Right. Now, the students at UC Boulder, have they been excited about Bitcoin as well as the course full?
It has been. It's definitely ebbed and flowed based on sort of the trading and the price action in terms of going up. But I do think, you know, we have generations of students and sort of people now, right, that are digital native, and they think about currency from a digital perspective first, compared to where I am in from a Gen X perspective, thinking about it as sort of, you know, traditional financing and sort of moving into digital.
Yeah.
So there is a lot of curiosity and openness and sort of understanding, how do you go from Venmo to Bitcoin? How do they think about incorporating stable coins into the way they think about money?
Now, you mentioned Bitcoin's very cross-disciplinary. So the course, did they, what label did they assign the course to in terms of what discipline it falls under?
So I actually taught it out of the engineering school at the University of Colorado, but I accepted anybody that wanted to take it. Colorado actually has a fairly large sort of, I would say, crypto native group of people that are passionate, community that's passionate about it. And so there was a fairly large interest in the course at the university as well as more broadly.
Yeah, that's great. Yeah, and I think that the engineering mindset of figuring out how will Bitcoin break and asking lots of questions and kind of doing that, going beyond the price chart and looking at what is proof of work, what's the difficulty adjustment, and trying to poke holes in that. The more questions you ask, you find that there's actually really solid answers. And that now, 17 years later, still working basically the same way that it was designed by Satoshi.
Yeah, and I would agree. And I heard in Saylor's talk yesterday, you know, he gave a story about talking about how does he justify or how does he talk to people about the value of Bitcoin. And one of the things that he mentioned was, you know, where else can you move $10 billion worth of an asset internationally, sort of from a peer-to-peer perspective?
Yeah.
And I've used similar frameworks. I mean, I talk to people about, if you thought about the value of MasterCard, Visa, and American Express as global payment infrastructures, I mean, essentially Bitcoin is that in terms of a sort of decentralized way of doing that, with Bitcoin as the means of exchange as an asset class. And I think that helps frame some of the value, some of the opportunity, and the way to think about why are so many people still confident that the value will continue to appreciate despite periods of volatility, which is part of the game, especially in emerging tech. And I would definitely think about Bitcoin still as an emerging technology and sort of infrastructure that's being built and proven.
And I think we're seeing with the gold price as well now that even something that is as ancient as gold is can still have quite a lot of volatility when demand and supply are out of line.
I agree. I don't think, I think for the most part, in terms of when I've worked with people about financial planning, financial strategy, capital strategy, time horizons are hard, right? And so short-term time horizons are emotional. And the discipline, right, the financial literacy more broadly, I think is lacking. I've really enjoyed using Bitcoin as a way to talk to people about financial literacy, financial planning. I really do believe Bitcoin is helping democratize wealth building for individuals and for companies. I think it's democratizing capital allocation, capital sort of management strategies in a way that I believe will be really empowering for businesses globally going forward.
Yeah. An area we haven't seen a lot of development on, and I'd love to get your perspective on, is developing Bitcoin as a means of payment. If we look at the card industry, I think cards started in the 50s and 60s.
Yep.
But it wasn't really until the past 20 years, let's say, that they've network effects to be the default.
Yeah. So I've been traveling around globally, sort of talking to people in different regions about what is the primary use case that they're looking to solve with Bitcoin, and a little bit why. And predominantly, there's a real store of value problem that's being solved first and foremost. And I think a lot of that is what has been surprising to me as I've sort of understand some of the challenges in the different countries. It's like the inability for sort of 20-year-olds and 30-year-olds to get into the housing market is the same around the globe. And so the fact that there is not a sort of initial asset class that people can cut their teeth on in terms of learning about storing, building wealth and storing value and then being able to sort of leverage it and learn the disciplines around it, I think is making Bitcoin an attractive option. Because you don't have to buy a whole Bitcoin. You can buy it fractionally. You can get started with small amounts of money and learn a lot of the disciplines that are needed to actually build wealth over a longer period of time.
Mm-hmm. And I have friends who kind of went into the real estate industry and became real estate investors. And it's a full-time job compared to just buying Bitcoin and putting it in cold storage. You're working with tenants, you're making repairs, all this. So, in terms of it being an asset class, what do you think sets it apart from kind of the other options out there that people have for building wealth?
So I would say, first of all, I think Bitcoin builds optionality, right? Bitcoin builds flexibility for a longer period. I think, I don't tend to really focus on near-term price. I stay away from price predictions. But I think about it as like if your planning is 5+ years, then you can start to think about how to take advantage of the asset class, both in terms of accumulation, but also then the optionality that it can provide you, at that point. And I think, when you think about real estate, you're tied to a physical piece of land, you're tied to sort of a country where that land is. If you're investing in a stock market, you're tied to that country's stock market. And Bitcoin has a level of, again, optionality because it's not tied to any of those things. So you are distributing sort of your investments across sort of different assets that hopefully will provide the return that you were looking for. And I think it just allows people to start to have accumulate. One of the things I talk to a lot of people about is this idea of how do you start to learn to go from labor-based income to asset-based income. And I think Bitcoin is a very great way to get started in terms of building asset-based income.
And a lot of traditional investors, like the Warren Buffetts of the world, they look at Bitcoin and they say there's no cash flow. And kind of what's your response to that view of Bitcoin?
I think it's a very operating company traditional view of value appreciation. But Bitcoin has shown that it is a market. People are willing to pay for it. And because I think as people come to understand more about the technology, the infrastructure, and the use cases that underpin it, that I expect us to continue to see it appreciate with its ups and downs as sort of money moves in and money moves out for risk on and risk off type reasons. But from a technology, I think it has been just targeted and battered over sort of the decade plus that it's sort of been around. And so it's a proven technology, and it's really solving a need in terms of the ability both to store wealth as well as move assets or move value internationally.
And one of those use cases is using it as collateral. So I'm really curious to hear what motivated you to jump into the industry and join Salt Lending.
So I joined Salt Lending a little over 3 years ago. Salt, I think, is a great company, has been around since 2016 and really been an innovator in the space in terms of helping people tap into the value. I spent most of my career in unsecured credit, and what Salt does is really secured credit. You know, as I've listened more to Michael Saylor, talked to him a few times, you know, when you look at what strategy is doing for digital credit on the fixed income side, Salt is doing the same thing from a liquidity perspective, really looking at building a liquidity layer for institutional digital credit. And I think that's important. I think there's a big difference between unsecured credit and secured credit in terms of people have accumulated an asset and they should be able to tap into the value in a structured way for them to take advantage of it, as people do with a mortgage.
Right. When we think about interest rates, unsecured rates today are like 20 to 30%, I think. Bitcoin lending, I don't know what it is at Salt. I've heard like 10 to 12%. Is that kind of the rate?
Yeah, that's fair. We go from sort of 8.5 up to 12% plus, depending on the product.
And then a mortgage is 5-6% these days. How do you see kind of the lending rates evolve for Bitcoin? Is it going to trend towards kind of lower risk premiums and closer to mortgage rate, or is it always going to structurally be a little higher?
So what we're seeing is more sort of institutional capital want to come into the market. They believe in Bitcoin as an asset more, and that's going to help bring down prices for customers in terms of the borrowing rates. And what we're working on doing is then also providing options that customers can choose to pay for to really help mitigate the downside risk, both in terms of protection of value, but also for a lot of our customers, it's a reduction of stress.
Right.
You know, so that people don't have to worry about their asset when there is market volatility. I mean, we want your Bitcoin to stay your Bitcoin and customers' Bitcoin to stay their Bitcoin. We're not in a Bitcoin acquisition strategy through liquidation, right? We don't rehypothecate, and we're really focused on putting the engineered sort of product design around the assets so we protect customers' assets.
So how do you do that when there's a drawdown like this? You know, if somebody borrowed at 124,000 and we're now 50% down, what's Salt's risk management philosophy?
Yeah, so we do a number of things to help customers manage their downside. First and foremost, like your own governance, whether you're a company or an individual, about how you are going to approach margin calls is something that's really important. I mean, that we have a team of people that are passionate about Bitcoin. They're passionate about really sort of helping people with the credit. So we really start off with allowing customers and prospective customers to talk to people to understand what are the right options. And I think that education is a huge element in terms of just helping people learn what to do and how to do the right thing. So we guide them and sort of make recommendations on LTV, what it means to have a low LTV versus a high LTV. And if you take a higher LTV, we lend up to 70%, what you should be prepared to do if the market does drop, and what that price point, right? You can calculate the price point about when your margin calls would be triggered and when sort of, for us, the stabilization would be triggered. So the second thing we do is we do allow a multi-collateral, multi-currency collateral wallet. So what that means is we have a lot of customers that put stablecoin in with their Bitcoin to help reduce the volatility of their overall loan. And so that's a way of getting some downside protection against sort of the volatility in the market. The third thing we do is we have a offering called stabilization. And this is, so a lot of lenders out there, as low as 65% and up to 80%, will liquidate customers' collateral if they hit those trigger points. And that's a terminal state, right? I mean, the collateral's being sold, your account's being closed, and we really learn through all the cycles that we've been through that that's not the best outcome for the customer nor the company.
Right.
And so Salt innovated and created a technology referred to as stabilization. So just above 90% LTV, we actually swap Bitcoin into stablecoin. And it really is, you can think of it as a strategic pause that allows people to not have to worry about, you know, that they're going to get liquidated overnight, or if they're on a plane, or if they're sort of indisposed for some other reason. It really helps them reduce the stress and think more sort of confidently about their assets. And then the most recent thing that we've done is this in 2025 we brought out Salt Shield, and this is a opt-in fee-based program where we eliminate margin calls. So if you buy into the you pay the fees and enroll into the program, then for as long as you stay in good standing with the loan up to the maturity date, you don't have to meet any margin calls. So we are really continuing to try to work through how to mitigate sort of that downside risk for customers so they can feel more comfortable with their loan and their collateral.
I've always had this question, and I think you're the perfect person to ask it to, is, is there a future where there will be a combination of secured and unsecured, such that if your secured loan is underwater, but you have a good credit rating, that there's no liquidation, and if you end up, if SALT ends up with a loss, that it would hit your credit rating, on your FICO score.
I think there definitely is a world where that happens. I mean, so we do not do credit checks, right?
Yeah.
Your collateral is your credit, your Bitcoin is your credit. And I do think, but there will be opportunities to earn through behavioral and through enrollment into different programs, some of that unsecured protection or unsecured access at different points of time.
Yeah.
And that's what we're really starting to see with Salt Shield is I think a first step in that direction. As we go forward.
I think we've seen this structural issue in the industry of cascading liquidation, right? It's kind of pro-cyclical sometimes when, especially with you've got very highly levered, 100x perps on exchanges and things like that. And it's good to hear that there's kind of responsible actors that are trying to find ways to get away from that model.
Yeah, and I think leverage in terms of borrowing against your Bitcoin, I view is very different than leverage on exchanges where you have higher multiples, right? We are lending up to 70% LTV, so it's always over collateralized at origination. And we have incentives for customers to keep it in those ranges. I do think Salt Shield we have over 10 years of data that we're able to go back and look at in terms of how the market performs, how customers performs, how loans perform, and we're getting very comfortable with understanding that level of risk to be able to help customers essentially stretch out the time frames to be able to sort of manage the loan appropriately. Both because the use cases are changing. Both companies and individuals want longer term loans because they're looking at liquidity strategically. And we also think actually longer term loans have better health aspects to them because it allows for time to recover, and we're not boxing anybody in per se, as long as they stay in good standing in terms of making the interest payments. It's like our goal is to have a product that looks a lot like a mortgage, like the value of your house goes up and down. And somebody is able to, as long as you're maintaining it, making your payments on time, then we're going to support you.
Right. It shouldn't matter that your neighbor is selling his house and that suddenly you've got a margin call on your mortgage.
Yeah, exactly. Right. The price changes.
Yeah. So that's really interesting. And we've seen Bitcoin have like flash crashes and then quickly recover, and so it makes sense to maintain that client relationship through those events, given where we all think Bitcoin's going. Now, as you look at kind of the loan book and maybe even just zooming out on the wider industry, are you catering to all segments of individuals, businesses, or is SALT really focusing in on a particular vertical?
So we are focusing in on individuals and companies, and I would say sort of from a retail perspective. So on the individual side, we do a lot of work with individual holders of Bitcoin that are getting into it. They're building their stack. We do a lot of work with private clients, high net worth individuals, and family offices, and we do a lot of work with corporations. From sort of small and medium sized businesses up that are looking to accumulate Bitcoin on their balance sheet and then starting to think about their capital allocation strategy more strategically. We started doing that with miners. If you have to have a forced sale, which miners originally had to do a lot of time, right, that's really fragile in terms of the stability of the company even from a sort of a value preservation perspective.
Right.
And so helping companies think about having Bitcoin on the balance sheet and then having the governance and the structured liquidity offerings around that, we're seeing that being really advantageous for the longevity of companies and the stability of companies going forward.
And is it kind of a standard loan agreement, or are these negotiated one-offs?
So we have standard offerings, and for the larger loans, we do negotiate. As I said, we lend up to 70% LTV. We lend up to a 5-year loan term, and have other options that people can choose depending on the loan size and the duration that they're picking.
And do y'all have minimums and terms? And
that's jurisdictionally specific.
Okay.
In terms of the minimum amounts, we try to make it as accessible as possible.
Yeah. And is that a 1-year term, or is that also?
Our shortest term is 1 year. Yeah.
That's fascinating. Now, on the financing side, we've just heard this announcement from Ledin. It's also a lender that they are securitizing their loan book. We've heard all their companies, custodians, setting up banks. Where do you see the future of financing for Bitcoin-backed loans going?
Yeah, I think the Ledin announcement is good for the industry, right?
Yeah.
Seeing the structure of the over-collateralized loans get that rating as a whole.
It was a BBB plus, I think? Or?
BBB minus, I believe, is what the rating was.
I always try to upsize
of
it.
it.
Yeah.
But it's investment grade,
Yeah.
and it's good for the industry. We're going down similar paths, and I expect sort of exciting things ahead from SALT and from other providers, and that's going to help bring the cost down for the borrowers and help us provide more structures and more product alternatives for people to really match how they get their liquidity with the goals that they have.
Mm-hmm. And so that's going to enable lower rates, longer terms, and kind of more flexibility.
It will arrange flexibility. It'll be rates. It will be different custody models. It will be different term lengths, really allowing, I think we'll see more innovation around the structured of liquidity offerings. As we were talking about earlier, when we look at what we're doing and what is very similar to strategy, trying to take the volatility out of the asset or out of the use of the asset and provide you different options. And so having the capital structures to do that from sort of more of the traditional TradFi structures, the asset-backed loan vehicles, I think will provide allow for more innovation in the space as a whole.
In terms of a business model, is it really about net interest margin between kind of the assets and liabilities for SALT, or are there other ways that they think about the business model?
So I'm very excited about the business model of SALT from sort of just a value growth perspective.
Yeah.
I think of us, the way I've described SALT is very much like a McDonald's.
Yeah.
Right? McDonald's has become more of a real estate company, but they have a profitable business on top of it.
Mm-hmm.
So our goal is to create better products for customers so that we sell more loans. We'll take that revenue, buy Bitcoin with it, and then go do it all over again. And so there is an underlying sort of mNAV element to building sort of our own treasury,
Mm-hmm.
but on the back of a profitable business. And I think that's really differentiated in the market in terms of, you've got the treasury companies that are accumulating Bitcoin, and I think Strategy is in a sort of a category of themselves.
Yeah.
And I think Strive is doing a great job in terms of moving in that direction, and others. But our ability to combine a profitable operating company with then Bitcoin accumulation and the understanding of how to manage that asset from a capital allocation perspective, I think is very differentiated.
Now, zooming out on Bitcoin as a whole, were you surprised by the success of the Bitcoin ETFs and Larry Fink going on TV promoting Bitcoin?
I think Bitcoin is becoming more popular. People are becoming more aware of it. I mean, the ETFs are a marketing game. I'm in favor of it because it helps people get exposure and interest in Bitcoin to sort of understand it as an asset class, start to think about it how they include it in their own capital allocation. We have sort of team members that have come up with a phrase, which I enjoy, is sort of 0 is the wrong number in terms of how much Bitcoin you should own. And I think that having more products out there that encourage that adoption and the adding of Bitcoin as an asset class in terms of some shape, form of exposure into your portfolio is great. So you've got ETFs. I think again, what Strive and Strategy are doing are allowing other ways to get sort of the income, the fixed income side. Exposure to that is great, and then for others, they're going to want to own spot and think about how do they leverage it in, based on that type of ownership.
And then competitively, how do you think about kind of the margin lending against IBIT versus against physical Bitcoin with Bitcoin-backed lending?
So right now, the space is very much, we lend against essentially spot, right?
Yeah.
In terms of the actual asset. I think it will be interesting to see how it evolves. For the most part, our decision in terms of what we lend against is against the liquidity of the asset in the market. How easily can it be traded? How fast can we sell it? What is the access to sort of liquidating it, selling it when we need to? And so I think what Michael Saylor shared yesterday in terms of how much strategy and strike, MSTR and strike are being sold in the market from sort of a volume perspective is encouraging. I think you will see people start to think about how they incorporate those type of assets into portfolios, because that's been like the ultra wealthy have been playing this game for centuries, right? They've accumulated business portfolios, real estate portfolios, and stock portfolios that they've been able to leverage to make additional investments, to live their life in sort of a tax-free way. And I think sort of Bitcoin and these new sort of equity options as well as sort of digital assets are going to provide that opportunity going forward, with really Bitcoin being the predominant one that's leading the way.
And with large borrowers, have you seen them kind of add derivative overlays to manage their risk, or is that kind of more uncommon?
We do know of sort of high net worth and family offices and more sophisticated borrowers. They ask questions. They do have different sort of derivative strategies that they wrap around their borrowing. I do think, again, once the capital has come on board, you will see some more of those structures come into play as sort of the market matures and it grows, right? You have more people into it, you have more money that people are looking to take advantage of, and then they can also diversify how they think about their value building strategies or their capital sort of treasury managed strategies if you're business, or your wealth building strategies if you're an individual.
Yeah. We recently saw CME announce that they are going to use Bitcoin as collateral for futures. Do you think that this is a trend that's going to keep going? What's on the horizon for you?
I don't know much about that. I do think, as Bitcoin grows as an asset class, I mean, from what I have exposure to, thinking about it as an asset that we can lend against, more people wanting to lend against it take the different levels of risk at the different stages of sort of income generation, that we will see more people think about it, how they plug it into their business models.
It seems inevitable.
Yeah.
Now, do you think that the commercial banks, like, are we going to be able to go to JP Morgan and deposit one Bitcoin and borrow against it, or is that just so far in the horizon that you're not worried about additional competition?
Well, I do think, in what we know and having conversations, that sort of the TradFi banks are looking to get more into the custody. Having worked in sort of TradFi banks and global sort of banking institutions, there's an element of being able to get started with custody. I think there is some institutional and cultural changes that will be slower than we may think, both in terms of how the risk committees will manage some of those decisions. The accounting for Bitcoin can be hard, and so until there's more accounting firms and support structure, some of that will be probably more challenging than people expect. But it's gaining too much attention, and it's too valuable for the traditional players not to want to figure out how to get into the game.
Right. Ultimately, they want to grow their revenues as well. So.
Well, and they don't want to lose their customers, right? They have sort of they're at real risk of sort of losing connectivity with their customers. And I think the one thing that we need to remember is we are going through such a large generational handover of wealth, transfer of wealth, that those sort of traditional banks are going to want to keep those assets on their platforms, as opposed to, when they get transferred, have them move because somebody else wants to move them into Bitcoin, and they can't do anything with the Bitcoin.
Right. Yeah, that makes sense. So as a business, well, we've seen a lot of announcements around stablecoins. We've seen the success of Tether and Circle. Do does Salt use stablecoins as a kind of a fiat rail, or is that on the roadmap?
No, we use USDC, USDT, and USD as sort of how we can distribute loans, and as well as receive payments. And I think stablecoins, as we're going back a little bit to our conversation about Bitcoin as both a means of exchange and a store of value. I've always thought about making payments with Bitcoin is a needed step to start to understand and believe in the technology. But some of the adoption curve is that you first have to get people comfortable with the technology and the wallets and the transfer of making payments, and then get comfortable with it more as an asset class. And I think stablecoin will help in that, in terms of if people are familiar with stablecoins and they're sort of in the wallet infrastructure based on stablecoins, then I think they'll adopt and get into Bitcoin more quickly. It's just not as far of a jump.
Yeah. With the passage of the Genius Act, do you think stablecoins domestically here in the U.S. are going to start competing with banks, or is that a little overblown?
I think they will. I think the efficiency of using stablecoins for all of the machine-to-machine payments, all of the different sort of digital online elements that we're doing. Some of my sort of previous work and interest, I think Bitcoin and sort of stable coins will be real valuable for a lot of the AI infrastructure in terms of paying people for data, paying for use of models on small elements. There's a lot of efficiency in terms of the payment rails that will be sort of completely behind the scenes that sort of Bitcoin and digital currencies will help enable.
On the note of AI, I personally have reached a point where I feel like now the AI is smarter than I am. With ChatGPT 5.3, it's like, okay, well, what does that mean for humanity? So, it's off the beaten path here, but I'm really curious, with your background, have you been vibe coding? Have you, or what do you make
I've definitely been. We've, Sean Owen, our CEO, and we have a lot of people at Salt that are very sort of AI leaning and forward thinking in terms of how do we incorporate it? What does it look like? And there's no doubt that I think over the past month, there has been another sort of major leap forward in terms of not only the models, but really sort of the parallel nature of being able to run the models, which is causing sort of expedited speed and potential about what can get done and how it can get done. And so I think that's exciting. I think we're also at a point where I look at it that the technology is advancing rapidly, so the capabilities, and especially the companies that are in that space to build that technology, continue to accelerate because it's a flywheel effect, essentially. They're getting the agents to write more code, they're getting them to debug, and they're going faster. We are definitely hitting a bottleneck in terms of then companies and the employees figuring out how to do that change management. And then ultimately we have our customers and how fast they'll change. And they'll be the slowest because they won't need to change unless it impacts whatever product or service they're buying for you. And they probably don't want to see necessarily that it's AI. They just want it to be cheaper, faster, or have a higher quality product. And so, but I think we're right in that middle about people trying to think about what does it mean and how are we going to approach what I look at as basically a change management problem, because for the most part, we have generations of people that were brought up to be doers and very proud of the tasks that they're doing. And the capabilities of AI now are moving us all into needing to understand how we're better managers to outcomes. And are we asking the right questions? Are we trying to solve the right problems and not try to solve everything, because then we're going to lose it in noise. So it's a reskilling and it's a change management problem with a lot of businesses, or I would say all businesses at this point.
You've managed a lot of people in your career. Is it easier to manage agents?
It is. I think it's like managing interns, right? They need a lot of love and care as you bring them up, but once you get them there, they can sort of off and run. But it does take a skill to figure out how to manage them.
And maybe it's a different set of problems too. One thing I like about talking with the AI is like it doesn't have an ego. It doesn't. Whereas like with humans, that's a little more touchy.
I agree. I mean, it's amazing the directness and what you can get back. I still think that people like to work for people. and make an impact. I think it's one of the reasons the Bitcoin community is so compelling, and it attracts people that are sort of intellectually stimulated. They're trying to make a difference. They're really thinking about harder problems. And I don't think that goes away. I think smaller groups of people will be able to do more, and we'll see more innovation in sort of the ecosystem that we're in, as well as in others, with essentially the leverage that people are going to be able to get out of the technology. They still have to figure out what problems are important, and they're motivated to solve.
Yeah, and being able to solve bigger, harder problems, because the small problems are now
taken care of.
Yeah.
Yeah, you really free up your time to think about where do you want to put a dent in the world, right? What is the problem that you want to go really try to sort of solve, and who do you want to do that with?
All right, now we're really off-roading, but I want to keep going on this because I think that our audience probably finds it fascinating because it's top of mind for a lot of people. When you were getting your PhD, like, is this the vision people had of where AI was going, or has there really been a lot of pivots along the way?
So when I did my PhD, my work was in genetic algorithms and neural networks. And so some of the early work I did, like one of the first projects I worked on was in the UK, and we helped build a neural network to recognize letters and numbers on license plates for traffic cameras in the UK.
Right.
And it was sort of, it was categorization and matching in terms of an image with what it was, so that we could read out a license plate. What is actually interesting, from at least, and I am removed from it but have some appreciation, a lot of the algorithms are still the same, but the cost of compute and the cost of data has gone down. Now, obviously, LLMs were different than a lot of the prediction, clustering, and classification algorithms that I had worked on. But a lot of it is still the same, but it's because so much data can be processed, and the feedback loop in the relearning and retraining has improved, that allows everything to be more dynamic. And then you brought up the parallel nature. That's one of the things that really speeds it up. So when I was at Barclays, we were doing a lot of marketing models for different segments. We would be training all the parameters in terms of what works. But now that you can take a whole parameter set and copy it across a whole bunch of models, and so take your base case and then start to learn, really becomes exciting about sort of how fast you can progress. So it is sort of that flywheel and that exponential learning potential that is now, I think, really being tapped into.
Yeah, and it's interesting to think about how we got to this level of compute was with video games and Bitcoin mining. People were using GPUs for Bitcoin mining, helping NVIDIA scale up and build better and better cards.
So now the question is, okay, I have high compute power. What do I use it for? Do I mine Bitcoin, or do I outsource it to sort of for AI compute?
We've seen a lot of Bitcoin miners make that decision.
Yeah.
Fascinating. And so now, with Salt Lending, how do you see the business evolving going forward? Is it just growing horizontally, or are there other opportunities?
So, I mean, we're focused on a global. We have predominantly been in the U.S. over a lot of the lifetime of Salt, but very focused on sort of international expansion.
Yeah.
As I said, we are looking to be the Bitcoin credit partner, really building that liquidity layer for digital credit. And so we've got sort of international expansion ahead. We'll continue to, I think, see strong growth in the U.S., both on the individual and the corporate side. And we're looking to continue to innovate on how we can provide, one, better service, but also additional downside protection, so that people can have a level of comfort and sort of reduction of stress around sort of, if they choose a liquidity solution, around that solution.
And do you think the digital credit industry is just going to grow organically, or are there regulatory changes that need to happen in order to accelerate that growth?
The regulatory clarity is extremely helpful, right? I mean, everybody just wants to know what they're playing, what the rules of the game are and how to sort of play it. And so I think the Genius Act, the Clarity Act are going to help that. We're seeing the other countries rapidly adopt or be influenced by the regulatory design and developments that are happening in the U.S. Europe's taking a little bit of a different approach.
As they do.
Yeah, but people, it's on everybody's agenda.
Yeah.
I think the UAE came out with something this last week. I believe China or Japan also came out with some regulatory updates over the past week. And so we're starting to see more things happen globally about how to address it, as an asset class. And I think that's really important. And some of it will get into, I think, the regulation around, it being considered more of a means of exchange will be one of those elements. If there, I know there's been regulations talked about transactions under certain sizes not being counted as taxable events.
Yeah.
From sort of a so-called sale or exchange of your Bitcoin. And I think that would be important to help encourage people to be using it more in sort of as a means of exchange. And I think until then, people will default to using it more as a store of value. So I do think globally that's the bigger problem that's being solved.
And as means of exchange, what are your thoughts on Lightning and kind of contrasting it to cards and other solutions that we could say are like layer 2s on top of fiat, right?
Yeah.
And there's layer 2 on top of Bitcoin.
I think Lightning is a great technology. It has to just figure out how to get to scale and how we can have more channels that are sort of funded and enabled for people to make it or be able to leverage it sort of with more ease and more flexibility.
I'm optimistic AI will solve that personally.
Somebody's going to take a stab at it regardless.
Yeah, exactly. Now, on the regulatory side, do you have a view on kind of the capital requirements question? We've heard people talking about the Basel rules, and I think it's 1,250%. That essentially makes it prohibitive for banks to hold Bitcoin. Do you think that the U.S. is going to go along with what the Swiss or what Basel wants, or is there going to be a different solution?
I hope there's a different solution in terms of recognizing the true risk of the asset class. I think, both in Saylor's presentation and then Jeff from Strive and a couple other presentations talked about the disincentive that exists based on the sort of essentially the risk weighting that has to be applied to Bitcoin.
Yeah.
And so if you want something that's better for customers, if you want something that's better for your citizens of your country, then hopefully they will get rid of that weighting and encourage banks to then be in a position where it makes more sense for them to participate. But that requires the understanding of the asset class, how it has performed, and why it has performed that way.
And so in your mind, that risk approach should really just be based on Bitcoin's price history, or are there other factors that would be relevant?
Well, I think that there's other factors, but the fact, the liquidity, the sort of the ownership aspect of it is really important, and it's not a derivative. It is the asset, and I think people, the regulations need to reflect that. But I think it'll take time to get there.
Yeah, absolutely. Well, before we wrap it up, is there anything you wanted to bring up that we haven't brought up yet?
No, this has been a wonderful conversation. I've enjoyed it.
All right, well, thanks for coming on the show, Hunter. We really appreciate it, and look forward to having you come back on soon.
Sounds good.
Thank you for joining us for this episode of the Bitcoin for Corporations show. If you enjoyed the conversation, please subscribe to our YouTube channel, follow us on X at Bitcoin for Corps, and of course, share it with your friends, family, and coworkers so that they too can learn about this new exciting world. And we'll see you on the next episode.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for Corporations, is so high quality.
Bitcoin for Corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors, this is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
And fundamentally, it's going to require a reimagining of the monetary system we use. And I believe that the reimagining is already here, where you can already experience this through Bitcoin.
Welcome to the Bitcoin for Corporation show. Today, we're joined by Mason Ford from Melius. Welcome, Mason.
Thank you for having me, Pierre. Excited to be here today.
Yeah, of course. We wanted to have you on, hear the gravity thesis. I think that was a really interesting presentation that we heard. And of course, talk about what Melius is doing and kind of the global state of Bitcoin treasury companies.
Yeah, absolutely.
So what is the gravity thesis?
The gravity trade was the presentation that Dan Hillary and myself presented at True North Day, which was on the Monday before Strategy World. And really, we were looking at traditional assets, right? If you think about a 60-40 portfolio with 40% bonds, 60% equities, we were really looking at the state of those two assets, and we were looking at them through the lens of gravity. Where are those assets going? And we started off with bonds, which we are putting in the category of largely fiat, right?
Yeah.
Because these are fiat denominated assets. And when you look at the gravity of fiat, our argument was that it's towards debasement. And largely, to put it in simple terms, it's because of the fiscal situation of the US and the kind of political inability to perform austerity, which we saw through Doge. So we believe that fundamentally the gravity of fiat is towards debasement, towards less purchasing power.
I want to challenge it. Okay. I want to challenge it. Kind of play devil's advocate here.
Yeah.
AI will cut healthcare costs by 10x.
Yes.
Okay. So we'll be able to have budget cuts, and you can call it austerity, but your robot will be providing your healthcare.
Well, this is a good point, and let me first go into the equity portion of the 60-40 portfolio and tell you why that's broken.
Yeah.
And then maybe we will go into the AI deflation, right? On the equity side, what is an equity? An equity is a claim of the future revenues of a public company, right? And when you think about what AI does, our argument was that it is inherently deflationary, right? And what that deflation does is that it makes it makes the future cash flows of those companies more uncertain, because it lowers the cost of entry and increases competition across the board. It lowers the cost of labor, it lowers the cost of goods generally. The second thing it does, and this is an insight that I got from Jeff Booth when I read his book in 2020, The Price of Tomorrow. I'm a huge fan of Jeff Booth.
Talk about foresight.
Yeah,
he
talk
wrote
about
this
foresight.
6 years ago, and it's only becoming truer.
Yeah. I believe him when he says that the deflation from exponential technology is fundamentally incompatible with the monetary system in which we are existing right now, which requires inflation to perpetuate into the future. So when you really think through it, and that's what we did in our presentation, we went through, and hopefully we're going to post it on YouTube, so by the time you're watching this, hopefully it's out there. We ultimately say that the deflation from exponential technology actually causes debasement in the future and increases inflation and hence the rush into hard assets, right? So when you have these two forces, which fiat is towards debasement, AI is towards general uncertainty in equities as a store of value, as they are becoming increasingly inefficient in containing that value over a long duration. And then you add in the component that the deflation from those exponential technologies actually also increases the debasement. You see that our, most traditional portfolios are broken, right? And that capital needs to flow into really what we believe is scarcity, ultimately. And we believe that Bitcoin is the fundamentally the most scarce asset in the universe, and that is only a matter of time until that capital from traditional portfolios migrates to Bitcoin. And in between that time, it will be very volatile as people trade in and out, as there's different correlations between assets, as there's just general chaos in the world.
So let's say AI productivity decreases CPI by like 10% 1 year. The problem here is that people would have more difficulty paying back their loans.
Yes.
Is that kind of the thesis?
Well, if you think about what it would take to decrease that CPI, we're talking about potentially massive unemployment as you're reducing one of the highest costs in production, which is maybe labor, right?
So then people defaulting on credit
people
cards,
defaulting on
loans.
credit cards, auto payments, mortgages, and because our system is so levered right now, you could see a massive deflationary collapse, which we believe ultimately the government will not allow that to happen, and there will be some monetary intervention like we saw in COVID or 2008.
So you don't think the Fed chairman Orsh is just going to like vibe code his way out of this and Claude, fix the economy, don't make any mistakes?
Yeah, I see on Twitter a lot of the AI guys understand that where AI is going, where exponential technology in general is going, because I think in order to see, I saw this really good tweet. It said, "Never fade autists who can see an exponential curve," right? And it was specifically talking about COVID, right? A lot of people saw COVID coming. Was the reaction measure? We could go into that, but
March 12th, 2020.
Yes.
Everybody understands that everybody else understands, and everything adjusts.
But my point here is that a lot of the AI guys don't see the economic aspect of this. I think they do, but they are trying to fix the economic problem within the fiat system, and fundamentally it's going to require a reimagining of the monetary system we use. And I believe that the reimagining is already here, where you can already experience this through Bitcoin. And by experience this, what do I mean? I mean, increase your purchasing power or increase your access to goods and services that should be getting cheaper and more abundant from these technologies via a deflationary currency.
Okay, so they're going to print lots of money in order to stave off all these defaults, which would cause the banking system to collapse, right? Just like we saw in 2008, that they step in at that point, or with SVB more recently. But does that freshly printed new money go into Bitcoin?
Yeah, I mean, I think that's a really interesting question, and I had some, a supporter of True North come up and ask the same thing. What if the money doesn't flow into Bitcoin? And kind of my thought process about that is, I think as equities break, I think a lot of people, fundamentally know that fiat is broken. So what do? They go into equities, they go into real estate. And as those begin to break, as those companies are more uncertain, as they do not have the same growth prospects because of the disruption, I really think people will start to look around and say, well, what else is there? And I think that's where we see Bitcoin is ultimately a new growth asset that actually works. It might be the ultimate growth asset. At the same time, it's a store of value. I think a lot of Bitcoiners box it in as it's the store of value. It's the safest thing. I believe that too. But I also believe it could take on the narrative of a growth asset as something that we could be excited about in the future, because it's the only thing that really works. Bitcoin doesn't have a moat to be disrupted, right? It is mathematical scarcity. It's not in the it's not playing in the plane of competitive scarcity where it's trying to, fend off other competitors. There's no second best.
There is no second best, and I think we've seen that in the crypto markets of like, if the sentiment is bad in Bitcoin, it's even worse in crypto, where they had all sorts of theses about value accrual that really haven't played out. Now, in terms of real estate, one thought I had of how real estate gets disrupted is driverless cars. And then, of course, if you've got humanoid robots building real estate, then you kind of take away the land scarcity and also the construction scarcity. But, the trade, the gravity trade, what time frames do you put on it, right? Do you segment it of like, here's what's going to happen in the next 5 years, 10 years, 20 years?
So I think we're already beginning to see it in the margin compression or the multiple compression in SaaS companies. But not only SaaS companies, I think we're seeing it in financial services and trucking companies, interestingly enough, right? If you're kind of paying attention to the market, you're starting to see this. And I think that's really, it stemmed from Opus 4.6 coming out earlier this year, and the market's kind of having an oh shit moment, right? Like, how can we project, like, do we know if these companies are going to be profitable or relevant in the future? And I think a lot of people are starting to ask that question. With Bitcoin, I know that I'm going to be giving my kids Bitcoin. I know it's still going to be there. I'm pretty certain about that. So I think, again, I think we're beginning to see it. Now, on the time frame, what does this mean for Bitcoin short term? I think this disruption, this general market disruption, this leverage getting squeezed is probably bearish for Bitcoin short term. And maybe we've already seen that in the price action. But, the gravity trade is probably a medium to definitely long-term time frame, right? I think the next big catalyst for Bitcoin is a liquidity injection in response to deflation in the economy that's causing some kind of structural issue.
Because we've already gone from like the 9% inflation under Biden to now 2%, but I've also seen numbers that are showing like below 2%. And so if we think about kind of the third derivative, right, because inflation's already a first derivative on the price level, that velocity might not stop. We crash through 0%, and then fast forward 12, 18 months, and Kevin Warsh is having to kind of not be a hawk like he was in the past, and actually be dovish to meet their mandate.
Yeah, I think we're going to see a restructuring of the Fed completely, as I think it will be more intertwined with the Treasury, and in a I guess in a modern sense it's radical, but historically I don't think it's that radical. I think we saw something similar after World War II when the U.S. was in a similar fiscal situation in which it had to monetize the debt, right, to get out of it.
Yeah, I mean, what seems radical today is the weighted average maturity of Treasury debt and the size of the Fed balance sheet. Okay, so when we think about like globally, is every country in this position, or do you think it's like the U.S. is the world reserve currency is in a different position?
Well, that's an interesting question. Are you saying from a monetary sense or a technology sense?
Like the gravity trade.
The gravity trade, yeah. The gravity trade is a global phenomenon because technology is cross-border. And I was talking to some gentlemen from South Africa, from the Africa Bitcoin Corporation, and they were talking about what they're seeing the impact of AI in Africa. And it's really interesting because he's saying that these are tools of empowerment for the people there, right? He made an example of, a farmer takes out his phone and takes an open source Chinese model and points it at some dirt, and he says, how do I fertilize this?
Yeah.
Or what's, what does this dirt look like? Can you do some analysis? And it's going to radically change how globally, especially the global South, and of course I'm not from Brazil, but I work for a company in Brazil, and these technologies are really a tool of empowerment for the people who've been most left behind in many ways.
It kind of levels the playing field because now you don't need to go to an American university to get your PhD in blah, blah, blah. You've got your phone that already has multiple PhDs, right? And that's only going to improve. Okay, now on the point about AI, like they're building these massive data centers. They're spending hundreds of billions, trillions of dollars. They're taking on massive debt. There were news articles about Oracle's credit default swaps going up because they're... And then these debates about circular financing and all of that. Do you think that will be kind of the U.S. housing market bubble equivalent, or are they actually going to make enough money off of it to not worry about it?
I think it could be. I think two things. Number one, I know it's a problem. Number two, I think it could be the catalyst for, some kind of government intervention.
Yeah.
And I think it's pretty simple. They are spending trillions of dollars to build these models, which 6 months later are being commoditized by free open source models. And I think they're paying trillions of dollars to be ahead of the curve by 6 months, right?
Yeah.
Will they get enough revenue? I mean, I've looked at the numbers. It's not looking likely, right? Especially if these open source models only get better. At some point, most people are probably satisfied with the level of a PhD.
Yeah. Or at least there's diminishing marginal returns, right?
Yes.
Like, do you need it to be 2% better than it was 6 months ago? Probably not. Like today, like it feels like 6 months ago is like, today is 100% better than 6 months ago, right?
Yeah.
That it's doubled, at least I'd say. But at some point, are you going to spend trillions of dollars to make it 1% better?
It seems like they are. But I also think there's a component of this, which is the government believes that this is a national security imperative, and we are going to backstop and continue to progress AI no matter what. So I think it's likely that there's some kind of bailout or just nationalization of the programs in general.
Yeah. Or maybe a debt guarantee like they do with mortgages, right?
Yeah.
Fannie and Freddie still not out of receivership.
Yeah.
They'll have the AI equivalent for that. So that's really interesting. And now, when we think about kind of economic growth, GDP growth, I think has like outperformed what people were expecting. And so there's this view that, well, we can just grow our way out of this problem.
Yeah. I think people are mistaking the initial effect of AI, because what does it do initially? Well, it improves your margins.
And there's all this CapEx spending,
yes,
right?
There's all this CapEx, and there's all this margin improvement. But I think that's the initial. It's like a sugar high at first, and then I think there's eventually kind of a moment of reckoning in which we realize these are exceptionally disruptive forces that we have unleashed into the economy. And what does that do for competition? What does that do for business models? What does that do for the equity market? How does the equity market, its response to that, tie in with how the government is financed, right? A lot of tax receipts come from the equity market, from capital gains tax. And a lot of spending comes from the equity market as well, right? The majority of Americans' retirements are in those 60-40 portfolios in which we talked about. What happens when those are disrupted? There's so many second and third and fourth and fifth order effects of this that I've been chewing on for the past really 5 years, but recently it's been like, oh my gosh, we're starting to see the hockey stick of this. And I'm here at the Bitcoin for Corporations event, and I'm thinking a lot of these corporations are going to be in particularly tumultuous times, outside of these walls, right? The corporations who do not have Bitcoin, because they are still in the competitive field. And when I think about what Bitcoin really is, it is the shelter for these corporations, for individuals, for really nation states as well.
Well, so on that note, as we close it out, I want to hear kind of how Melius is navigating this bear market.
Yeah. So, I had a really, obviously I'm a Bitcoin maxi, and I love your work. I love Jeff Booth's work. A lot of people have really inspired my thinking. And I joined a group called True North, and we started to research what is strategy doing, because it's they're going short fiat, long Bitcoin. It's the greatest trade ever in this current environment, and they're doing it within the bounds of the traditional financial system, and that has its own gravity effects, which we went through in the presentation. Unfortunately, we don't have time for that today. But I met Israel, our chairman for Melius, and he said to me last year around this time, Mason, I'm starting the first company in not only Brazil but all of Latin America to adopt Bitcoin as a treasury reserve asset, going on a Bitcoin standard, and we would like for you to join. And I thought it was an amazing opportunity to really have some real impact and leadership, not only in Brazil, but the global South in general, who I think could benefit immensely from adopting Bitcoin early. And I think they have the insight from the history in which they have lived of high inflation and at times hyperinflation that has destroyed wealth, has destroyed really generations of opportunity. And it's a tragedy. So what are we doing at Melius? Well, number one, Melius is a profitable operating business. We run an e-commerce platform in Brazil that has 46 million users. We're profitable. We do 18 million a year in trailing EBITDA. We generate $10 million of cash every year. And what are we doing with that cash? Well, we're trying to generate as much Bitcoin yield as possible, because we are on a Bitcoin standard. That's our main KPI. So we do two things. Right now, we are in the middle of a share buyback where we've announced that we're going to buy 10% of the free float. And what we're doing there is we're reducing the denominator, right? So the Bitcoin stays the same, the amount of shares reduces, hence increasing the Bitcoin per share. We were doing that because when we announced it in Q3, our operating business was trading at a value of 0, and we were trading below the net asset value of not only our Bitcoin, but our cash as well. So we believe that the stock was fundamentally too cheap, and this is a great way to generate Bitcoin yield. And then secondly, of course, when we're not buying back shares, we're just buying Bitcoin.
Yeah.
Right. And right now we have around 605 Bitcoin. And if you take our net income of last year of $10 million, right, and you look at how much Bitcoin we could buy today, and I invite viewers to do this exercise at whatever the current Bitcoin price is, our Bitcoin yield is going to be very significant, at least in the realm of all Bitcoin treasury companies comparatively. But one last thing, one thing that I'm really excited about is that we're actually integrating Bitcoin into our platform, right? So our platform includes things like cash back on purchases, both e-commerce and then also physical retail, where they scan a receipt and they get cash back on those purchases. And if you are a Brazilian consumer, and let's say you don't have a lot of discretionary income to buy Bitcoin, right? But you are someone who has to live. You have to buy groceries, you have to buy appliances, you have to buy clothing. What we are giving them, we are now giving them the ability to get Bitcoin back, right? So this is a way for them to stack Bitcoin doing something that they were already doing. And I think that's a really great product and a really great incentive structure for people in Brazil who maybe don't have the same benefits that we do as having, disposable income to buy Bitcoin with. Because really the majority of people in the world, are living paycheck to paycheck and don't have that investment capital. So at the margin, those things really matter, just being able to buy a little bit.
Well, Mason, I want to thank you for joining us today and for all the work you're putting into changing the world and bringing Bitcoin everywhere. So thank you again, and we look forward to having you back on.
Thank you so much, Pierre. I appreciate it.
And for our audience, thank you for joining us today. If you enjoyed this conversation, please subscribe on our YouTube channel and follow us on X at Bitcoin for Corps. And we'll see you on the next episode.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for corporations, is so high quality.
Bitcoin for corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for corporations may be the highest quality professional association in the digital asset space.
Again, you're just not actually buying Bitcoin. You don't get the sovereignty benefits of being able to actually control that money in the way that Bitcoin was built to be able to do.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, and today I'm joined by Trey Sellers from Unchained. Welcome, Trey. How are you?
I'm doing great. Thanks for having me. I was really looking forward to this.
Yeah, of course. We're happy to have you. We've got lots to talk about, but first I want to kind of hear, your background story, your journey into this Bitcoin world, and hear about Unchained and what you do there and what Unchained does.
I've been at Unchained a little over 4 years, and I came from a traditional finance background in banking. I was previously working for Truist in the capital markets business. I sat on the trading floor, was doing risk and P&L and sitting in between trade flows. Front row seat to all of the shenanigans of the fiat world, of course. And I think my Bitcoin journey kind of started way back in 2011. That's when I first heard about it. I was working at Goldman Sachs at the time. And I have this vivid memory of being in the gym at the Goldman Sachs building in Jersey City and listening to Free Talk Live, which you may be familiar with that.
Yeah.
And they were talking about Bitcoin. I was like, oh, that's cool. It's libertarian money. I jive with that, right? But I didn't do anything about that, unfortunately. Fast forward to maybe 2014 is when I first bought a little bit of Bitcoin. But I still didn't know what I was buying. It was finally easy to buy it. You could just kind of Coinbase, connect your bank account to Coinbase and start purchasing some. So I was doing a little bit then, but it wasn't until maybe 2017, 2018, 2019, that time frame where I think I found the right people. I found the Nakamoto Institute stuff and some of your writings, and for whatever reason, the algorithm at the time put the right people and the right topics in front of me. And then from there, I just became extremely convicted, and the rest is history there. So I became the Bitcoin guy at the bank in like 2020, 2021, and I was giving presentations around. I called it Bitcoin for Bankers, just trying to help them understand what the landscape looked like, what the market actually looks like what is Bitcoin in a way that they would understand, in language that they would understand. And then I was asked to join a crypto working group as the Bitcoin subject matter expert in 2021. The board of the bank was putting together this kind of just like an exploratory panel, right? They just wanted to understand what the landscape looked like. So that was a nice honor to be able to help these senior executives understand Bitcoin and all that. And then the opportunity at Unchained came up, and I couldn't refuse to do that, to jump into the Bitcoin world, work with Parker Lewis and Joe and Drew at Unchained to build something that's truly great, and I think has matured into a premier financial institution for Bitcoiners that operates very much at the base layer of what Bitcoin does. We've very much focused on making sure people have direct control over real Bitcoin, doing so in a way that's very fault tolerant, so that high net worth individuals and people with large Bitcoin balances are very comfortable holding those large Bitcoin balances and not feeling like they can't do it, because there's a collaborative manner here. We provide really great service, and then a suite of financial services that are built around that to give them the types of things that they need to manage that Bitcoin position over time, over generations, succession planning, financial planning, and that kind of thing. So yeah, it's really a kind of a comprehensive suite of financial tools for Bitcoiners, built by Bitcoiners, and operating at that base layer.
So there's some Bitcoiners that are perfectly comfortable holding their own keys. Others have a little more anxiety around it. Like, where do you think that anxiety comes from, and kind of that, the emotions around it?
I mean, it's scary at first, right? Because it's very foreign. I can remember back to the days of me first taking that Bitcoin off of Coinbase, first to a mobile wallet, and just like, I'm pulling out very small amounts, maybe $100 worth of Bitcoin or something. And I remember my heart like kind of pounding, because I just didn't know what was happening under the hood. And it's like, is this thing going to arrive? Oh, I see the transaction, but is it going to actually confirm? Like, what is going on here? And but that kind of starts the exploratory phase of understanding exactly how Bitcoin works. And over time, as you have more touch points, it becomes very easy to feel confident in using Bitcoin and controlling it directly. So like, we focus a lot on a very consultative way of engaging with our clients and giving them the types of educational tools, conversations, high touch points of interaction, so that they don't feel like they're having to figure out all of that stuff on their own, and that they can feel comfortable and confident that they're securing those keys in the proper way. And there are best practices that have come up over the course of the years as Bitcoin has matured, as people have started to develop really great ways of holding large amounts of Bitcoin and doing it in a way that's fault tolerant, that has succession planning in mind, and that can give people the peace of mind that they're not going to just make one mistake and lose their Bitcoin.
Right, because there's those news articles of this guy threw away his hard drive, and it has like X thousand Bitcoins on it. And it's a lot like flying an airplane. Like, if you make the wrong decision, there's irreversible consequences. So how does Unchained, like in practice, make that journey maybe a little less anxiety ridden?
Yeah, well, first of all, the way that our clients are holding Bitcoin is using private keys and hardware wallets and all of that, but we're using multi-signature, which is functionality that's built into Bitcoin, and we do this in what we call a collaborative custody manner. So 3 keys actually protect the Bitcoin all at the same time, and any 2 out of the 3 of those are needed to move Bitcoin out of this vault that we help them create once it goes in. This is functionality that's built into Bitcoin, right? So this is not proprietary. We're just leveraging that functionality so that our clients can have this fault-tolerant way of securing Bitcoin. We hold that 3rd key alongside them so that they retain full unilateral control over the Bitcoin, but that we're in a position to help them recover if something were to happen to one of those 2, or very importantly, if something happens to them, we're in a position to help with the transfer of the Bitcoin in accordance with their estate plan, so that their successors, their heirs, can actually get access to it. A lot of people very much value self-custody, and they should. There are trade-offs to everything, of course. And if you are holding a large amount of Bitcoin, with a single hardware wallet that's in your sock drawer, the only way to really deal with succession planning in that scenario is to like write down a treasure map of some kind. And you have to kind of fully trust the people that you are, wanting to manage that process for you, because there's a single point of failure in that. They could make a mistake and lose a copy of a seed phrase that you've given them, or a bad actor could get a hold of it or whatever. You need to be thinking about Bitcoin custody in a very fault-tolerant way and building in a reduction of any single points of failure. And that's how institutions and corporations think about this as well, right? They may or may not be actually holding keys directly, but they're always thinking about how can you eliminate that tail risk of catastrophic loss and drastically reduce the counterparty risk that you've got. Here, we just take that into account with the actual direct control for our clients.
And so for folks out there who, they might hear this and they think, well, I'm just going to go buy a Bitcoin ETF and that'll just make my life easy. Like, how do you position and how do you like assess the risks of that versus using collaborative custody with hardware wallets?
Yeah, I mean, you're buying something that's fundamentally different. You're buying shares in a fund. That fund, owns Bitcoin on your behalf, and you're paying a fee to do that. I think the average fee for the Bitcoin ETFs right now is somewhere in the like 20 to 25 basis points range. That gets very expensive over time, so that's one thing, right? There's a cost component that you need to consider. And again, you're just not actually buying Bitcoin. This is very similar to buying the GLD gold ETF. You're not actually buying gold. You don't get the sovereignty benefits of being able to actually control that money in the way that Bitcoin was built to be able to do. But there are trade-offs to everything, as we were saying. There's a spectrum of the way that people want to manage their wealth. There's a spectrum to the way that people understand Bitcoin and want to take advantage of those benefits that you get from holding the actual asset. And so, everybody has to kind of come to their own conclusion as to where along that spectrum they have their, understanding laying down, and perhaps there's a spectrum of allocation that they're actually doing as well. And I'll end on this for this particular question, which is that I see a lot of people come into Unchained and they say, Trey, I've got a very large position in Bitcoin through the Bitcoin ETF. But now I've done the work to understand why I want to hold actual Bitcoin, and I need you to help me with that. And so that's where that journey kind of takes the next step down the path of holding the actual asset.
They need in-kind redemptions, right? To really fully bridge that.
I would love nothing more than for the ETFs at the retail level to be able to
send it to a Bitcoin address.
Send it to a Bitcoin address, exactly. And
it seems inevitable, right? And vice versa too.
I don't think so.
You don't think so?
You think so? Really?
Yeah.
I see that as something that is available for institutions. I don't really see them making that available. Maybe this is a pessimistic view. I like to be an optimist, but
Well, so let me make the case for that, okay? Which is that they want to gather assets as well, and in past roles at past companies I've been in, I've heard these debates about. How do you gate withdrawals? How do you charge a lot of money for withdrawals? And the reality is that a lot of customers, they want to know that they have the freedom to exit, and that'll actually make them more likely to enter and to leave their assets there.
Having that optionality is a huge reason to not buy the ETF, at least at this point in time, right? It's like if you're not ready to take control of your keys, understand that, right? Like I get that. Find a custodian that you do actually trust that will allow for that withdrawal mechanism, so that when you're ready, when you've done that extra intellectual work, when you've talked to the Unchained team and understand exactly how this can work for you, so that you can get the sovereignty benefits as well as the number go up benefits that Bitcoin provides, you'll have that option available to you. So that's the way that I think about it, and the way that I talk to potential clients and clients about what that allocation could look like.
Isn't there a tax implication as well? Like if you buy the ETF, it goes up in value, and then you want to get real Bitcoin, you sell the ETF, you buy the real Bitcoin, you've got a capital gains tax on
Absolutely.
that, or is that a wash?
Absolutely, right? Unless it's done in a retirement account.
Okay.
Unchained has IRAs.
Oh,
And so we do have a lot of clients who come to us and say, I bought the ETF in my IRA at traditional company A, and I want real Bitcoin in there. And that's something that Unchained does. And so there is this process of having to sell the Bitcoin or the Bitcoin ETFs for cash, transferring it over there. It takes a little bit of time to do that when you're dealing with the traditional financial system. But they have the ability to roll those or transfer those assets from a traditional firm IRA into an Unchained IRA and hold the keys to the Bitcoin in that same collaborative custody manner. If you're not doing it in a retirement account, there is that tax implication, right? If Bitcoin has gone up, you've got a capital gains that you need to kind of account for when you are transferring from the ETFs into real Bitcoin.
Yeah, and I've talked with a lot of Bitcoiners, and they're like, they do both. They've got real Bitcoin, they've got ETF, they've got and for them it's kind of like just covering all their bases. So that's a really interesting. So how did Unchained start? Kind of what's the origin story, and what's kind of been the journey to where it is today?
Yeah, Unchained started back in late 2016 and call it early 2017 with the launch of the initial product, which was a Bitcoin-backed loan. And the founders, Joe and Drew, kind of realized that over time, this was first of all, a very popular product. People want to get liquidity from the Bitcoin that they hold without having to sell it and take that tax hit and all that. And they want to maintain exposure over a long period of time to the asset while still being able to use it to be able to fund their lifestyles, right? And so they launched these loans and then realized that, hey, the collateral security on what you're using to collateralize these loans is actually very important, and Bitcoiners care about that. And so this collaborative custody model was a great way to allow our clients to actually participate in the custody of the Bitcoin and keep them as close to the Bitcoin as humanly possible in this type of loan scenario, so that they can verify that the Bitcoin hasn't been moved or commingled. It's not some kind of like black box situation where you give your Bitcoin to some random crypto company or whatever, and you have no idea what they're doing with it, which caused a lot of problems a few years ago. And so that loan product, very popular, grew quite a bit, and then we realized, well, this custody model works really well for people who just want to hold Bitcoin as well. And so that's kind of the birth of the Vault, where it is that true self-custody model in a collaborative manner with Unchained holding that third key. And then the natural outgrowth of doing that is that people want to be able to buy and sell Bitcoin and make that easy within the platform. They want different account types, right? So we have personal accounts, trust accounts, business accounts, IRA accounts, as I mentioned. And we've got these commercial Bitcoin-backed loans. We don't operate in the consumer loan business these days, but if you've got an entity like an LLC or some other type of operating business in a business account with us, you can access that liquidity for making investments or business purposes as well. So this comprehensive suite of financial services is really what Bitcoiners are after when they think about this long-term asset, long duration asset that they want to be able to pass on to future generations, but they need to make sure that they're doing it in the right way from a custody standpoint and can be able to get access to the other financial services that they want to be able to do.
So on the Bitcoin-backed lending, you mentioned that there's this risk of you send the Bitcoin to the lender, right? And then they lend you the dollars. Let's say it's like 50% LTV or something. Fast forward a year, you pay off the loan, and the Bitcoin might not be there because they went and did some other shenanigans. They lent it out or something.
They lent it to a short seller,
right,
on the exchange or whatever, right? And the Bitcoin's not actually there.
To earn some yield or something, and then we've seen that fall apart a few times. And so Unchained doesn't do that by using multi-sig.
Well, within the loan agreement, there is no rehypothecation. you can verify that the Bitcoin is actually where you expect it to be from the fact that we're using this collaborative custody model and you hold a key. So it's not even that you have to trust us, like, hey, here's your Bitcoin, you can see it in this address somewhere. It's that you can actually cryptographically verify that you're participating in the custody of that Bitcoin. Now, you only hold one key out of the three. So you can't, obviously it wouldn't make sense
because the
for you to-
lender would be worried about you taking the Bitcoin and then they're left high and dry without the collateral.
Right, exactly. But what the benefit that you get is knowing that that Bitcoin is segregated, is there where we say it is, that hasn't been moved, like I said, hasn't been commingled with other people's Bitcoin. And according to the loan agreement, there is no rehypothecation. We're not taking that Bitcoin and then placing it with a custodian, which is kind of a soft rehypothecation in and of itself. And you can't see where that Bitcoin actually sits at that point in time. And there's various ways that people, other lenders provide some assurances to their clients to help them feel more comfortable with the security of the Bitcoin. But the further away that Bitcoin is from you and your direct control, the more risk is involved in entering into that loan contract, right? And so, as I said, our goal is to keep our clients as close to their collateral as possible in this loan perspective, and then obviously all of these other tools work together very nicely and very well to give you that full suite of financial services.
In the space of lending, we've seen a lot of lenders go into like crypto lending, right? And then they're doing like Ethereum collateralized. Why has Unchained not gone in that direction?
Unchained used to provide Ethereum-backed loans, actually, very briefly and very early on. And there's a couple of reasons that we decided to move away from that. One is that it just made up a very small amount of the actual overall loan book. It was like less than 5%. And the other side of this is that there's a huge, like, to do it in the way that we want to do things, keeping people close to their collateral, having this collaborative custody type model, it's extremely technically, operationally burdensome to be able to support multiple assets. Bitcoin has multi-signature built into it, as I was saying before, and it's a very clean way of doing this collaborative model when it comes to the custody. And so when you focus on just that from a technological perspective, the business side of this, the operational side of this becomes much more clean. And so, we've made the decision from a technical perspective to focus on Bitcoin because that allows our business to operate much more cleanly and to be fully focused on the security of the Bitcoin for our clients, which is typically speaking the majority of what people hold. There's a philosophical reason that we do that as well, right? Like, if you think about any endeavor, any type of like time or capital that you're going to commit, you want to make sure that that is being done to the highest and best use. And we look at the broader crypto market and see Bitcoin as fundamentally different than the rest of the crypto world, and something that has staying power and is really like philosophically aligned with the way that we see the world and the way that we see the world going. And so it doesn't make sense for us, in our view, to focus or disperse our focus across all these other assets. Let's focus on the thing that's going to have the biggest impact in the world, the thing that has the largest TAM over the course of the next 10, 20, 50 years, and grow the business in that more focused way.
Yeah, that makes sense. Now, you mentioned that you no longer do consumer loans, you only do business loans. Kind of what's the thesis behind that, and what purposes have you seen businesses use this cash flow management solution?
Yeah, so as I said, we do commercial loans for business or investment purposes. And so if you've got a business account with us, you've onboarded an LLC or some other type of business entity, you can borrow 50% loan to value against the value of the Bitcoin for business or investment purposes. That's a pretty broad brush, right? Some people are buying more Bitcoin with the loan and taking kind of a levered position there. It's an investment. Some people are buying real estate. Some people are have actual operating businesses where they are using that capital to purchase inventory, get through like busy seasons for bridge seasonal businesses, bridge financing. A lot of real estate investors find this very interesting tool to purchase real estate and close very quickly with cash, and then go through the bank financing process after they've been able to move very quickly on making that purchase for the real estate. Because as we all know, if you go directly to a bank for bank financing on a commercial piece of real estate, it's going to take 3 months at least to go through that underwriting process, and it's a ton of paperwork and it's a headache. Whereas you can come to Unchained and be funded in, call it 3 to 5 business days, take that capital, purchase the property with cash, and then go through that refinancing process in the timeline that it gets. Why did we move away from consumer loans? We looked at our loan book, and the majority of it was coming from the commercial side, the business side of things. And so similar to the way that we were just talking about our focus on Bitcoin as opposed to the larger crypto ecosystem, there's an operational consideration to say, hey, if the majority of the business that we're doing is coming from this anyway, and having a lot, like a much larger in terms of count of loans on the personal side that are very small, the same operational burden exists for that small $10,000 loan as it does for a $150,000 or a $500,000 or a $3 million or $20 million loan on our side. And so it really was just a business decision on highest and best use of capital for Unchained and looking at the way that we approach the market.
With AI automation, maybe y'all will go back into retail, but
who knows?
Who knows?
Yeah, hard for me to speculate exactly how we will see things going and decide to react to it. No plans at the moment that I'm aware of. But yeah, I mean, I could definitely see that happening potentially in the future.
And then for businesses that are taking on this financing, kind of generally, what are the terms? Is it like a 1-year term loan, and what kind of range of interest rates should they expect?
Yeah, so we have this collaborative custody model, and there's a 2% origination fee. There's a 12% interest rate on it. It's 50% loan to value, and we have a $150,000 minimum. So the APR on that total loan is 14.18%. It is 360-day term loan, and they're interest-only payments on a monthly basis. So every 30 days, we're drafting that interest payment from the business bank account that's connected to that loan, and then or to that business account. And then at the end of the loan term is when the principal is due. A lot of our clients will choose to refinance that and just roll it into a new loan and start that process all over again. So that's the general terms that are on those loans.
And then the underwriting process, it's just how much Bitcoin do you post as collateral? It's
basically,
not going through your income statement and all of that.
Yeah, that's right. So you're onboarding an entity, and so there's KYC associated with the entity there, of course. We're making sure there's no liens on the business that would otherwise encumber the Bitcoin that's being used as collateral. But as long as that stuff checks out, then there's no personal underwriting that's happening there.
That's interesting. And has this been for private businesses, or have you even seen public companies use this product?
Yeah, absolutely. We work with a range of business clients, anywhere from a high net worth individual with an investment LLC that he's using to manage wealth, all the way up to large corporations and public companies. Our client base tends to skew into that call it small to medium sized business or high net worth individual with the LLCs. But we do have some large corporate and public company clients. And of course, the purpose of those loans varies based on the profile of that client. So a larger company is typically using those to actually fund operational things or investments in perhaps real estate or other business lines. And then those people who are more using entities to manage their wealth for whatever reasons they're working with their estate planners or tax planners on, they might be using those for taking a levered position on Bitcoin or buying some other assets as well as a diversification play.
Really interesting.
Yeah.
So now if you're 50% LTV, Bitcoin price is now down 50% from the all-time high.
Yeah.
That all-time high was for one day, right? 124,000, I think.
Yeah.
So, as the lender, does that make y'all nervous? What processes do you have in place to manage that risk?
Yeah. So one thing that maybe I should have mentioned before is that Unchained has been in operation, as I mentioned, doing Bitcoin-backed loans since 2017. We've had 0 loan losses for the capital providers on these loans. That starts with a conservative way of approaching things. 50% LTV is actually very conservative. It used to be 40%, and as the market evolves and we expect Bitcoin's volatility to shrink a little bit, right? You can kind of change the way that you approach that market, but it's still very conservative at 50% loan to value. We're extremely high touch with our clients. And so if you've got a loan with Unchained and the price drops 25%, you're going to be in a position where we're asking for some action from you. But well before we get there, we're on the phone, we're proactively communicating to make sure that our clients understand the situation at hand, that they understand their options, they know what the process looks like for sending in more collateral to kind of bring that, the way we think about it is collateral to principal ratio. So at 50% LTV, you're starting at 200% collateral value versus the principal. And when that violation of this CTP ratio happens, and we're asking for more collateral or some other action, we're asking them to bring it back up to that 200% collateral value versus the principal. On the weekends, that might mean only being able to send Bitcoin because the fiat financial system doesn't work on the weekends, right? And so this collaborative manner that we deal with our clients across all of these financial services that we offer really shines in these loan scenarios where we're on the phone and just making sure that people understand what they need to do to protect the loan that they've got, perhaps pay it down, perhaps recollateralize it, or whatever they choose to do with that.
Yeah, that makes sense. And if things get really hairy, then there needs to be a liquidation of sorts of the collateral.
Yeah, if the client is unresponsive, or there's just drastic drawdown without that action that we're asking for within the specified time period, then we can take steps to liquidate the loan. That's just part of the loan agreement there. Unchained is holding a second key as part of that collaborative custody model, and then we work with a banking partner who holds that third key as a key agent there. And so the loan agreement is stipulating the terms with which we can take steps to liquidate either in default of the loan or these types of collateral action type situations. Up until that point, the client is kind of in full control of this loan. The title stays with that entity, and it's only under those specified circumstances that we're able legally to take any action to move the Bitcoin to sell it down to cover the principal on the loan.
Right. Yeah, that makes sense. And so now let's zoom out and look at here at Bitcoin. Some people say they're disappointed by the previous bull market and even the one before that, for that matter. And here we are now, seemingly in a bear market. What do you think is going on? Is the fundamental thesis for Bitcoin changed?
I don't think so. I don't know what's going on, if I'm being perfectly honest. I think a lot of people are kind of befuddled at the bifurcation of the market, so to speak, with Bitcoin seemingly stronger than ever from a fundamental standpoint, with the support from the administration, with the Bitcoin treasury companies and strategy and the ETFs and all the other institutional demand that we've seen, with the mindshare expansion for what Bitcoin is and the fact that it's here to stay. I mean, there has absolutely been a phase shift of people looking at Bitcoin skeptically and just saying like, I don't even understand at all what this is, to now, like, at least in my friend group and the people that I talk to, everybody knows what Bitcoin is. Nobody thinks it's like going away tomorrow. Right. There's a phase shift in the mass understanding of Bitcoin as something that is here to stay. Gold has been screaming higher, silver doing similar types of things. The debt continues to explode, deficits continue to explode. All of those macro factors seem like they should be extremely bullish for Bitcoin, and I think they still are on a very long time horizon. But I think there's a lot of very intricate operations under the hood of this macroeconomy that is causing the market to look at it as, well, one, still a risk asset, and so we need to sell that. I think there's some of the AI trade that's pulling capital away. And I think that gold is sending some type of warning signal, you know, that nobody quite understands exactly what's happening there, but we can definitely see a phase shift. It's not normal for gold to do what it's been doing, right? And central banks have been buying and that kind of thing. So I imagine we will look back a couple of years from now and be like, oh yeah, well, that's what was happening. I know there's this thesis about OG Bitcoiners selling their stack as it reached 100,000. I think that seems to be some truth to that. But it's just this like broad mix of things that's very difficult to pinpoint any particular reason as to why the Bitcoin price has done what it's done. That said, if you are kind of early in your Bitcoin journey and you're taking a long-term 10-year, 20-year time horizon, I mean, this is a blessing, right? Like for the people who may be later in their years or their careers and were looking to retire, you know, at $126,000 Bitcoin, this is a little bit tough, right? You've got that sequence of withdrawal risk. But for anybody who is trying to build their stack, like in my mind, look at this as a blessing because I kind of didn't think that we'd have this opportunity again. I'm glad to be proven wrong on that.
Unchained has done some great research on HODL waves. Do you want to explain kind of what HODL waves are and how they were able to get visibility on that?
Yeah, well, HODL waves is a visualization of the data that is in the blockchain as to when Bitcoin moves. So as you're aware, as the audience may be aware, everything that's happening on the blockchain is very visible, right? Anybody can run a node, can pull data from that node and see the time, the date, the exact moment when Bitcoin moved or last moved. And that actually provides some very interesting information if you map that time frame to a particular price. And so the HODL waves shows the distribution of when Bitcoin last moved across the entirety of the supply. And so you can start to see patterns of Bitcoin that hadn't moved for 10 years versus 5 years versus 6 months and see what that distribution of ownership actually looks like based off of the distribution of when that Bitcoin moved. So we can start to see, the Bitcoin that hadn't moved for 10 plus years, we're seeing a lot of that start to move. And the inference there is that these OG Bitcoiners that have had Bitcoin there, that they were just sitting in cold storage, are now taking profits potentially. They're moving it into exchanges to sell it and take some of that profits. And so is it an exact science? No. It's a data science, and you can kind of start to glean and make inferences as to what's going on under the hood by looking at the data there. And yeah, Unchained kind of was one of the pioneers around looking at this data and providing some really great visualizations there. You can go for the audience to our website and just search for HODL waves, and you should be able to see that. We also have something called HODL caves, which is more of a price distribution visualization. I won't go into the details here on that, but that's definitely really cool as well. You should check it out.
Yeah, excellent. Well, I always like a good chart, so I'm grateful for Unchained putting that together.
Yeah. I think the Bitcoin community, generally speaking, loves data and charts and stuff. It makes us feel good about our thesis, whether there's chart crimes happening or not. So you got to be careful what you look at.
Yeah, absolutely. And so, when you mentioned the kind of one of the theses behind Bitcoin-backed lending is so that you don't have to sell the Bitcoin. If it's true that you've got OG whales that are selling, is it because the amount of financing that they would want is just far too great, or that they just want to take some chips off the table and rebalance, as we say in the financial industry?
Well, everybody's got different financial situations that they are working with, right? And I think, generally speaking, Bitcoin-backed loans are scary to a lot of people. A lot of people don't like any debt at all, which is perfectly reasonable, right? When you enter into a Bitcoin-backed loan, you kind of are already selling that Bitcoin, but there's a whole lot of variables that go into that calculus, which is that you don't know when you're going to sell it. You don't necessarily know at what price you're going to sell it. And
you're going to need cash to pay the interest anyway.
You need cash to pay the interest. So it's kind of like a forward sale of the Bitcoin with all these unknown variables happening. And you can, like a lot of people take this approach of, I'm going to borrow against the value of the Bitcoin and I'm going to refinance, into perpetuity, and I'm going to let Bitcoin's natural price appreciation take care of the principal on that loan over a long period of time. And it just gets easier and easier to pay off that principal. But ultimately, like in order to close out that loan, some amount of capital has to come from somewhere in order to pay down that principal. It works the same way in mortgage land, right? People buy homes and they finance those homes, and they kind of expect that the depreciation of the dollar is going to help make that debt easier to pay off over the long term, and that the appreciation of their house is going to also help them be able to pay off that debt over the long term as they are, looking at the value of that home relative to the outstanding debt.
And do you think that like commercial banks that originate mortgages, are they going to start originating Bitcoin-backed loans, or is that not on their radar?
I think it's on their radar. I think a lot of people expect that they will. I worked at banks for a very long time. I pitched Bitcoin-backed loans back in 2020 and was essentially, not actually laughed out of the room, but like it was not at all taken seriously. I think we are in a different market environment and understanding of Bitcoin, as we were talking about before. So will banks lend against Bitcoin? I think for maybe their like private wealth type clients who are looking for that type of asset-backed lending, that's a possibility. Are they going to start lending against Bitcoin more broadly in consumer banking? I have my doubts. And if they do, it's going to be a while.
Right. Yeah. And now I've also heard people say that they like the ETFs because then they can do a margin loan against the ETFs. And so how do you see the trade-offs between that? I mean, obviously you lose the sovereignty. Are the loan terms different and kind of the mechanics of that?
Yeah, it varies from broker to broker. The margin requirements for any kind of like equity-backed financing that you might be doing is going to vary from broker to broker. And we've seen actually people who were borrowing against the value of their MSTR stock. I know you're asking about the ETF, but this is a
proxy,
a Bitcoin proxy where these brokerage firms would just kind of overnight change the margin requirements to be extremely, a huge penalty on it. It's like making that trade all of a sudden be very much unaffordable and disadvantageous to doing it, and basically forcing them to sell and liquidate that position in order to cover the margin requirements. And so that is one thing to keep in mind, is that, as the understanding of Bitcoin as an asset, generally speaking, is still in its infancy within a lot of these banking institutions and brokerage firms, they may choose to take some kind of drastic action that is adverse to you if they feel like they're out over their skis a little bit too much when looking at the market. And there's nothing you can really do about that, right? You just have to be aware of this as a possibility.
I'm assuming Unchained doesn't change the LTV requirement during the life of the loan.
It's a term loan.
Yeah.
And so that LTV requirement and all of that is built into the term of the loan. So no, we can't just jack that up or down or whatever during the life of the loan. That doesn't mean that we couldn't change our LTV requirements
when you're
refinancing a new loan and all of that. So, again, this is a financial contract, and to understand what's going on under the hood and ask those questions, and we're more than happy to help dig into those details. But no, we can't. It's not a margin loan, right? In the same way that we're talking about with the ETFs or with any other stock that you might have in a brokerage account.
Yeah, that's really interesting. I had heard about that kind of rugging of stock-based lending.
And rest assured, these banking institutions and brokerage firms have a lot of information at their disposal. They can see what's happening in the market, right? And they can they've got a broad client base with which they're trying to support. And so you may or may not be in a position to be able to dictate terms with them. Odds are you probably aren't, right? So you just got to take that into account.
Yeah. Now, we've seen a lot of Bitcoin custodians go down the route of becoming a bank. And is that something that is on like Unchained's roadmap, or is that just a different segment of the industry?
I think it could be on the roadmap. I'm not aware of any, active considerations in that regard. Obviously, there's a very rigorous process, and it introduces a whole lot of other dynamics when it comes to like the compliance and regulatory infrastructure for which Unchained is regulated and that kind of thing. So, is that a possibility? I would say, sure, it's a possibility. Is it something that we're actively pursuing? Not at this time, but who knows how things will shape up. I think it's interesting that a lot of these exchanges and other places are doing that. I mean, and I kind of don't blame them, right?
Yeah.
Like, banking has its privileges. You get to print your own money.
Yeah.
We've talked a lot about the loan book. The cost of capital for a non-bank is much higher than a bank because a bank gets to print its own money when it's issuing that loan. We can't do that, right? We have to go out and source capital from investors who understand Bitcoin well enough to know that it is a pristine collateral asset that is very well, a great instrument to back these types of loans, but they don't understand Bitcoin quite well enough to know that they should just be buying Bitcoin with that cash.
Yeah.
I say that in jest, right? But
Well, yeah.
But there is kind of like a sweet spot there
Yeah.
of people who have capital available and they want some higher returns with an asset that they understand to varying degrees. And I think that's continuing to mature.
Yeah, and it brings up a really interesting topic of kind of the volatility of Bitcoin, where it seems like now with the advent of, for example, the perpetual preferreds that Strategy is offering, that there is this bifurcation of, do you want to earn 10, 12% in terms of dollars in a psychologically safe manner?
Yeah.
Or do you want to embrace Bitcoin's volatility and also have kind of that asymmetric upside that comes with that? How do you think through that? Is it about what age you are, or how well you understand Bitcoin?
Yeah. So I, as a kind of personal project, have a newsletter called Fire BTC, and I talk a lot about financial independence and retiring early and using Bitcoin as kind of the core asset there. It depends on where you're coming from and what you're comparing it to. In my personal view, I don't want to sacrifice like long-term total return for income in the here and now. I'm perfectly fine with that volatility, and the way that I think about it, personally speaking, is that volatility is solved, so to speak, by just having a larger amount of assets.
Right.
If let's go like way out on the hypothetical, if you're sitting on $1 billion and it goes from $1 billion to 500 million, like for me, that's probably okay. I'm okay with that result if I still have $500 million worth of any assets, right? So that's obviously like an extreme example, but that's how I think about it. A lot of people don't want to take that volatility, don't necessarily understand the long-term prospects of Bitcoin in the way that I think I do. And if you're comparing something like Stretch, which is paying 11.25 in this past month, to something like the S&P, well, the S&P 500 has in the last 20 years had an average growth rate of around 10%. And so, but you also have to deal with the volatility and the market dynamics of that index over that period of time to get that 10%. If you can be confident in the structure of Stretch, of STRC, and you feel confident enough that it's going to be around in 10, 20 years and that it will continue to pay a dividend in that similar type of range, why wouldn't you consider that for at least a portion of your portfolio? Why would you take on the volatility of the S&P 500 for a similar return if you could have the same return without that volatility there? So it's a calculus question, right?
Yeah.
Of what am I comparing this to? Everything has a trade-off. Everything has like a hurdle rate for the value of the investment that you are considering versus whatever other options are out there. So that's how I tend to think about things.
And I've talked with people who have like cognitive biases where they'll look at the Bitcoin chart and they'll be like, I'm going to wait for it to go down before I buy it. And then it doesn't go down as much as they want to, or they forget about it and then they never buy it, right?
Or they're watching it. They see it go down.
But then they get scared.
But then they get scared, right? Because it's gone from 126,000 to 60,000. Well, of course it's going to go lower. It's going to go to 40 or 30,000. I'll buy it there.
Yeah.
And then if it were to get down there, they wouldn't buy it then because then it'll be going to 20 or 15. Like it's tale as old as time.
Yeah.
100%.
Yeah. And so it seems like the stretch is like a hack to get around this cognitive bias. It's almost like people are financially punishing themselves long term because they have that kind of wrong intuition about looking at the chart instead of looking at the fundamentals, which have never been better.
I like stretch. I own a little bit of it, just as a disclosure, I guess. Most people don't know it even exists, right? And so like if you think about the normal person out there who's considering their options, they know Bitcoin exists. They don't even know strategy is a thing, probably, right? And they definitely don't know about the suite or menu of preferred equities that have been issued and understand the inner workings of STRC. So, you know, it's a 6-month-old or less product at this point. Over time, I think like things as they are seasoned tend to obviously have a little more surface area for the people who are knowing about them and then being able to take that into their calculation of what they're looking at, right? So, and it also, of course, gives confidence in the ability for STRC to stick around and people to see, oh yeah, this is now operated for a year, 2 years, 3 years, 5 years, and been able to consistently be able to pay out these dividends despite the various fluctuations in the Bitcoin market and what people think in their minds would be affecting their ability to pay those.
Now, I do find it interesting that the dividend rate and the interest rate on Bitcoin-backed loans, they're like in the same ballpark, right? Of let's say 10 to 12%. Do you think that those are both going to go down as more capital finds its way into the Bitcoin ecosystem? I
think it's logical to expect that it would.
Yeah.
We were talking about banks coming in and providing capital for this. We're definitely seeing some of that and having some of those conversations. As banks come in with lower cost of capital because they can print their own money, it's going to drive rates lower, right?
So mortgage rates today are like 5%, 6%?
Yeah. They've been 15% in the past, right? And they've been, 2 3/4 as well. So
now, granted, they have a government guarantee.
Yeah.
I don't think we'll get like 90% LTV on Bitcoin with a government guarantee anytime soon.
Yeah, the mortgage market is very interesting because it has so much. You're saying guarantee, and that's part of it, but there's just a whole infrastructure of government support that goes into the market for mortgages, and it's just such an old and established market as well that people understand. And Bitcoin is 16 years old. Bitcoin-backed lending is half of that, basically. And again, like there is an education process that comes into play when you're talking to capital providers who are looking at various investments on their menu that they could be putting their dollars to work at. And it takes some time for them to understand Bitcoin and why it is such a good collateral asset, especially when you're doing it at 50% loan to value in the way that most people do.
And now another topic I've heard people bring up with Bitcoin-backed lending is like these DeFi platforms. Like I've heard the name Morpho thrown around of, oh, you can just use that instead of using a traditional Bitcoin lender. How do y'all position Unchained relative to kind of that ecosystem?
Yeah, I mean, it's fundamentally different, right? The way that we're doing it is very straightforward. You're providing your collateral into a Bitcoin address where you control a key and you can see it and verify what's going on there. You don't need to understand the code of what's going on underneath the hood there. If you start to play around with some of these DeFi protocols for Bitcoin lending or whatever, you've got to understand what that contract looks like. And you've got to be very confident that the way that it is structured does not have some type of like bug or backdoor in it that might cause you to lose that collateral, despite the fact that you are in good standing with the loan contract as it states. So, you know, I don't think I guess like in some ways we're competing with that. I don't think that people for the most part are like really going down that lane to look for Bitcoin-backed financing in the way that I think a lot of people kind of expected that market to develop. And there's just been so much craziness going on in the crypto world over the last few years that I think people take a very rightfully skeptical eye to those options.
Because as you mentioned with Unchained, it's like human high touch. With these DeFi protocols, it's all, you know, automated, but you don't know exactly how it's automated.
Exactly.
And when something goes wrong, who do you go to?
It's sold as open and transparent, but like unless you've got very specialized expertise in understanding exactly how those contracts are formed and are operating, it's still a black box to you. It's just that now all of a sudden you've got a whole host of unquantifiable and unseeable risks that are out there for that collateral. So, you know, I walked you through the terms on our loans. They're more expensive than a lot of the other options out there, but that's because we're providing a fundamentally better security for the collateral that underlies those loans. And you know, most of our clients, they come to us because they care very much about the custody aspect of this whole thing. It's like, I'm okay paying, you know, 100 basis points more for this Bitcoin-backed loan if I can get much better assurance that the Bitcoin is actually where I expect it to be.
Yeah. Now, earlier you mentioned FIRE, financial independence, retire early. Historically, what I've seen from that community is that they're very skeptical of Bitcoin.
Yeah, they still are.
They still are, okay. What do you think that's about?
So a lot of the, call it FIRE influencers.
Well, do you want to explain like what FIRE is?
Yeah, sure. So financial independence, retire early. It's a way of approaching personal finance that kind of looks at the world as there is a way to be very intentional about your spending, maximize the savings rate that you have, and then plow all of that extra savings into assets that are growing and compounding in a way that can help you build a portfolio to fund your lifestyle and your expenses. And there was
before you hit 80.
Before you hit 65, which is the traditional you know, retirement age. And so
for me it's 80, but
for you it's 80. For, you know, different strokes for different folks, right? People think about like the normal career is you grow up, you go to college, you get a job, you work, you know, 40 years, you retire at 65 with a pension or something like that. The FIRE community looks at this and says, well, that's not the only way to approach this. I could actually bring that retirement age much closer to the present if I'm very intentional about maximizing my savings. And if I'm taking that savings and investing it in the S&P 500 is kind of like the preferred choice, or broad stock market indexes. And having that compounding happen such that the portfolio grows to a level where you can peel off a small portion of it. You can sell down a small portion of it every year to cover the expenses that you have. There was a study called the Trinity study back in the 90s that looked at over 100 years of stock and bond market information and did a whole bunch of data testing, data analytic type testing on portfolio allocations to see, okay, what is the actual safe withdrawal rate over a 30-year period that would allow you to never run out of money, basically, in retirement if you're just living off of those drawdowns. And the end result of that study was what's called the 4% rule. And it basically states that if you reach 25 times your expenses and you draw down 4% of your portfolio every single year to cover those expenses, in almost all cases, looking at historical market behavior, you will not run out of money after 30 years. And in fact, in most cases, you end up with far greater amounts of money because of that compounding effect. Why look at that and say, stocks are great. I love this FIRE methodology.
Saving is good.
Saving is good, but Bitcoin is better, right? Bitcoin has a higher compound annual growth rate, at least over a long period of time, we expect. And it provides extra benefits beyond just this like traditional view of financial independence, which is that you can actually own your money and control it directly and not be at risk of the brokerage account that you're using being shut off and access to you. It's more widely available across the world, right? Like the FIRE community typically takes a very US-centric view on things. Most of the kind of influencers in that space are from the US, but the rest of the world doesn't necessarily have access to the S&P 500 or to any stock market at all. And but they do have access to Bitcoin as long as they've got an internet connection, right?
Yeah.
And so it's a much more, it's a better asset for the pursuit of FIRE in a lot of different ways. And during my time, my Bitcoin journey and my FIRE journey, those two things kind of came together for me. I was pursuing the FIRE thing, using stocks. Once I became convicted in Bitcoin back in those like early days of 2017, 2018, it was like, well, I want to buy this for my FIRE strategy. And I just kind of like 100% shifted the future allocations that I had toward that Bitcoin lens to bring that in there. So that's what I'm writing about on the in the newsletter, is like, how do you take this FIRE methodology, this FIRE approach, and incorporate Bitcoin into it? And what are the different intricacies with which you should be thinking about that using Bitcoin versus like the traditional way of doing that? Why did the FIRE influencers hate Bitcoin? So the very first newsletter that I wrote is called Why Bitcoin is Stupid. And it's a play on one of these influencers' name is Mr. Money Mustache, is what his handle goes by. And he wrote this blog article back in 2018 when Bitcoin was around $14,000 after it had that blow off top. And it was called Why Bitcoin is Stupid. And it was all the same FUD and whatever. And you know, Beanie Babies and Tulip Mania and all the stuff that we've heard a million times. It's very difficult to make those types of calls publicly and then come back around and be like, oh guys, I was wrong. You know, Bitcoin just went from 14,000 to 126,000. Like maybe there's something that I missed here. It's very difficult for anybody to do that in a public way. And I think, you know, it's the rest of the FIRE community, like a lot of places, they look at those intellectual leaders as people that they should follow, and that permeates out there. So there's still a lot of skepticism in the traditional FIRE movement. I think you know, that's broadening out. I've certainly seen that since I've started you know, working on this content and doing this over the last year and a half or so. But you know, ultimately, I don't really focus on that community as much as I focus on Bitcoiners who can also learn a lot about the pursuit of financial independence and having a very intentional plan for how they manage their personal finances and approach that from like a family decision standpoint.
So today, a lot of people, even who have a high income, are living paycheck to paycheck.
Yeah.
And so, you know, as we wrap it up here, I want to hear kind of how you think about what it means to be intentional about your spending so that you're not paycheck to paycheck and you are accumulating Bitcoin.
Yeah, it's very easy to waste money on all kinds of frivolous things that don't actually provide value to you in your day-to-day life. And sometimes these things like just stack up and you don't even notice them, right? Like the kind of perpetual example is the subscriptions things that you signed up for. You signed up for the free trial, and then 2 years later, exactly. 2 years later, you forgot to cancel it, and it's still just stacking up, and you've got like 10 of these things. So you know, it always starts with spending, because that's the thing that you can control very intentionally and actually has a very like compounded effect on the amount of money that you actually need to retire. If we're talking about this 4% rule and using that as the metric, what that means is that every dollar that you cut out of your expenses is $25 less that you have to save in order to reach that retirement. So that actually, it has a very meaningful impact on your ability to reach financial independence at a much earlier age. And then the other side of things is like, over time, your income should naturally go up, and you can take active steps to provide more value to the world, bring in more income, and if you are very intentional about your spending and how you're approaching that, you can widen that gap of your income versus your spending. You can increase that savings rate, and then have a plan, have intention about taking that extra savings and buying these assets like Bitcoin, like stocks, or whatever your asset of choice is, so that you can get that compounding engine working for you early in life. The earlier you start, the longer you do this, the faster that grows for you, and the sooner you can get to that place of financial independence. And that may not mean like retiring and going to play golf every single day, which sounds great to me for a little while. A lot of people would get bored there. But what it does enable is optionality for how you spend your time, what you work on, the passions that you have, the businesses that you'd like to build, the travel that you'd like to do, spending time with your kids when they're young, all of these things that people like think about in different ways. But the key point is get to a place where you're in strong financial standing, where you've got control of your expenses, where you're widening that gap and increasing your savings rate, and put that optionality in front of you, so that if you do come to a place where you hate your job, you hate your job, and your boss is terrible, you can just walk in and tell them, I'm done.
Or AI takes over your job.
Or AI takes over. That's very likely.
One, but
very likely.
Yeah, very likely. All right. Well, Trey, on that note, it was really wonderful to have you on the Bitcoin for Corporations show.
Loved it. Thanks for having me.
Look forward to having you back on at a future point.
Anytime. Anytime.
It was really great to learn about what Unchained is doing and hear all of your insights. So thanks for coming on.
Very good. Thanks a lot, Pierre.
And if you enjoyed this episode, join us for the next one by subscribing on YouTube and also sharing it with your coworkers, friends, family, enemies as well, right? Love your enemies. And follow us on X at Bitcoin for Quartz. Thanks you again for joining us, and looking forward to the next episode.
I want to know how you take 1 million strategies and decide which one you're going to trade today. That'd blow my mind. I got like 5, and that's stressful enough.
Good morning, everybody. I want to welcome you to the Bitcoin for Corporations live stream. My name is Jake Fenton. I work here on the client services side at Bitcoin for Corporations. And we've got a really exciting show today. I've got Tim Darrah from Mangrove Technologies and Marty Kendall from mNAV.com. What I'd like to do is, real quick, we'll go around the horn. Tim, starting with you, just a quick intro, a little bit about you, your background. There's some, we did a little bit of digging into your history for both of you guys, did a little bit of just to get some more insights. And both of you have some very interesting things that you have done away from Bitcoin, but I feel like, those are going to translate really well to what the platforms that you guys are building now. And so, Tim, I want to start with you. Tell us a little bit about yourself and Mangrove.
Yeah. Thanks, Jake, for having us here. Glad to be here. Timothy Darrah. I'm an Army veteran, former NASA fellow. Spent my career building AI technologies, mostly in the defense and aerospace side of things. So definitely, not what you would expect in financial services or in Bitcoin, but I first discovered Bitcoin several years ago, and recently finally had decided to make a career change with Mangrove and looking to really build a better ecosystem for folks to get into the space and enter the space and grow their wealth and build their wealth and learn how to use Bitcoin, acquire Bitcoin, stack Bitcoin, and not sell it when they need to, when they need some cash to make a payment, or when I want to go on a vacation or something like that, and using AI safely in that entire process. So safe use of AI, responsible use of AI is a big part of what I'm all about. And I'm also a professor at Vanderbilt University, and I'm on the faculty committee that is developing our generative AI master's program. So love AI, talk about Bitcoin. That's what I'm here for. Yeah.
Awesome. Thanks, Tim. Yeah, Marty, we'll throw it to you.
Yeah, it's going to be fun. I'm looking forward to learning all about you, Tim, and all your trading systems and what you do. Yeah. Marty Kendall. I'm Brisbane, Australia. Hello from the future, Marty McFly. But yeah, mNAV, I suppose we're trying to be the Bitcoin terminal for the Treasury era. We want to supply the data layer and analytics layer started out as, a couple of myself and Jürgen heckling on Twitter and trying to cut through the noise. And Jürgen said, I like what you do. And I said, I like what you do. And we teamed up, and then we bought Owen, who's a AI backend data structure nerd, in, and we started building, and then we came across Capital B and we built a dashboard for them. So as we started out trying to build dashboards and analytics for ourselves, but Capital B, and then George from BFC called, and our life changed. So we get to be the dashboard provider for all the BFC companies, and that's been a hell of a journey. And with AI, it just unleashes the massive potential of data analytics in the Bitcoin space. So we're loving that.
Yeah, I think probably the obvious common theme here so far is Bitcoin and AI, and obviously, if you get on the internet, everyone's talking about AI ad nauseum. But both of you are like really building the infrastructure and the connection between AI, Bitcoin, and how you guys are building the tools that institutions are using. And so, Tim, want to start with you and dig in a little bit on that, on what Mangrove is building. You guys have, I got to go through and see the platform, and I won't give any spoilers here, but I thought it was really, really cool. Really effective strategies and insights for not just institutions, but retail as well. And so, yeah, I want to hear a little bit about what Mangrove is building, and with your AI background, and currently building those tools.
Yeah, totally. Thanks, Jake. So we're using AI in an interesting way, differently than what we're seeing most people today use it, at least that are like coming up with their new AI solutions. I'll start with what we're seeing and then talk about what we're doing, how that's different, and get into now. I think last time I talked about this, we had, just over 1 million strategies. Now we're, well north of 2 million strategies in our database. What we're seeing is folks are either using AI on the research side. Hey, use our AI and we scrub the filings, we scrub the quarterly calls, and we give you great insights. Buy our technology, use our stuff, and there's nothing wrong with that in terms of safety, misuse, risk, other than if that's what you're wanting to use AI for, you're honestly probably just as good using ChatGPT or Gemini or Claude. We use Claude out of the box. A lot of these AI tools that are doing this stuff, they're just a couple of skills and prompts that are sitting on top of the base, Opus 4.8 model, and you really don't need to pay a premium for a lot of those AI products. Just use Claude out of the box. Go find some skills and prompts on GitHub that are free and use them. So we're not doing that. And the second thing is these AI trading bots. When what I mean by that is people are having AI take control of your wallet and going out on the market and executing trades for you based on some kind of research that you have to do. It sort of goes back to this research of find me good buying opportunities and then go buy. And then the bot with your wallet goes out and buys. And that is, very much in the line of sight of misuse and, high risk and not safe. And I won't name names, but I know of a couple of people who who own some trading companies that do that personally. And I was kind of surprised when I found out that they just, give them the keys to the kingdom and say, go trade for me. And what we do instead is we use AI in the strategy design and development and back testing and validation process, all the way up to the point where we're looking at, okay, does this strategy meet our platform's minimum minimum thresholds. So we look at Sharp, Sortino, max drawdown, internal rate of return, and a couple other metrics. We look at those metrics and determine whether or not a strategy can be deployed live on our platform. And that's just one of the sort of guardrails that we have in place. You can't deploy a crap strategy on our platform, at least. You can take the strategy, you can export it, and you can trade it if you want, but I wouldn't advise that. Also, I'm not a financial advisor, so all of this is just made up words. And once a strategy has been validated and vetted to be worthy of being deployed live, then it goes into our deterministic execution engine, and AI is no longer part of the equation. And the reason for that is our trading strategies are built on top of our open source signal library. So we have an open source signal library and an open source SDK, and we have an open source trading agent that you can download and kick in with your Claude code that uses all this, but that our framework again follows what I'm talking about. The agent isn't making its own judgment calls. Our open source signal library, over 200 different technical indicators and chart patterns make up a strategy in some combination, along with various risk settings and configuration settings. And when you're evaluating those rules, really they boil down to a set of true or false rules. Like when you think about if you're deciding whether or not you want to buy something, in your head you are doing checks like, should I do this? Should I do that? If this, if that. These are if-then checks that result in true and false. And you don't need an LLM to evaluate a true or false rule. So that's why we have that clear separation with strategy development and strategy execution. And so with that system, we've built a strategy generation engine, which is now what we're at a conference here now. We've lined up. I had put out some service contracts and some flyers on the table, and then I come back. Next thing I know, they're gone, and I've got emails from various institutions, wanting this service, and we're generating over 50,000 strategies a day as part of an additional process of really looking at. It's not about one strategy that's good or not. We have to look at how a strategy performs in certain market regimes. Market dynamics change, and a strategy that was good 3 months ago might not be good now. Sure. And a strategy that was not good last year might be killer right now. And that's because you have to look at both the strategy and the market regime that it's in. And so we allow institutions to come in that are looking to generate yield on their held assets, use our strategy engine, find what works and when it works, and that way they can turn things on and turn things off and put their held assets at work, generating yield for them instead of sitting idle while we're continue to. I think the currency debasement, I just heard a statistic yesterday at this conference, is like 6% a year. So, and when we found a lot of clients like in the $100 million range that are really finding this interesting. So yeah. Anyways, that's me, and that's Mangrove. That's what we're doing. I'm happy to dig in further, but yeah, I'll turn it back over to you.
Yeah,
Wow.
I think the space that we're in right now is treasuries and institutions. We've been buying Bitcoin, holding on the balance sheet, and now the question is, how do we make this productive? It's not enough to just hold Bitcoin and sit there, but there's tons of opportunities to generate yield. And Marty, I know, kind of shifting gears over to mNAV, that you are deep into the analytics. You're tracking more stuff than I even understand. You were showing me some things on the mNAV platform. And really, it's all about treasuries being productive with their Bitcoin. Want to hear a little bit about what you guys are building for those treasuries that want to get some yield off Bitcoin.
Yeah, I suppose I'll just give you an overview of the high-level stuff that we do. If I just get rid of that.
Oh, that's cool.
See the screen? That's cool. So, I suppose Jürgen, who's the CEO of mNAV, put together had a brainwave to say let's look at the Bitcoin holdings across the world, just to give people just watching Bitcoin grow across the world. It's dark. Where are we? I'm somewhere down here in Australia, in Brisbane. Unfortunately, not many Bitcoin companies yet. I'm talking to one, and locate have moved to New Zealand, but then we can head over to the US and see, guess where strategy is, and you can see their massive spire of Bitcoin, and we can see the top Bitcoin holders, and then I suppose then you can jump in to see the strategy dashboard, which is where we started out building for Capital B, and then for BFC to provide a dashboard for all the BFC companies, and then expanded to all the companies, and then Jürgen's particularly fond of the how did Bitcoin grow over time. You can see 2020 it's just starting to come up, and then all of a sudden, as the Bitcoin treasury market picks up, strategies starting to buy until they just keep growing, and the list gets longer and longer and longer, and we're completely fascinated by that growth as it rolls out across the world. Eventually, you'll get to it exploding as the Bitcoin explosion, Bitcoin treasury explosion that we saw a year ago rolled out, and it's growing. And I think although it's a bit of a bear market over the last 6 to 9 months, I'm sure it will come back as the companies can use their capital markets tools to leverage and produce Bitcoin yield, which is growth in Bitcoin per share, which is the most fascinating metric, the most important metric that it underlies everything. So if you're growing more Bitcoin per share by whatever means, then yeah, it's really valuable to potentially have a Bitcoin treasury company as part of your metrics. And then we're also trying to be the terminal back end for the whole market, so to cover all markets. And I suppose as investors, we were going, how do we compare all these different companies? It's absolutely crazy. So we built I suppose, the Bloomberg for the Bitcoin treasury ecosystem. And then the next step is to take all this data that we've analyzed to death with a million different metrics, and we're fascinated by some metrics, and then other people are coming up with others, and then we're enabling that data feed to flow to people's Claude through the MCP API, and potentially Tim's clients can then pick that up and funnel that into their systems. So that's that, and then we've got I suppose we can talk later about the power law and give a bit of hopium and how the long-term power law trajectory. It's just a model. All models are wrong. Some are useful, is my approach. I'm not a religious zealot about the power like some people might be, but I think a lot of fascinating things that indicate Bitcoin has a long-term momentum. Back to you, Jake. I'll stop ranting.
No, that's great.
Both of us could just go nerd fest forever if you let us go, I'm sure.
Yeah, well, I kind of want to dig into that. So both of you have built these platforms for the institutions, built on deep data, metrics, analytics, and insights. And you guys, I mean, you guys are the professionals. You're the ones that are really building the infrastructure for the institutions. So I'd be curious to hear from both of you. What are some of the common themes? Marty, you mentioned different institutions are coming up with different metrics that they're tracking, different ways to measure success, the important KPIs. What are the things that you guys are seeing from institutions, from high net worth individuals? What are the things that they're looking at to really figure out whether this Bitcoin strategy is even working, and if it makes sense?
I think just continued Bitcoin yield is the most critical thing over time. That company is taking their ability to grow in the capital markets. They're not just a Bitcoin ETF with a really high cost basis that will eat into the capital. So they've got to find a way to keep on growing. And I suppose it was ATM when everything was going up. Everybody was selling their shares into the market, and with Bitcoin going down, leveraged Bitcoin companies, obviously that doesn't work. And then sailors came out with the preferreds, and that is generally going well. But you know, in a massive bear market, it's not very good either. And but I think in the long-term strategy, it's really exciting that it will continue because, as Tim said, the debasement is real, and people are going to move their capital away and finding other things. But at the same time, right now, it's a lot of it's rushed to AI because it's the next big thing. And I'd be interested in, Tim, when do you think the money's coming out of AI and back to Bitcoin, and how long can the parabolic growth continue in Bitcoin investment?
Yeah. Well, so on this last question that you just asked about when there's the money rolling out of AI and back into Bitcoin, one thing to just understand is we've got 3 huge IPOs coming on deck, and so you know, people are wondering why are we in this bear market with Bitcoin? There's all this news, there's all this hype, there's a lot of good momentum, and there has been, you know, good momentum on the hill, maybe not so much lately with clarity, but you have a lot of people looking to put capital into these huge IPOs. So that's one thing. And the other thing, when you look at previous cycles, AI is now the hot topic over crypto, over Bitcoin, whereas in previous cycles it was always Bitcoin. There wasn't anything else competing for those dollars. So that, I mean, you have those 2 things at odds right now. And you know, the other piece, when you kind of like look at some of the on-chain holdings, you have a lot of folks that have, you know, their sort of dollar cost average has been in the like high and mid 70s, and you know, they rode it all the way up and into the 120s, and then, you know, folks were starting to exit, and then so you just have this normal churn of Bitcoin exchanging hands, and so these cycles are obviously normal. I want to say like about 2 months ago, I was at a breakfast with Tyler Evans in Nashville, and someone asked, you know, when is a good time to buy Bitcoin? And you know, obviously and rightfully, Tyler said every time's a good time to buy Bitcoin, and that, you know, it was like the price speculation came up, and I had just made a comment, and you know, I was probably wasn't the popular guy when I said, you know, I generally agree that it's always a good time to buy, but I think we've got more downside ahead of us. And you know, it turns out that was right. But then back to, you know, this question of is when am I getting into Bitcoin? You know, should I get into Bitcoin or not? People also talk a lot about volatility, and you know, like there's just saying Bitcoin's too volatile. How can it be a store of value? And we look at, you know, comparing Bitcoin to gold, for example, is one, you can do one comparison. Bitcoin's right now a thrashing baby compared to gold. It's going to have growing pains. It's going to be volatile. But when you look at the volatility over the last, you know, since Bitcoin's inception, or at least going back to 2017, that's kind of like the year I like to go back to. You know, the volatility has continued to shrink over time. And that's one point. And secondly, the volatility is mostly upside volatility, right? Which is like, well, that's what we want. We want the upside volatility. No one talks about, you know, whether that's volatile up or down when they're just saying Bitcoin is too volatile. And so I think people miss that mark, and when they want to talk about Bitcoin, is it stable? Is it not stable? You know, they should just look at the, you know, the fact that it's pretty reliable when you look at its market cycles and you know that, okay,
Zoom out.
if we go up, all right, we know that we're probably going to come back down from this high by 50%. Like just if you know that it's in the charts, it's in the history. It should not surprise anyone. And so you just have to know that and get in when it makes sense for you to get in. And kind of echoing Tyler's words to that individual. I think it's always a good time to buy. Maybe sometimes you buy more, sometimes you buy less.
Do you think there's a point where the AI trade comes down? I suppose that people talk about bubbles, but over the long term, AI is going to eat the world in some fashion, and everything's going to change very quickly. You and I are both on the using it all the time, and there's a whole lot of other little nerds getting very excited about using AI for everything. But from a trading perspective, can it keep on going? When does it slow?
You mean like using AI to trade and what that does to the market?
Oh, no. Sorry, more the flip side of it. You'd have fascinating insights of when does investing in OpenAI or Anthropic or those sort of AI related trades, when does the Bitcoin goes up parabolic for a little while, but parabolic growth can't continue by definition. Exponential growth has to slow down, otherwise it eats the whole ecosystem. So at some point, we have to, similar to Bitcoin, get a pullback, and then obviously AI is likely to continue for the long term. But yeah, that's an interesting question, trading between AI and Bitcoin.
Yeah, that came up yesterday in conversation, and I didn't have a good answer then, and I don't think I have a good answer now. Still, it's a good one because when we think of investing in these AI companies, and at the end of the day, value comes from economic development and what people assign to something. And so if AI is, quote unquote, displacing all of these jobs, and you have all these people that they're not working anymore now, so they're not making money, so they're not contributing to the economy, and they're not able to sustain themselves, that puts downward pressure on these valuations. But like, is that a reality? I don't know. Some people say yes, some people say no. I'm not a wizard or an oracle and don't pretend to be one. I wish I knew if I did. I would probably be in Patagonia with a Starlink myself. I don't know if that came up when we were live or not, but yeah. So I don't know. I'm trying to think about that a lot.
Tim,
you just holding on for the ride as well. Sorry, Jake.
You're okay. Tim, you said two things that are super interesting to me. One, I want to go back. You were talking about the volatility of Bitcoin. It's platforms like mNAV and Mangrove that are, from my understanding, I obviously, want to hear more from you. These platforms are meant to equip people with the tools. One, not to just understand the volatility of Bitcoin and these cycles and as a derivative, the volatility of these treasury companies. But, how is it, or what is it that you feel Mangrove is building to kind of equip the users and these institutions to understand the volatility that comes with Bitcoin, but also kind of trade against that and manage their risk? I'd be curious to hear a little bit more about how you guys think about that and what's kind of baked into the platform you guys have built.
Yeah, and on the side of what's on the platform right now, this particular piece isn't live yet. We've been slow rolling this out to a few institutions through warm connections, just because there's some things that we want to work out in the process. But really it goes back to having this corpus of strategies and a data set, and then with this data set, now you can start to build models on top of. And so, for example, one model that we built, and we've published a paper on it, and that paper will come out next month, is we built a model that you can send a strategy through it, and it will tell you, the chances of that strategy being good or not without running a back test or without looking at any market data. And reason why I start off with that to say is there's a lot that we're trying to do right now that isn't on the platform. We're working to get there. It's all available over our API though. So that's really kind of where most of our services are available today. Right now is on API, just like Stripe. They came out API first for developers that were looking to improve the way that they were processing transactions. We're building out APIs for developers that are looking for better ways to improve the ways in which they trade. And on the specific point to your question, we look at things like volatility, like risk, and so a person might have a particular profile that they're trying to fit into a larger portfolio, and that profile needs to fit certain risk parameters, certain volatility parameters, certain return parameters, and obviously the assets Bitcoin. And so our platform makes it very easy to find strategies that fit those particular sleeves. And that's what we're getting a lot of interest in today on.
Yeah, I think, as hindsight's always 2020, and we kind of laugh when we say, like, you shouldn't be surprised. Like, this is what Bitcoin does. We go through bear cycles and bull cycles. And you both are building platforms in the bear market. Bear markets are building. Marty, I'd like to hear a little bit about, some of the metrics and things that you're looking at in terms of, how do you think these treasury companies are managing risk, really managing their balance sheet, and then you add in things like digital credit and all these other products that these companies are rolling out. I'm curious to hear a little bit about, what mNAV is tracking and what you guys are looking at.
Yeah, I suppose the amplification loan to value ratio is effectively what's the way they manage that. And Tim mentioned Sortino ratio before, which is sort of growth CAGR divided by volatility. And yeah, you can see over time Bitcoin's volatility is compressing. It feels bad now, but it would have felt even worse if you put your net worth in Bitcoin 10 years ago, because the whipsaw would have been huge. Yeah, but I think the good companies are managing that volatility. You hear Strive talking about, we're designing our strategy for a certain level of drawdown, and if we get to that, we're still going to be fine. And that's the key, is managing that well. Yeah, we've talked to a lot of companies across the world over the last year, and some of them have a strategy, a lot of them don't. And I suppose we're trying to help those companies design a strategy rather than just, we're going to buy all the Bitcoin as soon as we can, and then where does your next Bitcoin buy come from? And if you don't have consistent Bitcoin buying that's accretive, you don't have growth, you don't have a yield, you just go back to an mNAV of 1 with expensive overhead, so probably less than 1. So the key that we encourage everybody to do, whether that's through the ATM or preferreds or whatever comes next, is to drive a long-term strategy, have a plan that continues to achieve Bitcoin yield over the long term, which is just, you saw what SmarterWeb did a year ago. They were going amazingly, and their share price exploded because they were demonstrating growth, Bitcoin per the Bitcoin yield, Bitcoin per share. But they were going exponential, and exponential parabolic growth eventually eats itself and can't continue. So that's where the whole power law paradigm comes in, that we're at mNAV, we're big subscribers to that we like, and we're building fun tools around that I think I showed you in our last call, Jake, to give you a bit of hopium. You went, oh, cool. So if you want to...
Yeah. I would love to take a look at that. Hopium is always great in a bear market, and so if you want to share a little bit, I think that'd be cool.
Yeah. I always watch Geo podcasts, and I think he's just so down the rabbit hole, and that he talks at a high level. So stop me. This stuff gets pretty nerdy pretty quickly. But in terms of the power law, but a couple of years ago, you look at the Bitcoin chart and go, I don't understand that. I dabbled in quant trading back in 2006 and had a whole lot of fun. And then my son started reading about Bitcoin, and you look at this chart, yeah, it's really lumpy. But then Geo started talking about the power law, and it's like
My favorite chart.
and it's like, this shit is really cool. And then once you put it on a log scale, it's like, wow, it's just going up and to the right. This is incredible. And then you throw the what Plan C calls quantiles around it, which is just, I think of as the fast lane at the top and the slow lane at the bottom. Anything in the fast lane has eventually got to slow down, and anything in the slow lane is probably going to revert back to normal. And what we've done here that's different, I've spent way too much time looking at different ways to model the power law and optimize the hell out of it. What we ended up doing is looking at the block height rather than just time, but block height versus price, because the first few years were really lumpy. We all think Satoshi was a genius, but maybe his computer wasn't going too fast in the first few years, and there was block one on 3rd of January, and then there wasn't another block mined until 9th of January 2009, and then it was all lumpy, and eventually it stabilized. So that really messes with most Bitcoin power law charts. And if you say, well, what if we just plot the block height versus price? It all straightens out and it becomes beautiful. So yeah, we've looks pretty bad now, but if you zoom out, it starts to look a bit better. And then recently we turned that into put a forecast band on it. I said, well, if we knew what Bitcoin was doing back in 2020, or let's zoom into here, and this is the chart that I wanted to see, and we went, oh, okay, I've got Claude now, I can build it. If Bitcoin was at we're at the second quantile, which just means price in terms of the power law long-term trajectory has only been below this level 2% of the time, which from a risk-adjusted metric, it's amazing. So if you say, well, back then, where did Bitcoin go? Was it the 200 or 300 times it was at this level before? Where did it go in the future? And we can project price bands, and it's interesting. History has rhymed to some degree, and then you can scrub that forward and see where that will go. And then right now, if you zoom in and look forward, we can get we can see going forward the return 90% a year. We could be at 123 in a year from now if it followed that same trajectory of recovering from the slow lane to the median, going back up. So probably a big dump to dump on all at once. But any questions? And I think this chart is fun for me to say, if history repeated, if it went from the quantile it's at before, we project that forward to future quantiles and map that to the different lines projecting forward, where will that go?
That's awesome. What time series model if you can say, are you using to generate those projections?
As I said, it's just block height versus price converted back to time, with quantile lines through it.
Nice.
Yeah, it's fun.
Marty, I'm curious, what charts, metrics, KPIs, the treasury companies that you guys are servicing, I'm curious to know, like, what is it that they're looking at? Obviously they're looking at BTC yield and
Yeah.
what are some of the other things that they're looking at? Are they?
Yeah, I think it's BTC yield, achieving Bitcoin yield over the long term is the number one KPI. Are you growing your Bitcoin holdings per share? How they do that, whether it's the ATM preferreds or converts or the different other metrics. Yeah, and then the amplification, how much leverage can we handle? Because if you have no leverage, you're again just an ETF with expensive overhead costs. So yeah, they're the key focus things, is what gives you that Bitcoin yield, and are you actually achieving it? Right now, it's really hard to achieve, but a lot of companies are setting themselves up and building in the bear well to do that. And yeah, we're talking to Capital B a lot, and they're always thinking of how can we build forward, how can we be prepared. Alexandra is a true believer. He has a massive conviction, and Valentine's just a quant nerd that we learn a lot from every time we chat. He's like, "Can you build this? Can you build this? What about that?" And we got these new things, and make all that happen. So we love learning from those guys to build the new back-end tools to display that clearly to investors, and yeah, converting that to normal retail is an interesting challenge, and AI helps you do that more clearly. And then similar to Tim, we're saying, well, more people on the institutional level are going to want this data to feed it into their Claude MCPs and drive their quant models. And yeah, it's a fascinating world.
Yeah, we got about 10, 12 minutes left. A couple things I want to hit. I want to rewind a little bit. Tim, you said something earlier. You said value comes from economic development. I want to know from your perspective, what are the developments that you're seeing in Bitcoin, in the treasury space? You mentioned the work that's being done up on the Hill. From your perspective, you've got a unique vantage point. You're building the platform that these institutions, high net worth individuals, that they're going to be utilizing, and they are utilizing to generate more yield off their Bitcoin and to make it productive. What is it that you see? Where's that economic development happening? Outside of I guess like the AI interaction with Bitcoin.
Yeah, you mean, so like what are these treasury companies doing to and how are they impacting the economy?
Yeah, and just from your perspective, like what are the other, pieces of the economy that are really driving what's happening and what we're seeing in the price action, but also what we're seeing, with these treasury companies?
Yeah, I mean, I'd say there's a lot of circuitous mixing with Bitcoin mining and AI, obviously, when we start talking about data centers. And when you look at where does Bitcoin mining become profitable and not become profitable, and that's obviously okay, what's the block reward and what's the current price of Bitcoin, and what does it cost me to operate this data center? And as Bitcoin price goes down, what happens is you'll see miners start winding down some of their mining, because then it becomes unprofitable to mine Bitcoin. And as less Bitcoin is mined, then the block difficulty changes, and so then it becomes easier to generate Bitcoin off of less mining activity. And you see some of these folks turning to AI data centers now. And you also have some pretty huge data center constructions happening. There's a huge one in Louisiana. It's I mean, I can't even it's like several football fields is the size of this build. There's and then you have Tesla's data center outside of Memphis. They're continuing to build there. So when I think of what is the actual economic development activity right now, well, it's like these data center builds are employing people that are doing real physical work on the real earth. And And I think we'll continue to see things like that in the future, and we'll continue to see an interplay between, okay, I'm turning my Bitcoin mining back on because, now the price of Bitcoin is back, 6 figures, and yeah, I can make a healthy profit. And when Bitcoin's price is what it is right now, oh well, hey, let me flip the switch and start servicing other folks that need these data centers for AI uses. And there's nuances there because the Bitcoin miners operate on ASICs, and you can't run these large language models or other AI types of things on these ASICs. That's where you need GPUs, and so there's some nuance to what I'm saying here. But that's largely the interplay that I'm seeing and kind of the economic activity that I'm seeing come out of that.
Yeah, definitely seeing a lot of Bitcoin miners pivot to AI and selling their Bitcoin collateral, and yeah, maybe they'll switch back eventually when Bitcoin pops a bit more.
Very, very good. Well, I'm curious, where do you think we are 6 months, a year is the big question. I think we've probably answered it here, but curious to just hear you guys say it. Is the 4-year cycle still intact? Is this time different? Is this time not different? Love to hear your thoughts.
I want to hear what Tim thinks is the
Yeah,
quant.
no.
You've got a million quant strategies to predict it.
A couple million, but no. I'm not an oracle. I want to hear what you have to say.
Based on the power law, I don't think it can go down too much further. But we're at the second percentile. We haven't broken the first percentile, and based on that model, it shouldn't go down too much further. And the currency debasement is moving money away from fiat into harder assets like gold and Bitcoin. And like you said, Bitcoin's the baby thrashing around, and yeah, it's going to go up more than it goes down in the longer term. And that power law gives you a good idea of where things are going. So yeah, I'm seeing massive returns over, based on previous history. You're looking at 100% per annum going out a year based on previous history projected forward. So where else can you get 100%? The timing for that is, I keep asking AI myself, and it says, you should know. You can't know that, unfortunately. No matter how much you pay for a model, it gives you realistic. You can't predict the time. You can't predict the future. All models are wrong. Some are useful, but I think, yeah, the Bitcoin being, it can't get past 21 million, where everything else is just inflated artificially, whether it be money or food or whatever. It just printed garbage, and Bitcoin is the thing that can't inflate. So yeah, excited to be a part of it, and like I said, building in the bear, Jake. We'll keep cracking on and working with you guys to keep building more metrics and more support for the community.
Yeah, I'm interested. Do you offer any of your technologies over API? I would love to have a chat and get some.
Yeah, no, we should talk. That's our next. We realized that fighting for attention on X is a losing battle and not a great investment. But we're looking at how we funnel that into MCPs and APIs and with all our metrics. So yeah, I think getting good quality data is a really big deal in this industry. That you've got the Bloomberg terminal, the Yahoo, but that covers mainstream companies. But to have the Bitcoin per share and the Bitcoin holdings and all the other details, preferreds, that's something we've really worked hard to get a database of 130 companies that's up to date and quality and audited, and you can use AI to do that, a lot of work. But yeah, that's our sort of our supplying to people like you in the quant space to use the treasury data is the next frontier.
Very interesting to get a hold of that.
Yeah, we good to meet you, Tim. We'll talk after.
Likewise.
Awesome. Well,
I want to know how you take a million strategies and decide which one you're going to trade today. That'd blow my mind. I got like 5, and that's stressful enough.
Well, I'll show you. I didn't think about doing a live demo on here. I guess I could have done that, but it's simple filtering. You have them in there. You say these are the profiles that I'm looking for, and before you know it, a couple million strategies turns down to 17, and then now you're like, okay, well, let me actually click into these 17 and see what makes sense, and then you maybe decide, all right, these are the three that I'm going to use. And but yeah,
that's fascinating. I think that's the power of AI. You've got so many options. Let's bring it down to the things I want to look at, and then I'll choose the handful. Yeah, so it's really interesting.
Exactly.
Well, gentlemen, we are just about at time. I want to let our viewers and listeners know, if you guys want to learn more about these platforms, you can see right over Marty's left shoulder, mnav.com. Go check it out. Lots of great tools. You can see the globe. You can spin it around, watch all the treasury companies, and dig in further. And then mangrove.ai. You can request access there. Look at the platform, see what Tim and the team are building. And gentlemen, really excited to just chat with you today, but really glad you guys are part of the BFC network. And I believe both mNAV and Mangrove will be at the BFC Symposium coming up in New York on Friday, June 26th. And so for anyone out there watching or listening, we'd love to invite you guys to join us for the symposium in New York. That is on June 26th on Friday at the Glass House. We're going to have not just Mangrove and mNAV there, but a lot of other BFC members, Strategy, Metaplanet, Strive, lots of good information, and you can really keep your ear to the ground on what's happening in the treasury space, and much like and get some wisdom, just like we got to hear from Tim and Marty. So gentlemen, a couple minutes left. Tim, I'll throw it to you. Any last thoughts?
Any last thoughts? Yeah, learn. Just folks that are, don't know necessarily, they're trying to figure out how to get in or what to do. Just learn. Just follow folks like Jake here at Bitcoin for Corporations. Listen. Just learn more. That's my 2 cents. I'm a lifelong learner, and you need to continue to learn if you want to stay ahead.
Yeah, good thought. Curiosity. It's all about curiosity, being fascinated by data and what you can do. And AI just gives you a whole new, it's not a crutch. It just extends your ability to learn and learn rapidly and take the ideas and play and continue to develop. So it's really exciting times in every space that human knowledge can grow, and we can build things together really quickly. And yeah, partner with APIs and MCPs, and so it's really exciting times. I'm having a blast, and yeah, thanks for the opportunity again, Jake, to be a part of this forum and partner with you guys.
All right. Well, gentlemen, appreciate your time. Looking forward to seeing both your teams in New York, and hope you guys have a great rest of the day.
Absolutely. It's a pleasure, Jake. Thanks so much. Marty, look forward to connecting. All right. See ya.
Good to meet you, Tim. See you, mate. Bye.
Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Today, we're going to talk about the latest strategy Bitcoin buy, because there is a lot of information going out around there that it was diluted to the shareholders, and it has taken the Bitcoin Twitter debate by storm today. We see many prominent Bitcoiners upset that the MSTR shareholders were ritually sacrificed, and on top of that, they share the same exact opinion as Peter Schiff, that the MSTR shareholders are being sacrificed on the altar for the preferred stockholders. So we are going to dive into exactly what happened with Strategy's balance sheet last week, and this is going to be pure, totally objective truth. There will be no personal attacks thrown, because we do not need any of that nonsense. Yes, it is fun to get riled up and everything, be theatrical with my performance, but at the end of the day, the truth is on my side, so I just want to present the math as it lies, and then you, my dearest audience, you can decide who's wrong, who's right. Is Saylor diluting the shareholders? Is he not diluting the shareholders? Is it accretive? Is it dilutive? All of those questions will be answered today. And I think that you guys are really going to like this video because what I'm going to go over is pretty awesome. If you could do me a favor, hit the like button and subscribe to the channel. That way you can support me spread the Bitcoin orange gospel to the masses. And then on top of that, if you are interested in taking your trapped home equity to buy Bitcoin during this historical level of Bitcoin being oversold, pretty much according to every single possible indicator that's out there, the Horizon team is standing by to help you take your trapped home equity to buy Bitcoin when it's cheap. Yes, they're standing by to help you every single step of the way. No income requirements, no term limits, no monthly payments, no income requirements, no risk of forced liquidation, no leverage gambling nonsense here. Literally convert your trapped home equity into Bitcoin. The Horizon team will help you. Link is in the description below. I will talk more about Horizon at the end of the video. So the narrative is going around that the MSTR shareholders were diluted. Let's actually crunch the math. Using the BTC yield, year-to-date number last week, on June 1st, it was reported that there was a 13% BTC yield. That's interesting because obviously, yesterday on the 8th, it was reported that BTC yield year-to-date is at 12.8%. BTC yield means your increase in Bitcoin exposure, Bitcoin per share over a certain amount of time. So basically, what Strategy is saying, since the beginning of this year, your Bitcoin exposure has now been increased by 12.8%. The Bitcoin back in each share in terms of the residual value. The Bitcoin back in each share, that is their main KPI. That is their North Star. They have not hid this. This is everywhere in their earnings presentations. So basically, it's 12.8% year to date, and it did go down after last week. And this is interesting because when we look at the beginning of the year, we see Bitcoin yield. It has actually gone up a few weeks, and then it will actually go down some weeks. That's interesting. That's strange. Look at this. January 26th, it went from a 0.4%. And then to May 2nd, it went to a 0.3%. A month later in February, on the 23rd, it was a 0.5%. Then it went down to a 0.4%. So there have been weeks where BTC yield goes down, but the overall trend is positive. So basically, when you look at BTC yield, it is very easy to look at it and say, oh my gosh, the common stockholders, they were diluted. They now own less Bitcoin per share. But this is where it gets interesting because you guys know me, if you've been a longtime listener of the channel, when I do my analysis, you'll see it when I do stock price projections a lot of the time. I'm using something called the CEBE model. It stands for Common Equity Bitcoin Exposure. Now, that sounds similar to BTC yield because obviously BTC yield is measuring your Bitcoin per share increase, but I'm using something called Common Equity Bitcoin Exposure. You might say, Adam, that sounds like the exact same thing. What is the difference here? So a lot of people say that I'm a strategy cultist. I don't necessarily agree. I love this company. I think it will be the most valuable company in the world. I love Michael Saylor, what he's done for Bitcoin. I am a strategy fan, but I have repeatedly said that BTC yield is not a complete metric because it does not account for the entirety of the capital structure. It simply doesn't account for everything, so I absolutely cannot stand when any Bitcoin treasury company uses BTC yield. That's why on my channel, I've always been using CEBE. You guys know that. I talk about it all the time. I've explained it like 40 times by now. I'm getting sick of it almost. But I feel like the broader community needs it more than ever because we cannot be relying on metrics that are not telling the full transparent story of what's happening. And originally, the reason why I don't like it is because you can look at the MSTR shares, the amount of outstanding MSTR shares that are totally out there, all the outstanding. And then if you issue a bunch of stretch, that's correct, a bunch of stretch shares into the market, you can just claim that as BTC yield for the common shareholders, but stretch is senior to MSTR. So there's a senior claim that's being created on the balance sheet. So Strategy, what they can do is issue a bunch of stretch and just claim that Bitcoin yield went up because they issued the preferred stock and they didn't issue any MSTR. To me, because there is no free money, there is a cost of carrying that senior claim into the future as well. Why aren't we just using a metric that tells us everything? That's why I like CEBE. And I made this tweet today to actually explain it even further for you because there is just a lot of FUD about MSTR right now, about Strategy. Are they sacrificing the MSTR shareholders? So I wanted to break down exactly why CEBE is a better metric than BTC yield. So let's have a fun thought experiment. Let's just imagine that there are two companies out there, and these are actually real estate companies, okay? Company A owns 100 houses with 100 shares. Company B owns 100 houses with 100 shares. So each company, you can tell the holdings are identical as of now. There is 1 house per share. Would you agree with me? Are we on the same page so far? Seems pretty easy. But this is why we need to factor in everything on a company balance sheet, because as an MSTR shareholder, you don't just own the residual value of the Bitcoin, you own the residual value of the entire balance sheet of the company. It's not just the Bitcoin. Therefore, Bitcoin yield is not painting the correct picture here. It's not the right number. In terms of calculating the residual, we have to use CEBE, and this is why. Let's imagine that these companies both have the same houses per share, but company B owns $10 trillion of Bitcoin and cash. Maybe it's $5 trillion of each, but I picked a crazy number there, $10 trillion in Bitcoin and cash, just to prove my point. So if you're following, would houses per share or house yield percentage be the correct way to measure the residual value of what the common stockholders own? They both have 1 house per share, but the company B owns $10 trillion in Bitcoin and cash. That is why house yield percentage and Bitcoin yield percentage needs to be ditched. I just don't like it. It's not telling the entire story on the balance sheet. So all I'm saying is let's remove all biases. Let's look at the capital markets activity from the company from last week. We will look at their 8K filing and just update it using common equity Bitcoin exposure math. So what did I do yesterday? I saw the announcement from the buy and I was all excited. Yip-de-doo, strategy bought 1,550 Bitcoin and they increased their USD reserve to $1 billion after, we were all told that the company was going to collapse after selling their Bitcoin. So what did I do? I went straight to the website. I looked at BTC yield and I found something interesting, and I flat out said this purchase was slightly dilutive to the shareholders. Reminds me of February, when BTC crashed, and they did the same thing before massively increasing their BTC yield because they were issuing a lot of STRC, but claiming it was Bitcoin yield for the common shareholder. And I say this is their North Star metric, and they continue to tell us this. And then I went ahead and said, I'm going to run the full common equity Bitcoin exposure calc shortly. But then I found when you look at the entirety of the capital structure, the MSTR shareholders' residual claim to the value of the balance sheet, it actually increased with last week's capital markets activity. I can actually show you the math. So I made this post saying MSTR shareholders now have an increased ownership of residual balance sheet value after last week's, because remember, you don't just own the residual value of only the Bitcoin, you have to account for everything. This is actually the real math when you break it down. So let's click into this. I made the graphic just to show people a before and after, because this is what it looks like. They added that 1,150 Bitcoin. You can see that right here. But remember, we have to account for everything. That's why I don't like BTC yields, because I think it's ridiculous when the treasury companies are just issuing a bunch of preferreds and calling it BTC yield. All BTC yield isn't created equally. I like to account for everything. And this is what I mean by that, because when we look at the net senior claims, so the net senior claims on the balance sheet are about $21.3 billion worth before this week, but something funny happened. They added $100 million of cash to their reserve. And we are using the basic share count here. The basic shares, they absolutely did go up, but they increased their USD reserve. And because they did this, the percentage of the net senior claims on the balance sheet actually went down. It went down from 39.37% to 39.11%. So basically, the preferred stockholders who have that senior claim in the event of a liquidation scenario, those people now own a smaller percentage of the residual value of the balance sheet, and the MSTR shareholders actually own more of the balance sheet. So you can either say it's dilutive because of BTC yield if you ignore everything else, but when you factor in everything, MSTR shareholders have an increased claim on the value of the balance sheet, of that balance sheet residual. It went from 60.63% to 60.89%. It's very easy. This is the summary here. The common equity share of the Bitcoin reserve increased. The senior claim drag went down, which arguably you might want that to go up when Bitcoin is cheap, because you obviously want to add leverage or pseudo leverage amplification on the balance sheet when Bitcoin is cheap. Otherwise, you could end up like Nakamoto, for example, who took on a lot of debt when Bitcoin was expensive, and now they have a bunch of debt that's due in December and their Bitcoin is encumbered. So basically, as an MSTR shareholder, you should be concerned about your common equity Bitcoin exposure. It went up, but in my opinion, when Bitcoin is cheap, you might want them to be adding more drag to the balance sheet by issuing stretch. But obviously, with the Bitcoin price stress, it's been hard to see Stretch trade back up to par lately. So when you break down the math, the basic shares, you take everything into account here. Common equity Bitcoin exposure went up. It's undeniable. And you guys know that $100 million of cash is not worth zero, of course. And this is the tweet from Michael Saylor that made me almost cry with tears of joy, because the Bitcoin wizard has finally been vindicated by using the CEBE model by accounting for everything. I almost had tears in my eyes. I didn't, but I do feel vindicated because you guys know I've been talking about this for an incredibly long time. At least it feels like an incredibly long time. And Michael Saylor says BTC yield measures the increase in Bitcoin per share, not total shareholder accretion. Now, obviously, I get a bit irritated because I'm like, well, then let's stop using BTC yield, please. But at the end of the day, you just cannot mathematically deny that MSTR shareholders now own more of the balance sheet. You can't say that you are sacrificing them or diluting them. No, they own more of the balance sheet. That is mathematically undeniable, unless you somehow make the case that you can't calculate the residual exposure for MSTR in some economic accounting calculation snapshot. So Saylor says when both assets are included, the transaction was accretive to MSTR shareholders. And he's exactly correct, obviously. But I wish that we would just use a better metric in this entire industry so we can ignore the FUD that's out there. When you have longtime Bitcoiners who are taking the same side as Peter Schiff, maybe it's time that we upgrade the dialogue. And so Matthew Cratter has now called me a bad actor who is misleading people because I am accounting for everything on Strategy's balance sheet. That's very interesting. I don't think that I'm misleading people. I mean, you guys clearly saw my line of thought when I looked at BTC yield and it looked dilutive, but then I ran the entire capital structure math. Then I saw that it was common equity Bitcoin exposure accretive, and I updated it and I shared the math and I made that nice little chart to show why I'm actually mathematically correct. So I've been accused of being a bad actor, which is very sad because I've been a longtime fan of Matthew's content, and to me, this is just the real math here. You guys know I'm a strategy fan, but I don't like BTC yield. That's why I've always used CEBE, because you can actually look to see if something is economically accretive that takes into account everything. And then over the weekend, Matthew launched a barrage of personal attacks against me, questioning my motives, incentives, who pays me, etc. I found it very distasteful because maybe we just have a disagreement about the future of Bitcoin adoption. But I find these personal attacks very unnecessary for the overall dialogue. I'm not exactly sure why he thinks I'm such an enemy to the community. I love Bitcoin. I want Bitcoin to succeed. It seems like we just have different opinions of how that happens. But I do think his cynicism of me is totally unplaced. We've never even had a conversation. I've never even talked to the guy. And then he just turned his guns on me over the weekend, then blocked me, then called me a bad actor to other people. So that doesn't sit well with me, but that's okay. I know the math is on my side. I know the truth is on my side, and I will leave it at that. If you guys are interested in using CEBE, this website is awesome. It is cebetracker.io. Some people call it CB. I like to call it CEBE. Some people like CB because it's like CB as in see the Bitcoin. You can click on the tracker and you can actually look at what shareholders actually own measured in Bitcoin. So this is the true Bitcoin standard. I absolutely love it as a Bitcoiner. It shows you everything. Companies can't just issue a lot of preferred stock and call that BTC yield and celebrate. We know there's a cost to carrying that claim. They are the ones that are saying it is a senior claim. I love CB. You can look at every single company, just decide what you think is best. Look at the overall claims, look at the common equity Bitcoin exposure, sats per share. And in my opinion, you know why I love this? Because to me, this is the most accurate mNAV calculation because there is a CEBE mNAV. So in terms of valuation of the calculated residual, you can actually look at what multiple the market is giving each one of these companies just based on their capital markets activity. But you have to remember, CEBE is not a valuation metric. It doesn't tell you if something is cheap or expensive. That's for you to work out yourself, depending on your own personal risk tolerance. But it is a great accounting snapshot to look at the capital markets activity. Did your common equity Bitcoin exposure go up over time? Because it accounts for the entirety of the capital structure. I'm sorry I'm repeating myself, but I really feel like it needs to be said, so I apologize if you think, oh my gosh, Adam, just shut up already. So now that is kind of the more objective mode of Adam talking. Now I want to talk a little bit about my subjective opinion, because going forward, my at least typed up analysis on X, it will be a lot about looking at the snapshot of CEBE And then you can't just tell if that was a rational idea by the management team. You actually have to take everything into account because, like I said, this isn't like a valuation model. Think about if Nakamoto and MSTR had the exact same percentage of senior claims and common equity Bitcoin exposure, but not all senior claims are created equally. Obviously, there's convertible debt that has maturity risk, and Strive doesn't have any maturity risk because they have no outstanding debt. They only use the preferred model. This does bucket the senior claims together, so it's up to the market to value that accordingly. But I think that's fine. In my opinion, I think it's the best possible way that we have to calculate the residual exposure. And you guys know back in February, I made a video about how I perceived Strive to be so cheap when it was like $7 a share. I was like, this market mispricing is totally insane. There was a lot of FUD about the reverse stock split where people were losing their minds. And then short sellers just attacked the stock, and the stock was driven down below the value of their Bitcoin. And I was just like, this company is going to be able to grow their Bitcoin exposure very quickly. And what's funny is that I actually ended up calling it right almost exactly. You saw Strive just have an amazing 3 months where the stock went up 120%. It's gone down a little bit since then because Bitcoin went down. But this is very interesting. The common equity Bitcoin exposure mNAV is actually a 1.82 versus Metaplanet's 0.94 and Smarter Web Company's 0.94. Now, this is very interesting. It kind of tells you that Metaplanet's like close to half as cheap, or half as expensive rather. Maybe it's twice as cheap, half as expensive. That's probably the correct phraseology there. But that's interesting because then you have to ask, okay, the claims percentage is a lot higher. So basically, the market was rewarding Strive for actually adding on that amplification by issuing that SATA. Think about it this way, the market might be willing to pony up some money to pay for a frothy valuation if they think that they can properly amplify their Bitcoin. So if the market thinks a Bitcoin bull run is coming, obviously they might price in Strive being able to add that amplification because they're going to be issuing SATA shares. And I think we saw that exactly play out because the CEBE for Strive has actually remained pretty flat over the last 3 months because primarily they've been issuing SATA shares. But remember, the senior claim is actually fixed in fiat. And when Bitcoin goes up and to the right, the senior claim percentage drops. That is what I call ownership acceleration. So if you're owning the common shares, the ASST shares, the value of the shares will go up and to the right over time because the senior claim is compressing, and then you own more of the balance sheet over time because the percentage of the senior claim stays fixed, but the Bitcoin, the denominator, that actually goes up. So you own more of the balance sheet, kind of like that before and after I just showed you for strategy. So when I'm doing my analysis, I also have to keep that in mind. When I see this claims percentage here, when it says red, I don't necessarily think that's a bad thing because obviously when Bitcoin goes up and to the right, you get more of a percentage in the balance sheet. But with Metaplanet, when they're not that amplified Bitcoin, at least in relation to its competitors here, the market might not be rewarding Metaplanet with quite the same level of premium because they're not seeing clarity with the preferreds yet. This is just speculation. The market can price it for whatever reason they want to. But it's interesting. You're seeing some people wanting to buy the stock because there might be a low CEBE or a high CEBE with the high claims ratio because maybe they just want a levered bet on Bitcoin. In my mind, in my opinion, this isn't financial advice, this is financial entertainment. I think the same thing is going to happen to Metaplanet when their preferreds get online. This is my opinion. I think that the valuation is a bit ridiculous. They're not even valued at the value of their Bitcoin that they're holding. And they have a profitable options business. They have Bitcoin.jp. They have Metaplanet Asset Management. They have all these different subsidiaries. So the market's not even valuing the value of the business, and they're even discounting the value of the Bitcoin. So I think that, in my opinion, is a mispricing. So some of you guys have seen this on the channel because I vibe coded a treasury modeler based on the CEBE model because I think that this is the proper way to value these things. And I have the old ASST balance sheet open right now. This isn't 100% up to date, so I apologize for that. But regardless, you're going to see the mechanisms here. And plus, the stock is volatile anyway, so if the stock price is a little bit different, it'll probably be this level tomorrow. Actually, I could probably just type it in. Strive has 19,032 Bitcoin right now. Stock price is $14.21 because Bitcoin went down. They have about 70 million shares outstanding. I don't know if that's exactly correct, so bear with me here. I know it's close. It might be 75 million. Let's just do 75 million. It's not going to be exact, so don't claim that I'm lying to you. I'm trying my hardest here. And then if we put in Bitcoin at 62K right now, and they have $751 million of preferred stock, and they're paying that 13% dividend, and then it will populate here for me the different key metrics of the current Bitcoin exposure per share. But I'm going to show you why I love CEBE, because this totally declaws all of the bears that tell you amplified Bitcoin doesn't work. It literally declaws the bears. It forces them to confront the entirety of the capital structure. They can't hide behind any one particular metric. They must be objective and look at everything. And that's why I love it, because they don't have an argument to stand on. And this is why Bitcoiners taking the side of Peter Schiff are ridiculous. So let's just say that Bitcoin goes up at 25% over 5 years. Easy enough. And let's just say that, they issue $100 million of SATA every single month, paying 13%, and the raise used to buy Bitcoin is 100%, and they issue common shares to fund the dividend. And I think they have about $160 million or cash with Stretch, something like that. This isn't exact, but regardless, you see my point. So let's just say that the CB mNAV, it actually is close to the result we were just looking at, but let's just say there's no multiple expansion at all. The mNAV doesn't expand. They issue the preferred stock. They don't sell any additional common stock except to fund the dividends. And this is what happens over 5 years if Bitcoin goes up. And this is it. The stock price ends up at about $110 implied with this model. The common equity Bitcoin exposure sats per share, your true BTC yield, that goes up and to the right over time. Actually, CEBE sats yield is the correct BTC yield if you want to be technical about it. But then we can look at the claim ratio, and this is exactly what I was talking about. You're issuing preferred stock to amplify the balance sheet. And obviously, as Bitcoin goes up and to the right over time, you need to keep issuing senior preferred shares to keep the balance sheet amplified, because the claim ratio goes down over time. So hopefully they can continue to issue more preferred shares to stack more Bitcoin to keep the stock amplified. And then when you look at the Bitcoin stack decomposition, this is what I mean. The red is the senior claims and the orange is what the common shareholders own. The common shareholders are owning more of the entire Bitcoin stack, the balance sheet over time as this happens. And then red is actually going down to the right over time. So that's just what happened with MSTR last week. When you account for everything, the MSTR shareholders actually own more of the balance sheet. That's undeniable. And I would be willing to challenge anybody to dispute this math. My name is Adam Livingston. I am the Bitcoin Wizard. I hope this cleared up some of the FUD out there for you today. Thank you so much for tuning in to another episode. Have a wonderful day, everybody. Thank you so much for your support. Please like the video, subscribe to the channel. That way you can continue to help me spread the orange gospel of Bitcoin to the masses. Have a very terrific day. Don't party too hard. Class dismissed. We all want to own more Bitcoin, but most of us aren't sitting on piles of idle cash, and that is where Horizon comes in. Horizon lets homeowners convert a portion of their home equity into Bitcoin so they can diversify into an asset with stronger long-term growth potential. What makes Horizon stand out is its flexibility. There are no monthly payments, no interest charges, and no fixed term limit. You stay in your home, you stay in control, and the coin that you buy is fully yours to hold in custody however you choose. That means no margin calls, no forced selling, and no scenario where Bitcoin volatility puts your home at risk. If you believe that Bitcoin will outperform your home's growth over the long term, Horizon gives you a way to act on it using capital that you already have. Horizon has already helped hundreds of homeowners put their equity to work in Bitcoin, and they'd love to help you as well. Visit joinhorizon.com using this QR code or at the link in the video description. You can see how it works and estimate how much Bitcoin you could unlock in just 90 seconds. Transform your home equity into Bitcoin today with Horizon.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for Corporations, is so high quality.
Bitcoin for Corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors, this is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Well, it appears that the bears continue to lose based on this latest strategy announcement straight from Michael Saylor this morning. Strategy has acquired 1,550 Bitcoin for $101 million to increase the Bitcoin reserve to 845,256 Bitcoin. We have also increased our United States dollar reserve by $100 million to $1 billion flat. And the bears are screeching, and they are screeching because they are losing and they cannot do math. That's correct, they cannot do math. So let's take a quick rewind over the last week, over the pure hysteria that we have all witnessed, because remember, strategy just sold 32 Bitcoin and people were acting like the world was ending. The structural cascade is here. Everybody was losing their minds, pure hysteria. So just based on some quick math here, let's go ahead and do a quick division problem. They just bought back 48 times what they sold in the prior week, so clearly the bears are losing their minds. And the bears are also forgetting the fact that being willing to sell Bitcoin if you have a dollar-denominated obligation on your balance sheet, this can only be viewed as credit positive to the credit ratings agencies. You have to be willing to prove that you're willing to part with your Bitcoin if you eventually want them to count your Bitcoin for you. That's correct, count your Bitcoin for you, not mark it as a zero on your balance sheet and giving you zero credit for $54 billion of Bitcoin. That's correct, we have Bitcoin maximalists that are going through Twitter using the credit rating to judge how risky strategy is when they are ignoring, while being a Bitcoin maximalist, that S&P Global counts $54 billion of Bitcoin as a zero. How can you square that in your head as a Bitcoin maximalist? Isn't that very, very interesting? It's almost like all of the haters and the stupid losers out there have a bunch of incentives and they don't want to encounter reality. And of course, Peter Schiff decides to chime in, as he always does, because, you know, you gotta get the clicks, I guess. You gotta get the views. You gotta do some engagement farming with this constant slop. Very convenient that you omitted the information that would have revealed that the purchase was actually dilutive to the common stockholders. The game is over. Yeah, that's right. The game is over. He's totally never said that incorrectly ever throughout all of Bitcoin's price history. Is Peter Schiff finally right? You'll find out on the next episode of Dragon Ball Z. So isn't it funny that the Bitcoin maximalists are now on the side of Peter Schiff as it relates to strategy? These people are losing their minds. Actually, I would consider myself a Bitcoin maximalist. I don't even want to call the people that want to lose Bitcoin maximalists. Let's call them instead the deranged lunatics who want to see Saylor lose because I don't know why. They have problems. But regardless, we are going to get into a lot of fun stuff today. There is going to be a lot of juicy commentary. If you guys can do me a favor, hit the like button. That's correct. Hit the thumbs up on YouTube. That way you can support me spread the orange gospel of Bitcoin and digital credit and strategy to the masses, because we need to win. We need to stop playing games, kids. Also, subscribe to the channel if you haven't, and I really want to take a brief moment to thank Horizon for sponsoring the channel. If you guys didn't know, the Horizon team is standing by right now to help you take your trapped home equity to buy Bitcoin. During this historical valuation of being oversold, the Horizon team will help you convert your trapped home equity that you already have into Bitcoin with no monthly payments, no term limits, No risk of forced liquidation, no income requirements. It's super easy. Go to joinhorizon.com. They will help you every single step of the way. Link is in the description below. I will talk more about them at the end of the video. So Peter Schiff says that the common stockholders are diluted. Let's investigate that claim today. And then we are actually going to be diving into all of the bullish math, why the bull case for strategy only continues to get stronger if you are just honest with reality and don't have anything to sell. And Punter Jeff makes a great point here. You're adding 1,550 Bitcoin. You're adding $100 million to the USD reserve. That is a great week for credit enhancing. The credit is the product. Couldn't agree more. And I also couldn't agree more with using the word credit. It's really funny to continue to see people losing their minds over us using the term credit, but these people are just arguing with the dictionary. Man, Merriam-Webster, the provision of money with the expectation of future payment. Gotta love that. Sounds like credit to me. So yes, we were told by everybody that obviously strategy was gonna collapse because they sold 32 Bitcoin. That's correct. The low IQ crypto trader nonsense ghouls on here, they were all telling us, hey, strategy's gonna collapse. They sold 0.004% of their Bitcoin. They're gonna collapse. It's obvious. Stretch is trading below par. Oh my gosh, I'm scared. Bitcoin's going down to 60K. The world is ending. I can't do math. Please help me. So it is very strange how in one of the worst weeks in Bitcoin in recent memory, probably the worst week this year, it's just so totally shocking that strategy somehow raised close to $200 million or around 180 million. But we do really need to give credit to the bears because these people aren't the brightest. They're not the most intelligent out there. And in fact, they are using strategy's own methodology for whether something is dilutive or accretive. And this, in my opinion, is problematic. If only I would have addressed this at some point in my YouTube channel, in my videos where I talk about CEBE or common equity Bitcoin exposure. Because, hey guys, I was being honest. I was going to strategy.com and I said the purchase was slightly dilutive to shareholders. Reminds me of February when Bitcoin crashed and they did the same thing before massively increasing BTC yield. Now strategy continues to come out and say BTC yield is their North Star metric. They want to grow Bitcoin exposure per share over time. None of this is new. Now in this photo here, these are all the weeks since the beginning of the year. And as you can see, there are times from 0.4 goes to 0.3, from 0.5 goes to 0.4, from 9.6 down to 9.4. So there are multiple weeks throughout the year already where when it comes to a BTC yield basis, yes, you are being diluted. You have less of a piece of the pie. But the bears are incorrect about this being dilutive to the common stock shareholders. And thankfully, I ran the math. That's correct. I looked at the entirety of the capital structure. So let's go through it now so we can be truthful to my audience. So actually breaking down the entirety of the capital structure, you can look at common equity Bitcoin exposure. So Strategy's capital markets activity last week was common equity Bitcoin accretive to MSTR shareholders. This is the formula. You got to take the common equity Bitcoin, divide that by the basic shares out there. And then, of course, because Bitcoin yield is not telling you the full story when you have a preferred equity model, obviously, when you issue stretch shares into the market, if you claim that as Bitcoin yield, you are kind of ignoring the senior claim on the balance sheet. Stretch is senior to MSTR. So before this 8K, we had 843,706 Bitcoin, 352.88 million basic shares, and $900 million US dollars in the reserve. And then after the 8K, this is what happened. This is the new reporting that I'm just crunching the math with. We have 845,256 Bitcoin, 354.29 million basic shares, and now the USD reserve is up to 1 billion. So Strategy issued 1.4096 million shares, and they used the remaining $101.3 million to buy 1,550 Bitcoin. The remaining capital rebuilt the USD reserve by 100 million. So clearly somewhere in their capital stack, they actually had another $20 million. It's actually irrelevant, to be honest with you. The math is accretive whether or not we include that. I just like to include everything because, you know, I need to remove the ammo from the bears. But regardless, at 63.5K Bitcoin, that $100 million reserve increase equals roughly 1,575 Bitcoin of the reduced senior claim drag. That's correct. Sorry, It's just true. The filing added 1,550 Bitcoin purchased, but you cannot ignore that they added the cash, okay? You simply cannot. It's not that difficult, actually. With this math, common equity Bitcoin exposure went up. This is the before. This is the after. Increase 309 sats per share, accretion 0.21%. The gross Bitcoin per share went down, but the common equity Bitcoin exposure went up. And I can show you a graph that proves this. This is the capital structure. This is the undeniable math of what we're looking at. This is before the 8K and this is the after. So this is what the math looks like. The net senior claims was $21.3 billion. The net senior claims now is $21.2 billion. So the common equity Bitcoin, the residual exposure that the MSTR shareholders own, it actually went up 60.63% of the balance sheet to 60.89%. So using Strategy's methodology, they are ignoring the impact of that cash, but CEBE shows you the entire picture. It's literally that simple. The senior claim drag right here, it actually went down. The common equity share of the Bitcoin reserve went up. This is just reality. I am factoring the Bitcoin reserve, I'm factoring in the USD reserve, and the basic share count. So basically ignore the FUD from the people who refuse to look at the entirety of the capital structure. This is the actual real math. Ignore all of the haters out there who do not like to encounter reality. Any Bitcoiners who are siding with Peter Schiff, you should probably be looking at some incentives and motivations there. So basically, in addition to me just telling you what reality is, let's take a bigger look at what has happened over the last week, over the last couple days. For some reason, people still don't understand my position of STRC. I view it as an incremental improvement for the Bitcoin network because it's capital that's going to Bitcoin rather than funding our government. I would rather take that if people are going to decide that they want income-seeking capital. I know this isn't complicated for some. It is complicated for some people. So basically, a lot of people do not understand that my position is I like the risk profile of the instrument, but I do not want income. For some reason, that's very difficult for people to explain. This simple position that's highlighted right here. They don't understand that. I have clarified multiple times that I don't own STRC, and of course, when it went down recently with some Bitcoin price decreases, I was criticized for not having skin in the game. I should totally only have opinions about things that I own. You know, obviously that flies in the face of everybody having an opinion about MSTR while not owning it. So not only are these people extreme slime balls, they are also hypocrites. Shocker there. So now we're seeing Stretch trade above $97 today. So how are the cracks looking, you stupid morons? So now, of course, because people are realizing, oh my gosh, the structure still works, there isn't this structural cascade from the doomer boomer idiots out there. And notice that they never actually put forth the math, do they? Have you noticed that? None of the bears actually do any math to show you the liquidation. They have to come up with these ridiculous scenarios. What if Bitcoin goes to $8,000 and stays there for 7 years? Yeah, maybe they would be in trouble a little bit. Am I really gonna bank on that scenario when you're long Bitcoin yourself? Do you even hear yourself right now? But anyway, let's look at the math because I love getting a new 8K because I get to update my math on how effectively Strategy is raising capital. So let's just go through what Strategy is doing, you know, using simple numbers that are accessible to everybody 24/7 on strategy.com. Figure number one, the annual dividend obligation for all of their preferred instruments together, $1.711 billion. Now, does that sound big, $1.7 billion? Sure, it can sound big. That's fine. You can get scared. But let's go ahead and crunch some numbers here. They have $53.7 billion of Bitcoin, $66.4 billion of the enterprise value, a $45.2 billion market cap. The US dollar reserve is now $1 billion, and there are 31.4 years of Bitcoin coverage. So basically, their annual dividend burden is 3.1% of their Bitcoin reserve. It is 2.57% of the enterprise value, 3.78% of the market cap. But of course, we can't just look at the balance sheet in a vacuum. I'm having people arguing with me, Adam, but the cash is going to be used for the dividends, so you can't use that. Okay. What if the capital markets are going to remain open for Strategy? Can I use that? I can only look at some forward-looking things, but not the others, of course. So let's just look at the sheer level of capital markets velocity for 2026 so far. Strategy has raised $14.1 billion year to date. through this latest filing. That's correct. $14.1 billion year to date, and it's only the beginning of June. That is $131 million per trading day this year on average. Yes, they are raising on average $131 million per trading day. At that pace that they're on, in the worst Bitcoin price conditions in recent memory, Strategy is still running at a $33 billion annualized capital raise rate. That is just crazy. Even after Bitcoin is nuked 50%, they are going to have their best year ever for capital raising, just at the pace that they're on right now. So when you break down the math, if you look at the annual dividend obligation, it's only 5.2% of that annualized capital raise pace. So let's say this differently. Let's shout it louder for the people in the back that cannot understand the magnitude of what is happening. Strategy's annual dividend obligation can be covered by roughly 13 trading days of 2026 capital markets activity at the current year-to-date pace. Yes, the annual dividend obligation right now can be covered on average with 13 days of their capital markets activity. So people that continue to stare at this dividend number in isolation and getting scared, this is amateur hour, kids. Do you really think that they're not going to be able to raise that money when they are raising, again, $131 million per trading day on average? So basically, we can look at that dividend obligation on a relative basis versus the Bitcoin reserve versus the capital structure and the company's demonstrated ability to raise capital even though Bitcoin is in a huge bear market this year. So basically, we can look at that $1.7 billion obligation, and then we can look at it and judge how big is it relative to their Bitcoin stack, to their USD reserve. And then, of course, what about their demonstrated ability to raise capital? The answer is the dividend is very tiny. If you disagree with that, I don't care what your opinion is. I think that you're a little clown. So in addition to that, let's look at where Strategy stands despite Bitcoin's price being so depressed right now. If you guys didn't know, Strategy's Bitcoin NAV, it hit an all-time high on October 6th of 2025. They had 640,031 Bitcoin on that day, and Bitcoin closed at 124.72K. So the gross Bitcoin NAV on October 6th was just under $80 billion. They probably just touched over $80 billion intraday because I remember Bitcoin hitting 126. But regardless, the close price, they were at just under $80 billion of Bitcoin. Now, obviously, since then, since that great crypto liquidation on October 10th, what have we been hearing? Nothing but fan fiction from the bear clowns. The dilution, Ponzi, collapse, death spiral. Ever since that day, Strategy has stacked another 205,225 Bitcoin. Now they hold 845K. Now this is the exciting part. This means that Strategy doesn't need Bitcoin to return back to 124K plus for the Bitcoin NAV to hit an all-time high. Do you want to know what the actual number is? They only need Bitcoin back to 94.4 thousand. That's correct. Sailor and Strategy have been buying the dip. They can break their old Bitcoin net asset value all-time high with Bitcoin still 24% below the prior Bitcoin price peak. Isn't that interesting? If Bitcoin just goes back to that old all-time high, Strategy's Bitcoin NAV would be $105.4 billion. So this entire time, all of the hysteria, the death spiral, structural cascade nonsense, every single dip and stretch has returned to par except for this latest one, but you saw the trend. The machine continues to raise capital faster than it ever has despite Bitcoin being in this bear market. This is accumulation domination. The bear case depends on pretending that the number stops growing, but they cannot ignore reality. The beast continues to accumulate Bitcoin. A lot of people are jealous of Sailor because he's smarter than them. He's a better operator than them. He's more intelligent. He decided to win by monetary conquest rather than pearl clutching and purity spiraling. So yeah, Strategy is raising $131 million per trading day on average this year. They are on pace for $33 billion raised. This will be their biggest calendar year ever, despite Bitcoin being down 50%. And for some reason, I'm supposed to be bearish. And then on top of that, just to rub salt in the wound of the bears, we saw Stretch and MSTR shareholders approve the amendment to move the Stretch dividends from monthly to semi-monthly. Another win for Strategy. Under the new cadence, the first record date is June 30th, and the first payment date is going to be July 15th. Just slightly over a month from now, just another arrow out of the quiver of the low IQ bears. Super exciting stuff. Strategy announces approval of the Stretch semi-monthly dividends. And then you just have to love this, just the salt in the wound of the bears, of the hysterical nonsense clowns out there. Strive bought 32 Bitcoin for $2.1 million at an average cost of $63,911 per Bitcoin. This is hilarious simply because they just bought Strategy's Bitcoin from them. Do you think this is not the most ultimate troll of all of the people who thought that Strategy would somehow implode if they sold Bitcoin? You gotta love it. Bullish Strive, bullish Strategy, they just continue to acquire Bitcoin, while the people who are complaining about it, they're not buying more Bitcoin, at least to this level. They continue to stack their Bitcoin and then just judging other people for selling Bitcoin. And then they're also judging them for buying too much Bitcoin. And then selling Bitcoin to pay a dividend is a terrible thing. But then, of course, selling your Bitcoin for a burger from Steak and Shake, that's perfectly acceptable. The lecturing and the moralizing from these people, it's just getting to ridiculous levels. They have no ammo left. Totally ridiculous nonsense people. We cannot take them seriously anymore. So just for fun, let's talk about some stock price projections by the end of the year. Who knows what inputs to put into my calculator? Let's just have some fun today, why don't we? Because it's always fun to have a victory lap after all of the hysterical nonsense. We have went ahead and loaded MSTR's balance sheet into my CEBE Treasury modeler here. Let's put the preferred dividend rate at 12, just to be closer to reality because of the higher yields on the other preferreds. I'm not going to break down the math exactly, but it's something in that neighborhood. I'd imagine it's probably average blended rate around 12. I could be wrong. Whatever, there's going to be a margin of error, okay, folks? $6.7 billion of debt, $1 billion in cash, and then we have the preferred outstanding of $15.48 billion. And then that gets us to a 1.39x common equity Bitcoin exposure mNAV, which is the true mNAV, and that's why Saylor can continue to sell MSTR. And guess what? In CEBE terms, you're not being diluted. Bitcoin right now, as of filming, is 63.437K, which is kind of depressing. Let's just do a 2-year projection today, a 2-year, okay? And let's say that Bitcoin is actually gonna go to 130,000. Let's just say in 2 years, Bitcoin doesn't even revert back to its long-term trend line, 130, and then breaking down the raises from the prefs versus MSTR this year, we have $7.5 billion raised from Stretch. It's not quite halfway through the year. Let's just go ahead and say they're going to raise another $8 billion, to be fair. That might be a good guess. That's assuming that Stretch stops growing, which would be counter to the trend. I guess maybe we've seen it drop a little lower because of this Bitcoin scare. But let's say there's 6 months left in the year and they raise $8 billion. So they're going to raise $750 million per month. $750 million per month of STRC, given, in my opinion, pretty conservative estimation. The new preferred div rate is going to be 11.5, and they're going to sell MSTR shares to pay the dividend, and then if the cash is insufficient, sell Bitcoin. And then let's go ahead and say that the mNAV just stays the same, and I want to see where this gets us. With those inputs, you get about $354 MSTR, which is super exciting, but remember, this is assuming that they sell 0 MSTR to ever buy Bitcoin. So let's have some fun. Let's be a bit more bullish. Let's say that Bitcoin goes to 200K by the end of 2 years from now. And then let's double that monthly preferred issuance rate, because there's been a couple months where I think they raised close to $2 billion, maybe like 2.1 billion, maybe in April or May. So let's just do 1.5 billion. That'll be fun. 1.5 billion per month, and also 0 MSTR. Let's keep 0 MSTR. They're going to use 100% of the capital raising to buy Bitcoin. And let's just say that the mNAV goes from a 1.39 to a 1.75. There you go, $843 MSTR. That's a bit more exciting. That's what I like. And this is interesting. If they actually sold $1.5 billion additionally per month of the common stock, you actually only end up with $915 MSTR. Yeah, $915.99. And that would be because you're issuing so much common stock while Bitcoin is going up and to the right. you actually become less amplified Bitcoin as the months tick by there because the senior claims become smaller as a percentage of the balance sheet. So let's do 250K Bitcoin. Let's do $250,000. And let's do $2 billion of stretch, but keep the same amount of MSTR. And then let's calculate an mNAV mania a little bit, okay? I'm not talking 3 or 4 like we saw back in 24. Let's just say there was a really volatile upswing right before Bitcoin hit that $250,000 and the mNAV went to a 2. And there you go. That input gets you $1,400 MSTR. So once you start to realize that Bitcoin is designed to go up forever, it's going to $1 million. And then when you see the path forward for Saylor and Strategy continue to buy Bitcoin hand over fist like this from the OGs who continue to sell their coins, it's really hard to see how Strategy is not going to be one of the most valuable companies in the world. This is not financial advice. This is financial entertainment, of course. I'm just crunching math and showing it to you. These are my inputs. If you don't like them, that's totally fine. I don't recommend that you buy any hyper-volatile Bitcoin asset if you do not understand the math. That said, double check the math yourself. This is not financial advice. My name is Adam Livingston. I am the Bitcoin Wizard. If you like this content today, please like this video and subscribe to the channel. That way you can continue to support me spread the orange gospel of Bitcoin and strategy to the masses. Have a very terrific day, everybody. Do not party too hard. Class dismissed. We all want to own more Bitcoin, but most of us aren't sitting on piles of idle cash, and that is where Horizon comes in. Horizon lets homeowners convert a portion of their home equity into Bitcoin so they can diversify into an asset with stronger long-term growth potential. What makes Horizon stand out is its flexibility. There are no monthly payments, no interest charges, and no fixed term limit. You stay in your home, you stay in control, and the coin that you buy is fully yours to hold in custody however you choose. That means no margin calls, no forced selling, and no scenario where Bitcoin volatility puts your home at risk. If you believe that Bitcoin will outperform your home's growth over the long term, Horizon gives you a way to act on it using capital that you already have. Horizon has already helped hundreds of homeowners put their equity to work in Bitcoin, and they'd love to help you as well. Visit joinhorizon.com using this QR code or at the link in the video description. You can see how it works and estimate how much Bitcoin you could unlock in just 90 seconds. Transform your home equity into Bitcoin today with Horizon.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
You know, everything you guys do, Bitcoin Corporation, is so high quality.
Bitcoin for corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for corporations may be the highest quality professional association in the digital asset space.
Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Well, everybody. It has been quite an interesting weekend on Bitcoin X. I'm getting a lot of shade thrown at me. A lot of people think I am not a real Bitcoiner. I am a fiat maxi. I'm seeing all kinds of arguments coming my way. People misrepresenting my position, of course. There are a lot of people just lacking the reading comprehension to actually understand what I'm saying in terms of my argument. But at the end of the day, I just think that Bitcoin is going to win. I think that strategy is going to win. I think that Saylor will continue to win. And Bitcoin adoption will continue because humans follow rational incentives. There is going to be pragmatism. That is what is going to lead Bitcoin to victory. So there's this clip going around from me and Jeff Walton talking about Bitcoin, talking about STRC, digital credit. You know, what I've been talking a lot about recently. I view digital credit as a really fascinating thing that's being built on top of Bitcoin. I have repeatedly disclosed that I don't own any of it. But that said, at the end of the day, there are 640 million retirees out there in the world right now that are buying income. They are trying to achieve income by funding the governments, by funding the fiat system. That's the way it works. That is the way that income is working. And because I'm being my pragmatic self, and I don't think that 640 million retirees are going to be orange-pilled by next Tuesday, I view Stretch as an incremental upgrade. Why? I would rather have their capital go to an entity that's buying Bitcoin. These are two individuals in a public marketplace who are totally uncoerced, who might look at the risk profile of STRC. They might think that that return will be worth the risk that they're giving up. They give their capital to Strategy, and then they get paid their 11.5% dividend. Now, because that capital goes to Bitcoin, and because that strengthens the Bitcoin network via network effects, I don't think anybody can deny that potentially getting some of the $300 trillion debt market into Bitcoin over time, I don't see how that can be a bad thing for the Bitcoin network. But anyway, this clip is going around. I'm not going to play it. You guys can go ahead and watch my episode on True North, or you can watch the clips that are going around that are selectively edited. The reality is that Bitcoin is a free, open, permissionless monetary network, and that means you don't need permission from anybody to interact with Bitcoin the way that you want to. And sorry, humans are going to follow rational incentives. So we have a lot of people saying, but Bitcoin is money. You've never had such money before. Why recreate another fiat derivative as money on top of the real money to use as money when it already exists? Now, I'm a Bitcoiner. I buy Bitcoin. I own Bitcoin in self-custody. To me, this is not difficult to understand. As Bitcoin continues to absorb so much monetary premium from the other asset classes over time, it's surprising nobody that Bitcoin has had such tremendous growth over the last 10 years. This is a hyper growth asset absorbing the monetary premium from real estate, gold, whatever. The reality is that if you look through a lens of pragmatism, there is opportunity cost with giving up your Bitcoin, and nobody can deny this. I'm sorry, it's just reality. There is opportunity cost by parting with your Bitcoin as it's observing the monetary premium. Through this lens of moral and ethical money, if you're one of those people that doesn't want to touch fiat because you hate the deep state vampire pedophile money, totally understand. That's why I'd rather have the income-seeking capital. If all of these trillions of dollars doesn't enter the Bitcoin network tomorrow, I would rather have it go to STRC. So this is how I would answer it. And I think there's different kinds of Bitcoiners. We're going through this Bitcoin civil war where people are getting upset over the digital capitalists, you know, how Bitcoin is digital capital. They want it to be digital money. The cool thing is that Satoshi created peer-to-peer electronic cash and then he vanished. So we all get to interact with it however we want to. Personally, I don't want to sell my Bitcoin. I do not want to sell it. And of course, these same people will criticize Michael Saylor for buying too much Bitcoin. Then they'll criticize him for selling the Bitcoin. These people will never be happy no matter what happens. And that's really revealing of a lot of their interpersonal character. But to get more into detail about my actual position, we're going to talk about my position on Bitcoin, digital credit, STRC. We are going to get into the weeds today. But before I do, I really want to take a brief moment to thank Horizon for sponsoring this video. If you guys didn't know, the Horizon team is standing by to help you take your trapped home equity to buy Bitcoin at this historic level of oversold. And they will help you do it with no debt, no monthly payments, term limits, none of that nonsense. Your trapped home equity into Bitcoin. They will help you every single step of the way, and there's no risk of forced liquidation because this isn't leverage gambling nonsense. Join Horizon.com, link in the description below. I will talk more about them at the end of the video. And then on top of that, you guys know that my cold storage wallet of choice is the BitBox O2 Nova Bitcoin only edition. Bitcoin Orange is here. I wish I got that one. I have a black one, but this is the greatest, slickest Bitcoin cold storage wallet. This is how I like to transfer my Bitcoin over. USB-C, compatible with everything. I can plug it into my iPhone, transfer my Bitcoin over to cold storage. Super easy, dual chip security architecture, a tempered glass display if you want something slick and beautiful, where you can hold your Bitcoin and feel safe, the BitBox O2 Nova is for you. And guess what? If you go to the link in the description, you can use code ADAMBTC to get 5% off. Click the link below if you're interested. And now let's get back to today's content. So I don't think there's anything wrong with people using Bitcoin as money, although nobody can deny there is opportunity cost associated with sacrificing an asset that is absorbing monetary premium at this rate. And this is the example that I like to go to. You guys know the pizza transaction. Some guy traded 10,000 Bitcoin for 2 pizzas. This happened quite a while ago, but do you think that was a rational decision for him and his family? Of course, some Bitcoiners will say, yeah, he used perfectly ethical, stateless money to make that transaction for pizza. That's perfect. But then, of course, maybe his life could have been improved after we just saw Bitcoin go to 126,000. I'm pretty sure that he would have been fine with the Bitcoin price being what it is today at 62K if he would have held on to that 10,000 Bitcoin. And because we are living through Bitcoin adoption, we are currently smack dab on the middle of the bridge right now, where Bitcoin is absorbing that monetary premium. We need to understand that humans are going to follow rational incentives, and they are going to follow those incentives whether or not these people meet your ideological bucket of being a true Bitcoiner or not. What a lot of the critics are revealing is that they have their own individual subjective preferences over how to best interact with Bitcoin, and they have this idea in their head about what the true Bitcoiner is, what the real Bitcoiner is. And a lot of people don't think I'm a Bitcoiner anymore, apparently. Apparently, buying Bitcoin back in 2012 before anybody really knew what it was is not good enough. Apparently, buying Bitcoin every single day of my life is not good enough. Apparently, having my entire portfolio, my entire family's future being dependent on the success of the Bitcoin network, apparently that isn't good enough, because I don't want to swap my Bitcoin for a hamburger at Steak and Shake. And for some reason, this is controversial. I don't understand why, especially after you just saw Bitcoin go down by more than 50% in the last 8 months. Bitcoin is for everybody that wants it, and that is a beautiful thing. It is a neutral free market that is permissionless. If my 84-year-old grandfather wants to get paid a dividend that's made economically feasible by Bitcoin instead of riding the volatility of an asset that just got nuked 50%, Bitcoin serving as the base layer and improving millions of people's lives, to me, is a win condition for Bitcoin. That, to me, is an incremental step forward. No, we're not going to live in a Mad Max society where the government is abolished tomorrow or next week or next month. To me, digital credit is just a pragmatic solution for income. I don't view it as an alternative to Bitcoin. I don't think that there's a bunch of capital that's out there that's sitting in STRC that was intended to be sitting on a ledger wallet or something. 80% of stretch holders are retail. Are some of them opting for STRC rather than Bitcoin? Perhaps. But to me, this is a very pragmatic solution for income because you're not comparing it to Bitcoin. You are comparing it to the other alternatives for income. So this is my question that I just ask. If you accept that today and tomorrow and next week, those 640 million retirees have their capital earmarked for fixed income, they will not be buying Bitcoin with it. Would you rather have that money go to STRC, which goes to the Bitcoin network, or would you rather have that capital fund the deep state pedophiles while getting paid 1/3 the amounts that you would with STRC? To me, this level of Bitcoin adoption is Tyr's law playing out in real time. We can't ignore that Bitcoin adoption is a process. We are letting perfect be the enemy of good. And I think this whole idea of continuing to resist these incremental victories because it doesn't match our perfect ideal end state, that is quite naive. And honestly, I think a lot of the OG Bitcoiners, if you would have told them 10 years ago that a billionaire would have taken a public company balance sheet to short the dollar and stack Bitcoin hand over fist, they would have absolutely loved that. They would have seen that as Bitcoin winning, but apparently they don't like watching someone else win too hard. So now we're going to get into a little bit of STRC and my opinion around Stretch, because I continue to see my position get misinterpreted here. STRC is down to $93.48 as of the Friday close, so the market's pricing the risk at that 12.31% effective yield. In my humble opinion, we are going to see this go back up to par pretty shortly. I am not going to give financial advice. I am going to give financial entertainment. But I do think the market will continue to look at the risk profile of STRC And I do believe that it will be bid back up to par pretty shortly. And that's because the ex-dividend date is pretty soon. That's usually when we see the big liquidity rush. And obviously, as the price gets lower, the incentive is higher to buy because they're going to pay you out more of an effective yield. When I look at Strategy's balance sheet, we are sitting at historic levels of oversold comparable to FTX back in 2022. Literally, whether you look at the deviation from the power law trend or the 4-year moving average, we are right in that statistical neighborhood. So at this 1 to 2 percentile Bitcoin price, Strategy still has over 3 decades of coverage in Bitcoin. They have over 6 months in cash, $900 million. So I do think there will be a liquidity rush into STRC. Do I think that it will be like the prior months? No, I do not. But I do think that we are going to see Stretch go back up to par. In the last 6 months, we did see 3 corrections. There was one in December, and then we had one in February. The one in February was interesting because the price went down to 93.67 and rebounded in 1 day. And now we're touching 27 cents below what it was back in February. I think that you are going to see this rebound back to par just like we have in the past. So I made a post recently about how I don't own Stretch. And in fact, I've made multiple posts about not owning Stretch. I have made very clear that I don't want income. I want Bitcoin or amplified Bitcoin. So I feel like I need to make my position painfully clear because apparently the reading comprehension in the Bitcoin community has now entered a bear market. I own 0 Stretch. I've never owned Stretch, at least to my memory. Maybe I bought it one time for an hour or something. At least off the top of my head, I don't think I've ever owned it. I prefer Bitcoin. My personal preference is Bitcoin. Bitcoin is my ideal. My personal North Star is Bitcoin held correctly, but when I do like to go out on the risk curve because I think Bitcoin is the least risky asset, I don't think this whole concept of a risk capital disappears in a Bitcoinized world. I want to allocate my capital to get me more Bitcoin. That's why I like buying amplified Bitcoin in equities where I like the risk profile. So if someone asks me, Adam, should I maximize my Bitcoin exposure by buying Bitcoin directly or by buying an income security and then using the income to buy Bitcoin? My answer is easy. It's been buy Bitcoin, and this has always been my view. In fact, I have posted repeatedly that I think the people who are using Stretch to use the dividend to buy Bitcoin, that's totally ridiculous. The reality is that Stretch is a risk. It carries counterparty risk. You know, obviously, I will say this, people don't like hearing it, but there is custody risk with Bitcoin as well. People have lost their private keys before because humans are fallible creatures. This should surprise nobody. And at the risk of coming across like an elitist, I'm really sorry, but it's just true. I don't care if people get upset about this. There are some people who will never understand Bitcoin. That's just factual. There is a cognitive gate to understanding Bitcoin and to getting orange pilled. I have seen people fail to operate self-order kiosks at McDonald's. This whole idea that Bitcoin can only win by reaching everybody with self-custody Bitcoin, the guy that cannot properly operate a McDonald's self-order kiosk without help. Do you think it's pragmatic for us to make sure that these people read Ludwig von Mises and they want to usher in this stateless utopia? And we teach these people self-custody and, oh yeah, they only sell some of the Bitcoin when they need the income? This is not pragmatic. So you think that individual who cannot operate a self-order kiosk at McDonald's? I've seen some of the people walking around society. And like I said, this isn't popular. I don't want to come across like an elitist, but there is the bottom half of intelligence out there that you cannot get around. Can some of them probably cold store a Bitcoin and have sovereignty? Yeah, probably some of them can. Can everybody? Absolutely not. If you deny that, you are insane. So Stretch carries risks. Obviously, we know that Strategy uses a custodian, but my point is that nobody needs to pretend that Stretch or pretend that MSTR is Bitcoin. We don't need to pretend that a preferred security is the final form of human freedom. They are different things. They are apples and oranges. But if you are going to make the comparison for people who want an income product, whether or not the income product concept is a good thing or not, we can probably both acknowledge that these things are wanted by individuals today. I would rather have the money go to Bitcoin. I would rather have the money be routed to a public company with consenting public shareholders that is a wrapper of hundreds of thousands of consenting individuals. I would rather have them buy the Bitcoin and then pay 11% in a consenting transaction than them going to fund the government. And the cool part about this is that I'm a classic speculative attacking Bitcoiner, okay? I think this whole war on the bridge to Bitcoin adoption, this is fun. This is the Wild West. For the first time ever, we have a free market. Seriously, do you ever think about how crazy that is? We have a free market for the first time in human history, and we get to interact with it, and we get to observe how other people interact with it. And so the argument is about adoption pathways. It's not about replacing Bitcoin. The entire point is that different pools of capital out there, they have different constraints right now. There's no way of getting around that. And plus, a 30-year-old Bitcoiner with high conviction can buy Bitcoin, he can self-custody his Bitcoin, he can hold through the volatility, and he can laugh while the portfolio drops 50%. But an 84-year-old retiree living off income, they might have a different relationship with volatility. There's no way of getting around that. A pension fund might have mandates that does not allow them to buy cold storage Bitcoin, but the mandates might allow them to buy MSTR and maybe one day STRC if we see a higher credit rating in the future. There might be an insurance company out there that has different duration needs, different yield needs, liquidity needs, okay? A user of a brokerage account might want monthly distributions and a ticker symbol because the phrase hardware wallet firmware update sounds like a CIA medical procedure to this guy. So should we continue to advocate for self-custody of Bitcoin? Of course we should, but you cannot get around the fact that these other people exist. They will exist for a long time. Their capital exists. They will vote with their capital. The constraints that they have, they exist. Their fears exist, and the mandates exist on the books. If Bitcoin is the ideal, if Bitcoin is the apex asset, which I believe it to be myself, I think it's totally rational to view STRC and digital credit as a bridge for certain income-seeking capital. Now, does a bridge have risks? Absolutely. A bridge has the toll. A bridge can be ugly. A bridge can have orange cones and municipal corruption. And right now, a lot of capital is standing on the other side of the river that's still funding the fiat machine. If a retired couple is out there right now and they have their capital sitting in a money market account, they're already making a decision. They are already participating in the legacy monetary system. They're already funding someone else's balance sheet. So to me, it's very simple. The only question is, whose balance sheet do you want to fund? The sovereign debt machine, or do they fund the banks? Do they fund the same government apparatus that spends, prints, borrows, inflates, regulates, and then moralizes, and then lectures you about financial responsibility while adding trillions of dollars to the debt? Or would it be a net positive, an incremental improvement for the Bitcoin network for that capital that's already earmarked for income? Assuming that this retired couple doesn't get orange-pilled tomorrow by reading the Bitcoin Standard, should that portion of income-seeking capital flow to a structure that is made economically feasible by Bitcoin, or should it go to the government fiat system? This is the pragmatic question. And I think people are getting emotionally stuck because they want every comparison to be pure. They don't like the comparisons of STRC compared to other things that are out there. But the reality is that capital markets are literally impure, and they are impure by design. They are full of compromise, hierarchy, superiority, credit risk, the liquidity preferences, duration matching, tax treatment, incentives. Nothing is created equal. The entire machine that's built in the capital markets. This is a cathedral of paperwork built on top of the fear and compound interest. And Bitcoin is introducing a new gravitational center compared to the legacy system. And once Bitcoin exists, every instrument near it starts to change. We're seeing this happen right now. You can't deny it. You're just fighting the entropy. We see public companies buying Bitcoin hand over fist from individuals. ETFs can hold it. The lenders can lend against their Bitcoin if they want to. Preferred securities, they can offer a yield with some exposure onto it if they want to tranche out some of the volatility. Balance sheets can begin to orbit Bitcoin. Capital markets can be used to accumulate Bitcoin. Sorry, if this makes people uncomfortable, there was no other way that this was going to happen. I understand the instinct and I share some of it, but at the end of the day, Bitcoin was released into the world. The world includes Wall Street. It includes retirees and corporations. It includes sovereign wealth funds. Governments own Bitcoin right now. People will say, but Bitcoin was supposed to be the separation of money and state. Well, How is that working out? It's a free network. Governments can buy it if they want to. That might not be an ideal scenario, but we cannot get over reality. This is what is happening. How can we best move forward given the card that we are being dealt with? Permissionless money literally means that people will use it in ways that you can personally find horrifying. That's the deal. Freedom includes cringe. The point is directionality. I just think capital that's moving from fiat liabilities into Bitcoin-linked accumulation is directionally better than capital staying inside of the sovereign debt treadmill forever. Perfect purity. I think it really sounds noble until you realize the alternative is grandma funding treasury auctions while her purchasing power continues to get euthanized. So if I haven't been clear by now, I love STRC if I wanted income. If I was an older individual with more money who just wanted income and I didn't want to ride the volatility, I might buy STRC because I think it has the best risk profile in terms of what you get as a return compared to anything else out there. I freaking love STRC. Actually, I might buy SATA now that I'm thinking about it, but those would be the two that I would buy. So I like the product for a specific group of people that already exists. That doesn't mean I'm not a Bitcoiner in my opinion, but according to some people, this just isn't good enough. And honestly, this is my humble opinion with the Bitcoin community right now. What are we even doing here? How are we focusing our energy in this bear market? Don't you think it's a bit ridiculous? If you are a Bitcoiner and you want everybody to own Bitcoin, would you advocate for somebody who runs a business with just themselves to stack Bitcoin? I would hope so. They started a company. You should want them to buy Bitcoin. But what if they have a second stakeholder in the company? What if they hired 5 people and now the corporation includes 6 people? Would you still want them to be buying Bitcoin if they were consenting? How about 10 people? What about 50 people? What about 100? What if they get to 500 employees and they get listed on the NASDAQ? Does buying Bitcoin and having it being held by a custodian, does it magically become a bad thing after 500 people? Does it magically become a bad thing after 1,000 people or 50,000 people? Why are we in the Bitcoin community attacking the companies that are buying Bitcoin, but not attacking the companies that are not buying Bitcoin? Why are we focusing our negative energy on people who are bringing fiat capital into the Bitcoin network? What are we doing here? In my opinion, the world has totally gone mad right now. I am totally shocked at some of the lunatic schizo takes that I've seen. I honestly don't think that anything would have topped last year when I was starting to make YouTube videos literally a little over a year ago. It was a little over a year ago where I was making a YouTube video with an orange tie and I was getting complaints that I was a Wall Street or a deep state plant. If you want to know the level of insanity, the level of schizo, cynicism, delusion from some people in the Bitcoin community, thinking that I am a Wall Street plant, it's just hilarious. People cannot conceptualize that some people can think differently than them. And then, of course, all of the, how are you being compensated? All of these things get asked of me as if I'm some bad actor. I think it's hilarious. I was literally managing a Target store. I would come home, put on an orange tie, and make a video about, MSTR or Bitcoin or something. And I'm a Wall Street plant. I'm a pleb from the middle of nowhere in Iowa working in retail, and I am a Wall Street plant. If you want to know if you're on the right side of history, you can side with me, who's always stood on none of my credentials. Have I ever flexed my credentials to you guys? Never flex my credentials, always let my arguments do the talking, always let my perception of reality do the talking. Or do you think you should go believe the schizo lunatics who think that I'm a Wall Street plant? Ultimately, it's just a difference of what is the win condition of Bitcoin. People have different views on what it means for Bitcoin to win. For me, this idea of perhaps the $300 trillion debt market, some of it moving into Bitcoin, Bitcoin goes to $1 million. To me, stories matter. Narrative matters. The network effects, the positive network effects from $1 million Bitcoin, that would matter big time. I think people would start to take Bitcoin more seriously. If you want Bitcoin to win, win and throw it in their face. So why are we eating our young about these purity tests? I just think it's total nonsense. That said, a lot of people's brains are just utterly cooked right now. I think that they are allergic to nuance. They don't know how to have classic reading comprehension or critical thinking. And I'm still utterly convinced that Bitcoin is going to $1 million, MSTR 2000 and beyond over the long run, because I do think the money printer will continue to print, and STRC is a function of Tyr's law unfolding over time. The good money will drive out the bad money, and I think the Trojan horse is behind the enemy gate. I don't think Bitcoin's going to be stopped. The clock continues to tick, and the beautiful thing is that if you disagree with me, you still get to interact with the Bitcoin network in any way you see fit. So if you are an emotional crybaby who doesn't like the way other people are using Bitcoin, I'm sorry. There's nothing you can do about it unless you admit that you are a Marxist redistributionist. So go ahead and continue to whine about your personal preferences. Bitcoin is going to win regardless of your feelings on how it's going to win. My name is Adam Livingston. I am the Bitcoin Wizard. Thank you so much for tuning in to another transmission of the Orange Gospel of Bitcoin. Have a very terrific day, everybody. Do not party too hard. Class dismissed. We all want to own more Bitcoin, but most of us aren't sitting on piles of idle cash, and that is where Horizon comes in. Horizon lets homeowners convert a portion of their home equity into Bitcoin so they can diversify into an asset with stronger long-term growth potential. What makes Horizon stand out is its flexibility. There are no monthly payments, no interest charges, and no fixed term limit. You stay in your home, you stay in control, and the coin that you buy is fully yours to hold in custody however you choose. That means no margin calls, no forced selling, and no scenario where Bitcoin volatility puts your home at risk. If you believe that Bitcoin will outperform your home's growth over the long term, Horizon gives you a way to act on it using capital that you already have. Horizon has already helped hundreds of homeowners put their equity to work in Bitcoin, and they'd love to help you as well. Visit joinhorizon.com using this QR code or at the link in the video description. You can see how it works and estimate how much Bitcoin you could unlock in just 90 seconds. Transform your home equity into Bitcoin today with Horizon.
Good morning, Las Vegas, and thank you all for joining us in this early session. My name is Mason Ford, and I'm the Director of Bitcoin Strategy at Melius. I'm also part of the True North podcast / platform. Today, I'm going to be hosting this panel on sentiment, institutional sentiment, and we have three amazing panelists with me here today. We have Dylan Leclerc, the Director of Bitcoin Strategy at Metaplanet in Japan, the third largest holder of Bitcoin in the world currently. We have Guy Gomes, founder and CEO of Orange BTC, the largest Bitcoin treasury in all of Latin America and Brazil. And we have Nick Payton, a VP of marketing at BitGo. BitGo obviously known for institutional custody and infrastructure. And they recently IPO'd, which is really exciting to see. So let's hop into it. Obviously, right now we are in a bear market, and we're, price-wise in a very different regime from 1 year ago. Dylan, let's start off with you. How would you say the sentiment on the institutional or corporate side has changed from, let's say, 1 year ago today?
Yeah, I think Bitcoin's been very much legitimized in the last 2 years. I think it's good that the Trump narrative has kind of faded by the wayside, as that was the driving force and narrative for Bitcoin specifically in 2025. I think Bitcoin responding to the Iran war, in general, when markets can't go up higher on good news or when they don't go down lower on bad news, I think that's kind of when you look for inflection points. And so, just last week or 2 weeks ago, there was back-to-back headlines a half hour apart. Morgan Stanley launches an ETF, and then Iran's military toll booth is accepting Bitcoin. And so I think that kind of covers like the broad, this is a broad movement. This is not just suits, on stage talking about fixed income. This is not just, currency in the developing world. This is happening kind of, across the ecosystem in many different ways. And so from the institutional standpoint, I think it's pretty good. We're all up here as like diehard Bitcoiners with 100% of our balance sheet in Bitcoin or close to it. But most institutions dip their toe in and take 4 to 6 quarters to really get comfortable with an allocation and add. So I think the sentiment's pretty good. It's not. It would obviously be better if Bitcoin was raging to new highs, but yeah, I think we've hit an inflection point, and I would wager the bottom's in.
Amazing. Guy?
I think, first of all, good morning, everyone. Pleasure to be here. And I would echo what Dylan just said. I think it is much slower, right? Institutions, they move at a much slower pace, but they don't change their minds as fast as retail, right? And we've seen Bitcoin going all the way from 126 down to 60K. And many people within the Bitcoin community, folks who have been around for many, many years, were even questioning. I think it was the first time we saw Bitcoin going to like an important drawdown while gold was at all-time highs and stocks were at all-time highs. And many Bitcoiners were questioning what's going on, right? And I think the sentiment on the retail spectrum is much more volatile than when we're talking about institutions. And we continue to see many positive and bullish news. So we mentioned about Morgan Stanley ETF. We had Citibank announcing that they will be custodying Bitcoin as one of their services. Bank of New York Mellon, the largest custodian, is already doing so and will increase their services. We've seen Charles Schwab announcing that they'll be offering spot Bitcoin trading, and they're now educating the masses. So when you talk about institutions, it's a much lower pace, but way less volatile. So if anything, I think the price action gave them even more appetite because I just talk about Morgan Stanley. What a timing for their launch, right? They launched in the ETF and Bitcoin moved maybe 5-8% in a single week. So it's a great opportunity to call your clients and pitch a new product. So I think the drawdown is not impacting institutions as much, and the sentiment is much more volatile on the retail spectrum.
Yeah, you guys kind of said it. I'd love to echo that, though. Obviously, BitGo focuses on institutions, and so we can tell you that the pipeline of institutional banks, nation states coming in, looking to do unique strategies, whether that's bonds like Stretch or derivative markets, et cetera. They're coming in with both hands. They're just slow. I was talking to someone who heads up a crypto desk at a very large bank. I'll leave them anonymous for now, but they were talking about Stretch, for example, and what's going to take for them to start coming in size for bonds or Bitcoin or recommending it to their clients. And a lot of times they just kind of want to see, first of all, they want the regulatory thing to work itself out, genius clarity, of course. But they're starting to get really interested at these price points, like Guy said. But they continue to leg in tiers or tranches, and they're nowhere close to the size they want to be at. So really, really excited. And then retail, we said for years that retail was front-running the banks, and I think we were pretty right in that sense. But now that the banks and institutions are coming in, you're starting to see volatility depress a little bit, which is a good thing. The market's maturing. And so I'm really excited for the next 2 to 3 years and what's going to bring for the market in general. So
amazing. I don't know about you guys, but I'm on Twitter too much. I know Dylan is, and there's a lot of fear and a lot of uncertainty and doubt going on. When you're looking at maybe what's going on online or what's going on with retail versus on the institutional side, do you think that there's a fundamental misalignment? And if so, what are the real fundamentals in the Bitcoin market right now that back up a bullish price perspective or a bearish price perspective?
Yeah, I guess I'll start. I think it's just flows is the simplest metric to look at, and you can there's a lot of on-chain data. You can just look at Stretch, right? So if you're an analyst in the Bitcoin space and you're not watching Stretch right now, I think you're missing a lot. I like to look at just kind of like an on-chain cost basis of the hot money, like fast money, versus average on-chain cost basis of every Bitcoiner, and so we kind of almost nicked it. It was like $55,000, $56,000 per coin. The short-term kind of hot money cost basis is like $80,000 a coin. And so, I think that's a logical place for Bitcoin to kind of retest, chop around a bit. If it's a bull market, we'll confirm and we'll trend above that. In terms of what I'm watching as well, like I think right now you're seeing in perpetual futures, traders are bearish and are fading the move, right? So funding's negative, right? So you can buy one Bitcoin or you can get paid right now to long, Bitcoin futures. And I'm not pitching people to buy Bitcoin futures. I'm just saying that, when Bitcoin's in a bull market, people are demanding, to get long at 30, 40, or, 20, 30, 40%. Right now it's, slightly negative, right? So I think that's kind of showing, it looks pretty similar to me to the end of the 2022 bear market, aside from the fact that, like you pointed out, it was sort of Bitcoin unique. Before the Iran wars, stocks at all-time highs, gold's at all-time highs, Bitcoin's down 50%. What's going on? And so, I also think it's a little bit unfair to say, well, okay, the Iran war started, Bitcoin's outperforming against the S&P. Well, it's like, yeah, we already drew down 50%. But yeah, it seems to me that the wreckage and most of the sellers and the forced, puking by retail or leveraged, degens has kind of come and went. And now it's if you made it through that without, wavering, you're rock solid. So yeah, I kind of forgot the question a little bit, but, I'll turn it to Guy.
Okay, I guess we're still talking about this early in the morning, first panel, folks. Give us a break here a little bit. So we're talking about the next 12 months and what could change a little bit in terms of Bitcoin and in terms of sentiment. And look, this might sound silly, but it's another 12 months, right? And for a new asset class that is around 17 years old, it really matters. It matters because the ETF from BlackRock will be 1 further year long, which means that most managers out there who are financial advisors helping their underlying clients will have more confidence, right? The Morgan Stanley product will be 1 year old. And when you're talking about very new products, Stretch, we just mentioned, will be kind of almost 2 years from 12 months from now. So every single month matters, right? Bitcoin is still a very early stage innovation that many people don't understand. All of these new products, the ETFs, Bitcoin-backed loans, Stretch, Bitcoin treasury companies, they're still quite new. So I think what happens with 12 months is more people get comfortable. Bitcoin will be moving along, block after block. These new products will have more track record, which makes it easier for folks to allocate. These banks and institutions that have been moving since the Trump administration with new regulation coming out will be more comfortable. So I think it really matters. I think there's a lot of triggers that, like 12 months for Bitcoin is a lot of time for anyone in this stage that has been working on this industry. 1 year, in my view, counts for about 7. So it really matters. And I think there's a lot of new products, a new Stretch coming along, new solutions around it that could really move the sentiment and get more flows coming into the asset class.
Yeah, building the bear. We've been saying that for 4 or 5 years now, and it couldn't be more true. I'd say what I'm really excited about, like Guy said earlier, which was Schwab just now starting to introduce this to their clients and arming their sales team to go out and sell this. That's what's going to help drive retail sentiment, in my opinion, and price action. Obviously, more and more bonds coming online. We talk about Stretch, but I think more are going to come behind that, obviously. And one of the bigger things that I think, or I'm excited about is, certain countries, obviously we have macroeconomic situations, war going on. Certain countries don't want to use USD. Certain countries don't want to use yuan, and so on and so on. And so, and then you look at all these hacks going on some of these centralized exchanges or, et cetera. So what does that mean? If no one can trust anyone else, what options do we have to be the global settlement network around the world? In my opinion, it's Bitcoin. That's obviously good at the nation state level, institutional level, but then of course retail is involved there. So like Guy said, these next 12 months are going to be really big, particularly the next 24, I would say. And so the next bull couldn't come soon enough, but I feel like we've bottomed. I feel confident in saying that as well, to echo Dylan's sentiment. And so lots going on in the next few months here.
If I could just, add one thing, I think the geopolitical point is very, is very, very important. The war started in the Middle East, and this has been a theme for, decades. But look what happened. All the waterways are closed. The airports are closed. If you have, 10 tons of gold in a vault somewhere in the UAE, and you're trying to get out, what do you do, right? And so at the same time, Bitcoin's this permissionless layer. Simultaneously, you're seeing, USDT, Tether, stablecoins are getting frozen in the conflict, right? So this is like, and at the same time, the Trump administration is championing Bitcoin. The sworn enemies of the Trump administration, the IRGC, are also using Bitcoin, right? So there was this kind of trope for a while, Bitcoin's for enemies, and it's true. Another thing I would like to kind of circle back to is we're talking about products and Morgan Stanley's ETF and treasury companies and Stretch, and if you're a Bitcoiner from 6 years ago and you just time traveled into the present day, you're like, what are they all talking about? Why does this matter? And something that I didn't understand 6 years ago is Bitcoin winning doesn't look like it goes to infinite dollars and currencies collapse and Bitcoin wins. Bitcoin wins means you have to meet the world and the money in the world where they are. And so the reality is 99% of the money in the world can't buy Bitcoin. They can't buy Bitcoin ETFs. They can't buy spot. They can't self-custody. There's $10 trillion of private credit that can only buy private credit. There's $100 billion of convertible bonds that can only buy convertible bonds, or they can only buy common equity. And so if you're a Bitcoin bull and you think that this is the future we're going to, ultimately it's going to look like Bitcoin packaged and sliced into a bunch of different formats and styles to meet people where they are. Because when you talk to an institutional allocator, they manage $1 billion portfolio. They're a Bitcoin bull. They're like, Dylan, we like your company because I'm a Bitcoin bull, but I can't buy Bitcoin. My day job, I manage companies in the Japanese stock market, right? And so I think there's a lot of capital in the world, and Bitcoiners, the ecosystem, we're meeting them. We're meeting them where they are.
And that's actually another point where there's so much capital in the world. I don't think anyone here would bet against more liquidity coming into the market in the next 12 to 24 months and beyond. I don't think they have a choice. And so you add that to the building in the bear, the additional products and services and settlement layers coming online. It's very, very exciting here coming up shortly.
Dylan, your Metaplan is obviously in Japan, and Guy, Orange BTC is in Brazil. So you guys have a global perspective. Can you talk a little bit about what's happening in your own region and maybe how that might be differing from the U.S.?
Yeah, sure, and I'll keep it concise, or try to. But Japan's at an interesting inflection point where the government is recognizing this is important. The stablecoin regulation is improving. Bitcoin's going to become a regulated financial asset. Right now, it's in this gray area. At the same time, there is a little bit of friction or pushback from the legacy incumbents. I think Metaplanet, frankly, we grew so fast, and it was a little bit unsettling. And so we're positively engaged with the regulators and everybody that matters on the ground, and explaining why Bitcoin's important for the future of Japan and important for the future of capital in the world, and pointing to the U.S. for that. So things are going really, really well, and I think a year or two down the line, we're going to see a lot more. It's like we're kind of in the 2023 moment for regulatory, stuff in Japan, right? So in the U.S., 2024, you had, the accounting change, ETFs, kind of a flurry of positive events, and so I think we're kind of setting the stage for the equivalent of that in Japan.
Yeah, amazing. A lot Brazil as well. Brazil is in an interest point as well. So on one way, we have a weak currency, right? We have the BRL, which is not a hard money at all. So Brazilians have dealt with inflation and currency devaluation for many, many, many years. And on one end, Bitcoin is a little bit easier to grasp. And we've seen meaningful adoption on the retail spectrum of the country, and not only on Bitcoin, but also stable coins. There's a lot of research papers being published showing that Brazil is among the highest adoption countries around the world. On the other end, when you go to the institutional aspect, we are years behind. We have regulation, but it's not even regulation itself the main problem. The regulation is still evolving. It's a very new concept in Brazil as worldwide, but local institution allocators, they have almost zero exposure to Bitcoin, right? You have to educate what it means. There's a lot of concerns about it. So from that perspective, I think we're back in around 2020 when the strategy first launched in the US market and was the first public company holding Bitcoin. So there's a lot of work there, and we're happily doing so. And a little bit of our mission as a company is to help to drive Bitcoin adoption in Brazil, because the country that needs the most, and Bitcoin comes to solve a lot of the problems we have right there.
Yeah, and just to add to that, obviously I focus mostly on North America, but BitGo is a global company. And so one of the interesting things that I've found is that obviously the bigger retail opportunities in some of these international markets. Some of you've probably heard about Bitcoin has sort of two adoption curves. One is the store of value adoption curve, and then the other is the medium of exchange. The medium of exchange sort of would lag that in North America, is the sentiment. It's interesting that in the international regions, it seems to be they're going together. They don't only want to buy Bitcoin to save in their purchasing power, but they also need to use it to go in and out of whether it be stable coins or their local currency to pay bills or whatever it is. And so I actually think the medium of exchange adoption curve is going to start and really take off in these international regions, probably more than even in North America. I mean, that's just a guess in my opinion, but the trend seems to be pointing that way, which is really exciting for Latin America and APAC, who I think are leading the pack in both of those compared to other regions. So, yeah.
Amazing. So we only have a few minutes left. Last question. What is one thing the audience should be paying attention to that most people aren't in this space?
I'll take second on that one.
I'm just going to harken back to what I said earlier, which is I think paying close attention to what's going on in the global macroeconomic situation with the global settlement layers. All it's going to take is for one or two of, maybe just, I'll leave it at one of these G7 nations to just decide, you know what, no more petrodollar, no more whatever. Bitcoin is now the settlement layer. I think Guy or Dylan had mentioned that the Strait of Hormuz has already announced that. But I think they're not just accepting Bitcoin, they're accepting other things. But once a G7 nation fully embraces Bitcoin as the only settlement layer, because it's the only decentralized monetary exchange that anyone can trust with no central party, to me, that is the most exciting thing for us to pay attention to, because everything downstream from there will be impacted positively. Like literally, talk about Omega candles, that's where that comes from, when and if that happens. So that's what I would be paying attention to.
Agree on that front. I guess, not to be I don't think there's much value in being like a Fed watcher or trying to read the tea leaves, but I think the new Fed chair is an important step in the administration's stated goals, and I think the fiscal policy and monetary policy in tandem over the next 18 months will be very, very positive for debasement like trades like Bitcoin and gold.
Guy?
I agree with both points. I'll bring something else. I think the strength of the community, it still surprises me. Being in this space for about 10, 11 years at this point, and like the size of this conference, the many conferences around the globe, the amount of great talent building around Bitcoin, new solutions. We've seen so many innovation around this space, and there's a lot of bears out there, and they're betting that this group of people, these neo minds, the drive of these folks will not eventually win. And I'm pretty bullish that the power of the community will continue to take Bitcoin to different places and eventually will become a world reserve asset as it should.
Amazing. That's all the time that we have. Can you please give a round of applause to the panel?
Thank you. Thanks, Mason.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin Corporation, is so high quality.
Bitcoin for corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors, this is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for Corporations symposiums.
We are pushing the forefront of treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
Okay, all right, cool. Well, let's start with just some brief introductions. Amanda, tell us a little bit about yourself.
Hi, everyone. My name is Amanda Fabiano. I'm the COO of Nakamoto.
Hey, everyone. Oh, wow. You got some cheers already.
Yeah.
Thank you.
Hey,
I like that.
Hey, everyone. I'm Jeremy Allman. I'm the CEO of Paystand. We are the largest business payment network built on the Bitcoin blockchain. 1 million customers, 20 billion in volume, 2% of all the US economy built on the Bitcoin blockchain. Woo!
Hi, everybody. I'm Johnny. I am the co-founder of OnNexus. We build on-chain solutions to allow treasury companies, institutions, Bitcoin holders to earn a yield on their Bitcoin self-custodially on-chain.
All right. Thank you. Johnny also has the coolest name in the world, Johnny Himalaya. It's amazing.
Cheers.
We're going to get to know him a little bit more. All right, we are talking about Bitcoin treasuries over the next decade. So I want to start just by having our panelists paint a picture or cast a vision of what the next 10 years look like. So let's fast forward. We're at 2036. What does our industry look like? What are some things that people maybe aren't anticipating that you're seeing as an operator behind the scenes?
That's a really interesting question because I feel like every 4 years in Bitcoin seems like 35 years. So hard to think about a 10-year time frame. We've just seen the market continue to evolve over the years, and I think we'll still continue to see that. I think we're going to see more of a convergence of traditional finance and Bitcoin worlds. I think from a treasury perspective, you'll see more companies going towards an operational model or focusing on the capital market optimization. It's I think when people think about Bitcoin in the future, they always think about a price target, but I always think about what are the businesses that are going to exist in the future. And I would hope that a lot of the companies that are being built in this era will continue on into the next decade.
Yeah, I think it's true. You're going to have more and more increasing Bitcoin business adoption. It's crazy to me that this treasury conversation has actually crossed the chasm. A few years ago, the idea that corporations were using as treasury would be a crazy notion. Now I'd say we already have momentum there. So I want to talk about what's past that, which is Bitcoin being used in the real world for businesses to fuel their operations. Because Bitcoin, and one way to look at treasury is it's digital capital, but capital in general is just fuel for your business. If you simply have great capital in your business and your business doesn't do anything, it's not a very good business. So what I really want to plant in your guys' minds is actually Bitcoin as digital capital becomes the fuel for a more efficient business. Businesses that actually can run cheaper because they have lower cost of capital, businesses that can move their money faster and quicker, so that makes them more competitive, and businesses that don't need to use the traditional financial system, which means that they're going to lower their cost, that they can put that back into more jobs, more business creation, and more GDP growth, which is good for our economy, and it's ultimately good for the world, and that all starts with businesses using Bitcoin.
Johnny?
Yeah, I'd like to piggyback a little bit off of what Jeremy said as well. I think if we go 10 years down the road, I think the dreamer's point of view would be that if hyper-Bitcoinization truly happens, I think the concept of a treasury company will probably be over because every company will just have Bitcoin, as you were saying, operationally. So this whole strategy of, being a treasury company to put Bitcoin on your balance sheet purely for treasury will be a moot point because people will have Bitcoin, companies will have Bitcoin because they use it in their day-to-day operations, they're getting yield from it, etc.
Yeah, I think that's a great point. I think about this with Bitcoin meetups too. Like Bitcoin meetups are a thing right now because we're trying to propel adoption forward. But in 10 years, I mean, there's no like dollar meetups, right? So I think it's kind of along similar lines. We're just going to see that Bitcoin is just embedded in everything. So it becomes a little bit redundant. So what sort of headwinds do we anticipate over the next 10 years? So Bitcoin's experience and pushback from whether it's regulators or even like what we're seeing with topics or MSCI, there's probably some cultural headwinds, some narrative work, some marketing work that we need to do. But what do you see as potentially problematic that maybe people in this room aren't anticipating over the next 10 years?
I think that regulatory will always be an up and down. I think that there will be different things that are built that we might see traditional industries push back on because it might affect their portion of how they make money. So I think that will consistently be something that will be coming around the corner at every market cycle. I think growth and adoption and just like the storyline of Bitcoin, just explaining that, we probably, to your point, could do a better job. Bitcoin is a lot of different things to different people. And so you can explain Bitcoin differently to whatever crowd you're talking to. I think that's one of the most incredible things about it. It can be whatever you want. It could be your savings account. It could be your spendings account. It could be something that businesses uses. It could be something that businesses hoard. So I think how we explain Bitcoin, and there is no Bitcoin marketing department. So how we explain it, I think, is really interesting because depending on who the clientele is, how they adopt it can be very different. So I used to work at Fidelity, and how you explain Bitcoin to Fidelity was very different than how I explained Bitcoin to my mom. And so I think us all doing our part there would be super helpful. But yeah, I think regulation is something that we're always going to have to think about around the corner, and that just goes with the wind of where things are going.
Yeah, Jeremy, what kind of headwinds do you anticipate?
Yeah, I think one that's like less obvious right now is the stablecoin adoption around the world is growing faster than any financial infrastructure in the world. Stablecoins in general have more volume in certain places in the world than Visa and MasterCard combined. And so when you talk to the clientele that we do, which is generally large corporations, we service the largest Fortune 500, we service the largest banks, we service the largest portions of the economy. And what you find is, unfortunately, their conversation is not starting off with, how do I Bitcoin? Their conversation is starting off with, how do I stablecoin? Now, here's the problem with that. The vast majority of stablecoin volume is not sitting on the Bitcoin blockchain. And so what it's really doing is making more TradFi, traditional financial infrastructure, more efficient, but it's doing nothing beyond that. And so the question for us is, how do you actually marry the two, where stablecoin maybe is the bridge to Bitcoin, but on its current path, stablecoin volume is actually sitting outside of Bitcoin, and we don't think that's a good thing, because Bitcoin is freedom money, it's digital access for people around the world, it's infrastructure that lowers the cost for global remittance around the world, and Bitcoin is the single most important invention in our lifetime. And so it's incumbent for us to be able to create really good use cases. And so what we want to do is say, take all of that energy and infrastructure that's going on stablecoins, but is really just perpetuating the traditional dollar, and put that on Bitcoin that has no owner, no individual that can hold you back, and that can be used anywhere in the world, instantaneously, automatically, and globally. And so we want to marry those two things, because if we don't, we're going to be in a world where stablecoin eats Bitcoin, and it's not the reason most of us got involved in Bitcoin in the first place.
Very interesting. Yeah.
Yep. I would say in terms of headwinds, we have a small bit of like non-identity crisis, but different Bitcoin communities view what hyper-Bitcoinization looks like in different ways. So if you go way back to the old school, it was all about like, no counterparties. You don't need to trust the bank to be able to send value from one person to another. And, that philosophy still exists in certain communities. But then, in the new age of hyper-Bitcoinization, you obviously have institutional involvement. So, where the banks are actually getting involved in the Bitcoin economy. So you can look at it like two different ways. Do we look at the banks getting involved as friction, or do we welcome it? And Bitcoin is a disruptive technology, and like any disruptive technology, there's always incumbents who end up, being faded out. Like the internet music streaming got rid of the, the record industry in a large way. And does hyper Bitcoinization get rid of an industry, or does the industry take it on board and try to gel with it? So I would say it really depends on what your view of hyper Bitcoinization is. Is it a completely sovereign, self-custodial financial system that doesn't need any banks or institutions, or is it a new hard asset that the whole financial system can benefit from? You know, and I think once you answer that question, you can kind of decide on what the headwinds are.
Well, Amanda, I feel like you.
I think that one thing that's kind of interesting, we were just on a panel with Kraken, and we were asking Kraken about how, you know, they're working with traditional banks, and Gurpreet, who is the head of institutional there, said something that really stuck with me. He said, it's easier for us to learn traditional finance than it is for traditional finance to learn Bitcoin. And so right now, I think you have this really interesting time where we can see some of these companies that have built over, you know, the last decade really come out on the other side and maybe take a little bit more ownership of the where finance is going compared to the traditional banks. I don't know. I guess it's a race that we'll watch over the next decade.
Definitely. And Kraken is coming up next also. So just a quick commercial. And also, I just want to reset the room a little bit. See a lot of people standing in the back. Sorry, putting my MC hat on real quick. If there's an empty seat next to you, will you do me a favor and scoot in so some of these people can get seated? It is a little bit chaotic in here. We love to see it. Welcome. We're glad you're here. And we're going to keep going here with this conversation. Okay, so over the next 10 years, what is it going to take for some of these legacy companies who are sitting on millions or billions of dollars in cash to wake up to what's happening? I mean, it feels like we're almost at a point where it's like a fiduciary obligation almost to be paying attention to what's happening in the Bitcoin space, and ignoring it is going to potentially have some consequences. But what do you think is going to happen in order for some of these large companies to capitulate?
I mean, we do see some large companies with Bitcoin on balance sheet that have them for a while. So Fidelity has been mining Bitcoin since 2013. They hold a large Bitcoin stack long before Bitcoin treasuries was a thing. You have Tesla that has a lot of Bitcoin on balance sheet. I think you're right. It is, you know, at some point an obligation to say, hey, what is this thing and does it make sense for us? But every company has their own risk framework and what makes sense for them. This goes back to the educational piece and just where and how we think about how Bitcoin exists in the world. I think there's more Bitcoin on balance sheet than I would have expected at this point, which is kind of surprising and nice. But I do think that over time, as people learn more about it, that's great. But we love Bitcoin, obviously. But when you think about it as an asset, it is extremely volatile. So as a CFO or a public company, you do have to think about the risk of holding that. The volatility of Bitcoin is difficult to explain versus holding cash. So I think as we see these volatile waves kind of get compressed, maybe there will be more and more adoption in the future.
Yeah, I think one of the hard parts, though, you know, in my journey is oftentimes you start off with Bitcoin, and the farther you get, you want to like orange pill people, and you want to tell them all about the economic model and the financial model, and people kind of just like their eyes glaze back. And what I found over time is the best way is actually just to have people use it and touch it in different experiences. And so one of the things, you know, Saylor's done such an incredible job at educating the market around Treasury. We went a different route. We actually, you know, we've been in business. We're probably the first Bitcoin or second Bitcoin payment processor in the world. But over time, what we learned is we talk less and less about Bitcoin. We service most of the largest Fortune 500 companies. The way we talk about it is actually just like, hey, don't you think your money and your capital should move at the speed of light at zero cost and completely automatically and agentically? And then let's figure out ways for your business to actually engage so you can get Bitcoin Treasury, but you don't need to go get the board approval, because Bitcoin Treasury on one dimension might need the board approval, especially if you're a public company. So for example, what we have is a corporate card. The corporate card, you just spend in dollars in fiat like you do in your normal corporate expense when you bought your airplane ticket here or whatever, but then the rewards points go back into the corporate balance sheet instead of just some Amex points that I have no fucking clue what it does. So that all of a sudden gets it on the balance sheet, but in a completely Trojan horse way. The CFO has now got it, has to determine what do I do with it. Turns out most of the time, because they effectively got it for free, they keep it on the balance sheet, and then that becomes the entry point for them to be able to start increasing their treasury position. So the point is, Bitcoin's actually being adopted more and more in both the real world and in the business landscape, but maybe not straight head on.
All right.
Yeah, in terms of like what we need to achieve like greater adoption, et cetera. I think as the products become more mature, whether that's a software product or a financial product, like we have a lot of innovation obviously now with like with Stretch and the different things that Strategy are doing. And as this marketplace matures and as the volatility, as Amanda mentioned, that right now Bitcoin is still seen as a very volatile asset, but over time the consensus is that it will become less and less volatile. So then it's seen as less risky in order to put Bitcoin on your balance sheet. And once that volatility is dampened a little bit, you'll start to see more and more innovative products. And this is how you can use your Bitcoin now. If there's that demand that, all right, it's not as volatile anymore, I'm willing to hold it. Now what can I do with it? Can I make payments? Can I earn a yield? Can I market make? Can I borrow? Can I lend? And once all of these products come on board, I think there will be like a snowball effect that everyone's like, oh, you can do all of this with Bitcoin?
Yep.
Let's go for it.
Definitely. I love that. Okay, well, we can't talk about the next 10 years without talking about AI. I know it's very buzzwordy. We had a panel earlier about AI, but I do want to talk about what you're seeing that's already emerging. I mean, we already live in a different world today than even 6 months ago, right? I don't know about you, but I'm at a point where if like Claude is down, I'm like a little bit panicked. I'm like, well, what do I do now? I forget how to work in the old sense. But so far, it doesn't seem like AI is coming for jobs or some of the scary narratives that have been out there. But how, as operators, as visionaries, how do you see AI continuing to be integrated into the Bitcoin corporate space, if at all?
Yeah, I think whenever there is something new like AI that comes out, the real scary thing that the narrative happens is every job is going away. The same thing happened with Bitcoin mining, right? When Bitcoin mining became more and more institutionalized, jobs are going away, mining is eating all the grid. But what ends up happening is that there's different industries that get created and how people work end up being different. So I think that's what we'll see for us, like maybe there would be agentic AI with Bitcoin being like the currency. That could potentially be something that I think we'll see. I think we'll see more people using AI for being more efficient at their job, not necessarily taking over the job. When you still have to edit anything that exists today, and maybe that will adjust over time, but we still need people's brains to make sense of things. AI, I think, just makes you a little bit more efficient at this point.
Definitely.
Man, I feel like I'm being like the spicy one right now with the opposite takes. So our headquarters is in Silicon Valley, and I would say most Silicon Valley CEOs I know, they radically think it's going to transform jobs. I think the two most important changes in our lifetime, at least in the last 100 years, if not longer, is the transformation of Bitcoin, transformation of money, that's Bitcoin, and the transformation of labor, that's AI. Those two things are changing how society operates. In Silicon Valley, every CEO I know is saying that like 50% of staff is going to change how they do their own business. In our own company, we're not huge, we're 400 employees-ish. I'm thinking about the next stage of our growth. I would normally think about going from, let's say, 400 employees to 4,000 employees. I think we'll go from 400 employees to 500 employees and 5,000 agentic digital employees. Now, that's already happening in our organization. Probably within the next quarter, we will be one digital employee per actual human. That's exponentially growing every single quarter, and we're not the only company that's doing that. That's how fast we're growing and how much leverage we're happening. It's happening in the financial stack with products and services, and it's happening in every part of our operation. Now, here's the key point. How do those digital employees and those agents actually do commerce? Commerce is the fundamental piece of human society. They need a way to be able to do it through digital money. We believe it's extremely important that they do it through digital money that's done through Bitcoin and freedom and open access money. Bitcoin will be the thing that the agents will prefer. And the reality is labor is transforming, and digital money is the perfect transformation around digital labor.
Well said.
Yeah, perfect. Yeah, us being a software company, we've been like on AI since the get